To deliver keynote remarks, Energy Security in the Age of Electricity, please welcome Vice Minister of Climate, Environment, and Energy, Republic of Korea, His Excellency Ho Hyun Lee.
Good morning, everybody. Yeah, it's a great pleasure to me to be here. Yeah. Excellencies, distinguished guests, ladies and gentlemen, it is my great sincere honor to congratulate the Atlantic Council on the 10th anniversary of the Global Energy Forum. And I deeply appreciate being invited to this significant occasion. Following the recent regional conflict in the Middle East, a crucial axis for energy security has emerged. This crisis is expected to accelerate energy diversification and the electrification of the overall economy. The rapid growth of advanced industries such as AI data center and semiconductor and the increased electrification of industrial and transportation sectors and the heightened demand for cooling systems have allowed a rapid surge in global electricity demand. At the same time, the electrification era is now unfolding, catalyzed by the rapid acceleration of system integration encompassing a comprehensive scope from power generation and transmission to distribution, storage, consumption, and related industry. This profound transformation demands a structural redesign our existing power system. Major economies, including the United States and Europe, are also facing critical challenges regarding power supply and demand and grid stability. National competitiveness is now measured by how effectively nation can generate, transport, store, and utilize electricity, and how effectively this is linked to local industries and region. The Republic of Korea recognizes electricity as a core strategic asset that dictates our industrial competitiveness and national security and technological prowess. We are pursuing policies to integrate the entire power system with our national new growth strategy. Korea's world-class manufacturing competitiveness in sectors like semiconductor and batteries, along with its IT infrastructure capabilities, will serve as a powerful driving force in preparing for the electrification era. However, the electrification era presents a new challenge that differs fundamentally. The Republic of Korea recognized the electricity as a core strategic asset that indicates our industrial competitiveness, while traditional energy security focused on the stable procurement of fuel sources. Electricity security in this new era hinges on the resilience of the power grids, the capacity of large-scale energy storage systems, cybersecurity, and the stability of the critical mineral supply chains. Just as maritime routes like the Strait of Hormuz served as a choke point for global oil and gas transportation, these elements of power infrastructure are now becoming the new choke points. Accordingly, the Korean government is pursuing the following 5 major strategies to achieve structural innovation in the power system and to ensure electricity security. First, proactive investment in national power grids. We recognize the power grid as essential national infrastructure that underpins national competitiveness, industrial development, and energy transition. We plan to make a systematic and proactive investment in power grid to ensure sustainable economic and social growth across the country. In addition to pursuing a plug-in grid strategy that connects the grid in a timely manner to areas slated for large-scale investment, such as semiconductor and AI data centers, we are developing a power grid expansion roadmap. This roadmap includes methods such as dynamic line rating and non-wire approaches, which utilize the AI technology to optimize transmission capacity and maximize the utilization of the existing power grid. Second, securing flexible resources. Ensuring the robustness and inertia of the power system is paramount to respond effectively to the fluctuating nature of power supply demand driven by changing weather conditions and local demands. To achieve this, we plan to establish gigawatt-scale energy storage system clusters and significantly increase investment in grid stabilization equipment, such as a static synchronous compensator and grid forming inverter. Third, innovation in the electricity market. While the Korean electricity market has traditionally operated as a spot market, reforms are necessary to adequately respond to the fluctuation in power supply and demand in line with the structural changes in power system. The government therefore plans to energize the long-term contract market to secure stable power generation sources and provide incentives for long-term investment. Furthermore, we will establish a flexible market where the investment, trading, and recovery of flexibility resources fluctuation effectively. We also intend to promote the construction of a distributed intelligent power grid based on the principle of local production, local consumption. This will help to reduce our heavy reliance on large-scale transmission network. First, overhaul of the power governance system. The criteria and system of grid management must be redefined in order to resolve the complexities inherent in power system and to respond to various resources being linked to the power grid. The government plans to redesign the grid code to achieve higher standard of power quality and grid stability, while also strengthening the resilience and recoverability of our power infrastructure. Furthermore, we will establish a dedicated power supervisory agency to ensure stability in the power system and guarantee fairness in the market. Fifth, international solidarity. In the electrification era, critical minerals such as copper, lithium, and rare earth elements are indispensable resources for constructing power infrastructure, including transmission line and energy storage system. Furthermore, power equipment like a transformer and inverter are core components of power system operation, with inverters becoming increasingly critical in terms of cybersecurity. Therefore, Korea is strengthening international solidarity to secure the stability of both critical mineral and power equipment supply chains. This involves enhanced partnership for critical mineral and supply chains with allies and partners, while also contributing to the power equipment supply chains based on our world-class manufacturing capabilities in the electrical industry. distinguished guests, Korea is currently at the heart of reforming its power system to achieve both energy transition and energy security. The experience, lessons learned, and technological achievement are accumulated in this process should not remain Korea's alone. We intend to share them willingly with allies and the international community to contribute to building an unshakable global power security framework. The Atlantic Council has served as one of the most crucial platforms for such discussions over the past decade, and we look forward to seeing this conference where government, industry, and academia gather to seek solutions for power security, to continue to develop into an even richer venue for dialogue. Thank you very much.
To chair the next panel on artificial intelligence and the Energy Addition Challenge, please welcome Managing Director and Head of Middle East and North Africa, GCM, Governor and Non-Resident Senior Fellow, Global Energy Center and Middle East Programs, Atlantic Council, Lindsay Merrill Feinberg.
Thank you. Thank you everyone for joining us here today. I'm very excited to share the stage with such esteemed and inspiring leadership at the nexus of energy and tech and AI. So with that, we will kick it off. I am here with Her Excellency Mariam Al-Maheri, Vice Chair and Managing Director of 2.0. Bob Blue, Chair, President, and Chief Executive Officer, Dominion Energy. Gardner Bulmay, Chief Sustainability Officer at Nscale, and Morten Virod, President and Chief Executive Officer of ABB. The need to upgrade and expand the power system to meet the modern energy demand is not a new phenomenon. Electrification and industrial revitalization are among the key factors that are driving a surging new wave of energy demand. The addition of significant data center capacity to power artificial intelligence has made the problem more acute, but at the same time could offer opportunities to supercharge the build-out of energy infrastructure. Today, I'm joined by our group of panelists and experts to discuss the impact that AI and data centers is having on energy systems, as well as how energy systems are impacting the development of AI. So to set the stage, I think I'm going to ask some of our experts to help us define a baseline. How significant is the AI-driven energy demand challenge? Are we underestimating or overestimating the scale of electricity demand that AI will create over the next decade? Given the latest in geopolitics and energy disruption over the last couple months, what do you think is the single biggest misconception people have about power demand? And Bob, I'm going to start with you. Is this misconception exacerbated by AI?
Those are easy questions to answer. First of all, a little bit about Dominion Energy. We're headquartered in Richmond, Virginia, 90 miles down the road from here or so. We're an electric and gas utility. We serve a little over 4 million customers, 2.8 electric customers in Virginia, North Carolina, and then the remainder gas and electric customers in South Carolina, and operate a merchant nuclear plant in Millstone, Connecticut. But for purposes of this panel, I think what maybe is most relevant about us is we serve what is called Data Center Alley, not too far from here. You may have seen it if you flew into Dulles. You would have seen that, and you would have seen a solar project that we have under construction there. In our Virginia utility, about 28% of the electricity that we sell today is to data centers. To give you a sense of the scale that we have experienced in Virginia, and there's no evidence of that slowing down. Demand for electricity writ large is being driven, as you mentioned in the open, not just by large load, but also by building electrification, vehicle electrification. And so what it adds up to is a demand that we haven't seen since the years following World War II, sort of the original electrification of the United States. it almost to me doesn't matter whether the answer is the projection could be understated or overstated. It's a lot. I think that we're going to see a lot of demand growth. Even if it's overstated, we're still going to see a lot of demand growth. In our area that we serve with electric transmission, our top 22 peak demand days have occurred in the last year and a half. So that demand is here, it's real, and it's happening. It presents an incredible opportunities for us, for our customers. As we modernize the grid, we're going to provide better service to our customers, and we'll be able to talk. So there are a lot of misconceptions, I think, about the effect of data center demand. We'll get an opportunity to talk more about. But what I would say is there is a lot of demand coming at us. Whether the projections are overstated or understated, I think almost doesn't matter. And that presents a lot of opportunities for us to serve our customers better. So we're really looking forward to the challenges and the opportunities.
Excellent. Thank you. So I also agree with that. I think demand is very high. And so Morton, from ABB's perspective, do you agree with this assessment, or what is ABB seeing in terms of demand growth?
Yeah, absolutely. We do see a strong and a rapid increase all over the world here for more power and more electricity. The world continues to go electric, and that's what we do at ABB. We are helping with electrification and automation solutions to enable here this change to happen, because we see so many industries that is by both becoming more efficient, they need to put in more automation, but also to reduce carbon emissions, but also when we're talking about just getting more capacity online in any shape or form, there is where more electrification is needed, and that's where we come in and help. And I think one of the misconceptions you asked about, that I think was good also you said, Bob, was 22 days you had peak days, and I think that maybe the misconception around the electricity grid is that yes, we do need more power, we need more capacity, but as important is to be able to manage those peak days, because in the end, building for the maximum peak that happens, I think it's 80 days in the United States, 80 days a year, we are really running at the maximum. The rest of the time, it's okay. And we have countries in Europe where I know that in general, it runs about 25% capacity on a daily basis. So this is the beautiful power grid. It's like a very advanced neuro system. It is something I've worked in my whole career of kind of trying to make it more reliable and stronger. And I think that's what's fascinating, because that's the investments that needs to happen now over the coming years. I'm very confident that the power grid will deal with this, but it does need more investments. It means more technology. It needs more software so we can do better energy management and be able to deal with those fluctuations, because that is often the biggest challenge we see into the grid. It's not just having a capacity and having the average demand covered. Here it's all about handling the peaks and the maximum.
Excellent. I think also that you mentioned efficiency, Bob mentioned efficiency, and we're going to come back to that in a little bit later in the conversation. But I want to talk a little bit about this demand growth and bring it into the global context. So the build out of data centers is an inherently global trend, and global data center capacity is set to roughly double by 2030, according to some estimates. It seems this capacity will need to be concentrated in specific regions based on energy availability. We hear projections ranging from modest growth to a wholesome transformation of power demand. So against the backdrop of the war in Iran and the closure of the Strait of Hormuz, Your Excellency, how might countries looking to expand energy infrastructure and their data center capabilities capitalize on the opportunity that's projected for these build out?
Thank you, Lindsay, and great to be here with everyone. That question is very close to home because the UAE is actually on a journey to becoming an AI native government by 2027. And I think the whole notion is about building before the demand catches up with you. So building ahead of demand, which is something that we do as a country, and it trickles down to the private sector as well. Now, the misconception is people think that AI is a technology story. It's not. It's an energy story, it's an infrastructure story, and ultimately a competitiveness story. And so we've really been looking at the whole AI economy and looking at data centers not as standalone real estate projects, but as national critical infrastructure platforms. It's the way we looked at ports and airports back in the 60s. So it's really about looking at what's coming ahead and making sure we're ready for what's coming ahead. And that notion is about building ahead of demand, integrating energy with digitization, and about creating investable platforms. So that's how we're looking at it as a country, and that's how I feel countries who are going to be getting the best out of the opportunities that lie ahead will benefit. And the problems or the challenges that lie ahead, and it's more infrastructural problems, cannot be solved by one country or one company. It really comes down to partnerships. So you need the leadership, you need the right policies, and speed is the game.
That seems like a recipe we all need to be focusing on. I hope we can all do that together. And I have to say the preparedness of the UAE, both in terms of energy and defense and AI, is something that we can all aspire to. I think the mic needs to go. We've been playing hot potato. Thank you. So with that too, thank you, Excellency. Morten, I'm going to turn back to you with the backdrop of what Her Excellency said and Bob shared earlier. What does the global supply-demand picture actually look like over the next 5 to 10 years?
Yeah, if you look at, especially in our field, what we're looking at, the electricity demand, and if you look from 2010 to 2019, it was only just 1% a year. So not really any big increase. So, but then something happened from 2019 or 2020 onwards. Since then, we're talking about like 3% on every up to 24. And since then, we are now with predictions from IA more into the 6+% of electricity demand. This is driven, yes, by data center. We have to remember that data center only stands for about 3-4% of the electricity consumption. Steel and cement, two other industries, stands for about 7%, just to give it. By 2030, probably data center will require more than more be into that 7 category as other industries. So yes, it's a clear an addition, but it comes kind of, there are several things that happen at the same time which puts the power grid under stress. It's the aging of infrastructure, as most grids were built, post Second World War, even, in the 60s, 70s, 80s. It's only China who has a very modern power grid because that were most of the investments happening from 2000 till 2025. So it's an aging grid that needs upgrade. Then we have the energy expansion, and it's the coming both from data center, but it comes also from industrial that moves into electrical application, because electrification is cheaper and better in most applications. If we talk about movement of goods, take cranes today. In the old days were driven by hydraulics. Today is electric motion. The move from in transportation, take train from diesel to diesel electric or full electric. All these trends is happening in transportation, in buildings and industry. So that's kind of the backdrop of why we need all this electricity. And then one thing we all talked about earlier was the energy transition, and it has been a lot of renewables made available and put online since 2019. But what we also have to remember is that every solar panel, every wind turbine that has been installed in the world are just used for the additional expansion of energy. So we generate as much electricity today as we did in 2019 from coal and gas and oil. So that kind of change, so it's all the renewables, all the additional capacity we have installed has been used for the energy, the electricity expansion. And that is also what the prediction is for the main years. That's why this industry is growing very fast and kind of because you need to support the data center, but you need also everything else. So therefore, it's a good business to be in, but I also understand kind of that it also puts some challenges ahead of us for dealing with this so that we can have electricity always available and at affordable prices. These are kind of a couple of challenges that we need to deal with now in the coming years.
So lots of energy growth, electrification growth, renewables, finding ways to power each of the logistics, transportation, the industry you talked about. Gardner, can you contextualize this for us when it comes to building a data center? Since that's what we're kind of trying to baseline here. So what does the process for building a data center look like? What are some of the key energy considerations for the data centers? And then after you get us up to speed on that, can you please tell us more about the project that Nscale is working on in West Virginia? Since we've heard about Virginia, let's hear about West Virginia.
Don't forget about West Virginia. It's a very important state, and we're very excited about everything we're doing there with the Monarch Compute Campus. It's 8 gigawatts of behind-the-meter power generation. It's natural gas fired. The first 2 gigawatts come from Caterpillar reciprocating engines that are going to be in enclosures and housed and operate very quietly and efficiently using very proud Appalachian natural gas. So in terms of what's critical, it's all about power now, right? Speed is crucial at scale, and the grid can only give you so much. And in certain places like Norway, Nscale's been able to do an exceptional job of locking up that power at a reasonable price at significant scale, and we're growing a lot there. We're also growing in other operational facilities around Portugal and Europe and Iceland, and of course in West Virginia and also in Texas with our Ward County facility. So I think what makes us different and what's important in this market is the fact that you need to be able to deliver, from ground to cloud. So what I mean by that is you have to own the dirt. You have to be able to build power generation where you need it, like we are in Monarch. You need to build, own, and operate the data center. You need to operate and own the NVIDIA chips. And then you need to lease those to the hyperscalers. You kind of want to be a one-stop shop to the hyperscalers who are, trying to meet the demand of Anthropic and OpenAI and their own internal model resources, which are just growing exponentially. And if you have the ability to do that very rapidly, particularly with the behind-the-meter solution, you really have a leg up over everyone else, because most people just participate in one part of the value chain. They're just power generation, or they're just the data center. They don't own the chip. We really try to put it all together to be, again, the easy button, for lack of a better metaphor, for the hyperscalers who are looking to support the demand growth that they're seeing.
And so speaking about behind the meter, also for grid efficiency, a key component of this is supply chains. So we're going to move into that part of the conversation. Starting power demand from data centers is projected to more than double in the next 2 years and will represent a growing share of total electricity consumption. Can existing infrastructure support AI growth, which I'm kind of hearing no, but let's dive into that. Or are we approaching a fundamental redesign of energy systems? So Morten, from your perspective, what can be optimized within today's system before we start building entirely new infrastructure? Are there energy efficient technology solutions that can be implemented to make transmission, distribution, and on and off grid power infrastructure more efficient?
Yeah. Again, it's a big question, and the easy answer is yes. There is technology. Luckily, we have technology to deal with it. But right now, when we talk about these massive data centers being built, it is because we're coming up with new chips. NVIDIA's as one company are able to build up. We have racks that will require 1 megawatt per rack. That is 100 times more than what we did 3 years ago. So that's kind of the development that we're looking at. And 1 megawatt of a rack means that you're going into these 1 gigawatt or data centers. And to put that in perspective, that's like one nuclear power plant normally runs like 1.2 gigawatts. That gives a bit of the reference point to what we need when we're talking about these massive data centers. So therefore, in average, we can deal with it. That's what I said earlier. But we do need more capacity, and we need to manage the load. That means how this is being run 24/7. Because what we see also with AI data centers is different from machine learning data centers. The machine learning data centers normally run at like an 80 or 100% capacity all the time, 24/7, because what you do is training a model, training a machine. So you just want standard capacity. You can think about like a punching machine that just runs all the time. And AI data center have much big variations in load, which again puts more stress on the grid because you have these kind of waves of from a few hundred, maybe up to megawatts up to a gigawatt, and then down again. So this gives much bigger stress and pressure on an electric grid and the equipment substance there. So that will be one of the challenges I know Bob is going to deal with in the future. But there is also where we are as ABB is one of the companies that are helping utility companies, helping the data center owners to be able to have this grid stability that is needed, because nobody will accept that we have kind of blackouts or shutdown. This is where, again, technology exists to deal with it. That could be equipment like from ABB. We do what we call synchronous condensers, which are large mechanical machines that stands in the grid to give stability, and it's rotating machinery. That means that so you don't have a power shutdown like what Spain faced in April last year. This is no utility owner or no country or state want to see. So this is, as I say, the technology exists, and maybe finally also they exist by using new technology with higher energy efficiency. That is how you can reduce also the impact of some of the new capacity that we put in online, that we are able to build it as efficient as possible. That means especially around cooling. When we're looking at the different technologies that exist there, you can save up to, when we're looking at it, going to high energy efficient solution, about 20% of the energy in a data center. And the other one is around energy management, that we are able to control the power in a much better way. So, but these technologies, they do exist today, and our commitment also is to come with new technology that will help address some of these challenges.
Thank you. And you mentioned rolling blackouts and efficiency. As a native Californian, not to continue slamming my home state like we have this morning, but I grew up with those rolling blackouts. So how, I'm going to turn to you, Bob, to talk about how we handle that here in Virginia. 22 peak days in, I mean, it's only the beginning of June. That seems kind of like a lot. And before we turn to Her Excellency, where peak days are probably the norm in UAE, to what extent do large load customers pose reliability risks to the grid upon interconnection, and what steps are companies taking to mitigate these risks? Are there key technologies that can mitigate grid issues and to ease the interconnection process?
Well, I like the way Morton put in a plug for all of us to buy ABB equipment to help it. And he's right, by the way. The synchronous condensers, for example, are incredibly valuable. I say that as a lawyer, not an electrical engineer, but I did learn early on in my career at Dominion, the grid needs things that spin, rotating mass, in order to maintain the stability of the system. This is an issue that at Dominion we've been responding to, taking advantage of both for some time. And it requires for us to serve the demand, some of it from data centers, some of it from other parts of the economy. It requires building infrastructure. I mean, that description is exactly right. We should be thinking about, and we've been doing this for a long time, building infrastructure. It also requires taking advantage of the capacity that's in the grid that exists today. There is a perception sometimes that we've got this kind of creaky old grid that doesn't operate very well, which is not true. Our grid, it continues to modernize, and it is much more modern and reliable than when I was a kid. And, you know, we used a rotary dial phone to call the power company to tell them our lights were out. That's not the way things work anymore. And so we advance technologies like voltage optimization that can take better advantage of the grid today, like a variety of technologies on the transmission side. But we're also going to need to build new generation and new transmission in order to serve load. It is something that our industry has done for decades. We're perfectly capable of doing it, and I'm highly confident that we will. As long as there aren't too many policy roadblocks. I mean, that we're in many ways we carry out policies of the states and the federal government, and so to the extent that, as Your Excellency described, that this is a partnership among the government and the private sector to pursue important objectives, we will certainly be able to do what we need to do. It is more complicated than it once was. Building new transmission and the outages required of existing lines, taking maintenance outages at generating stations becomes more challenging as the number of peak days continues to grow. So there's more complexity, but we also have more capacity and more technology in order to address that. So it's really, to me, it's both. It is take advantage of the technology that we have today and that is coming, and also build new infrastructure and be smart about it.
And we will definitely come back to the policy and regulatory conversation a little bit later, but you mentioned partnerships. Her Excellency also mentioned partnerships. On the stage with us, we have the Emiratis, we have Switzerland, and we have the US. Your Excellency, can you please talk a little bit to us about how 2.0 is thinking about securing supply chains for the data center build out in the UAE, and how you are working with partners worldwide to ensure these supply chains remain reliant and cost effective?
So before I answer that question, I just want to put some context to people to understand the power demand that we will need just for data centers. So when you were saying
in UAE,
globally. So when we're saying double the global data center electricity consumption, you got to think about it this way. So I did the calculation yesterday. New York City consumes about 50 terawatt hours of electricity per year. So what we actually need in the next 5 years is 2 New York City worth of electricity every year for the next 5 years. So just to give you some context on what data center consumption, and this is only data centers, right? There's also the whole industrial advancement. There's the electrification of vehicles. So the electricity demand is huge. So when we think of now what we have to do in the future with partners, these challenges are so big. You have on the one side the power generation, but the more important side is the systems approach we need in energy and permitting and connectivity and supply chains, critical metals and minerals. It all comes as a partnership ecosystem that we have to build. Now, 2.0 is an investment platform, global investment platform. We are investing in energy and infrastructure and in consumer. And since we're here at the Global Energy Forum, I'll dive into the energy space. And this is E.0. That's our energy platform. And what we've done, Lindsay, is we've looked at where are going to be the bottlenecks in the future. Copper supply is going to be a bottleneck. So E.0 is looking in, and we're mining copper. We've got a partnership with the government in Zambia and looking at coming out at about 240,000 tons per annum of copper. Then we look at cables, transformers, UPSs. These are all going to be bottlenecks. We're also investing in manufacturing these items. Then we're looking at power generation, solar. We're going big in India. We're going big in the US. Actually, we've just signed an agreement with Traverse Midstream Partners. It's a $2.25 billion acquisition.
Congratulations.
Thank you. Thank you. And this is our exposure to a critical natural gas pipeline that runs across 4 US states into Canada. Why is this important? Again, because we understand that infrastructure and bringing energy to where it's needed is as important as the data centers itself. And so this is what we're about. We're about building resilient ecosystems. That's what E.0 is doing in the energy and infrastructure space. And this first move in the acquisition of Traverse is our first big step into the energy market here in the US. And the overarching theme, of course, the US-UAE partnership, with the UAE committing $1.4 trillion into this partnership. This is a step in that direction, with many more with all our partners. I think you all have heard of XRG, Mubadala. This is the Abu Dhabi Inc. We all work together with our partners because, again, this challenge that we have before us, the AI economy, needs partners to work together.
Worldwide, I think.
Yes.
Unfortunately, a lot of the components necessary come from places that are very hard to get to. So
Absolutely.
having strategic partnerships to help ease evacuation routes and access is paramount.
Absolutely.
So thank you for that example. And So turning a little bit to cost allocation, there's been a significant discussion of concerns that average ratepayers are footing the bill of AI data centers. I think we touched on this a little bit in the opening panel today. So, Bob, is there something you're observing in the Dominion Energy service territory? What has been the net effect of data centers on energy rates, and how is Dominion Energy taking action to ensure data centers pay their fair share in accordance with overarching principles like the Ratepayer Protection Pledge?
What better way to get a conference excited than talk about cost allocation in a utility
I'm pumped.
But actually, the fact that it has become the question was, are we observing it? And we're observing the debate, and it gets very much oversimplified. The oversimplification is, well, electricity rates are going up in some places and data centers are building, so one must be causing the other. Let's have a big fight about it. The utility commissions from the beginning of rate cases have allocated costs across classes. In every utility rate case, every class claims that they are subsidizing the other class. That has happened from the beginning of regulatory time, I believe. But this is what regulators do. And in the case of Virginia and in a number of other states, the regulators have established a large load class that is, at least in Virginia, almost exclusively data centers. That class will have a tariff structure, and now we're getting really exciting when we start about tariff structures, but with a 14-year contract minimum and essentially take-or-pay contracts. There have been, again, Virginia is the state where at least our utility sells more electricity to data centers than any other. Our rates are well below the national average, have been for a long time. Two independent studies, one by the Virginia legislature and one by Berkeley National Labs, showed that as data center consumption increased in Virginia, residential rates were below the rate of inflation, below the rates in other states. But it's now taken me, 3 minutes to describe that, and a newspaper headline doesn't have 3 minutes. So we need to do a better job of explaining that just because two things are happening at the same time doesn't mean that one is causing the other. And we need to make sure, and I think there is universal agreement among utilities and among data centers, that those large load users pay their fair share. I mean, I think they're very clear about that. And we certainly believe that. And state regulators in every state, certainly in Virginia where we operate, will be paying very close attention to this going forward to make sure that there isn't a subsidization of data centers by residential customers. It can be done. It's being done effectively right now. It's just there's sort of a narrative that's developed that is challenging to overcome, understandably so, and it's the responsibility of policymakers, of companies that are in the space to lay out the facts. People can come to their own conclusions, but they should at least understand what's really going on.
Well, as a resident of Virginia, personally, thank you for making sure our rates stay reasonably low. And
your lights stay on. We'll make sure that too.
Thank you, especially during the peak days. But in that term too, a lot of the hyperscalers, there's a lot. Everyone needs to be investment grade. There's talks about credit support, different ways of being able to move capital for the build out. So Gardner, can you please contextualize this for us a little bit again? How does Nscale's business model function, and what are some of the other business models available?
So Nscale is, like I mentioned before, really focused on kind of ground to cloud, making a one-stop shop for the hyperscalers to be able to lease effectively under long-term contracts access to NVIDIA chips, whether that be Grace Blackwell's, Vera Rubin's, et cetera. So we're a strong partner with NVIDIA, of course, as you would imagine. They're an investor in the company. And our business model is really trying to make it simple for customers to be able to get to gigawatts of scale of these chips very rapidly. And so as Bob mentioned, I think, the regulated utilities are doing a great job, Dominion in particular, of trying to make sure that load balancing and cost allocation is done properly. And that's one approach, a very common approach for most data centers globally. But another approach is behind the meter, right? And behind the meter means you're effectively running a microgrid. You're not connected to the utility. you're not straining the grid and in heavy load days. You're not affecting ratepayers' rates. The hyperscaler alone is paying the bills of the power generation on the facility. And that can be a great solution to bring gigawatts online quickly until the grid is able to connect. And then to the extent that there is an opportunity to connect to the grid, you're never taking power off the grid. You're never affecting rates. You're only adding capacity to the grid, particularly in colder weather moments, and PJM gets strained in those moments. And that's when we'll have excess capacity for our West Virginia facility in particular. But our business model is, GPU as a service. It's effectively allowing the hyperscalers to be able to meet the demand of, their own large language models and those components for Anthropic, OpenAI, et cetera, by using us as a neocloud provider.
And speaking of behind the meter generation, Morten, on-site optimization can reduce a data center's grid draw. So how far can that model scale before it creates coordination problems for grid operators?
Yeah, and in general, I do understand also kind of to get going, it makes sense to do on-site power generation. I think though, maybe talking more as an electrical engineer, long term it does make sense to be online on the grid because the investment and keeping for general for the society to keep a modernized grid running well, it is better the more user you have, the more kind of user it is to divide the fixed cost. So long term, I do think that it makes sense to get everything connected back on the grid because that is what would make, as I say, from a society point of view, which would be the best case. And that I know that is probably also the target, as I understand, for N-Scale. And then I think here is for us when we're looking at it is how can we use technology to reduce both the build cost, but also the consumption and deal with bottlenecks, because there will be bottlenecks in this situation. We're talking about, mentioned already, we hear about kind of the from gas turbines, power transformers, down to the equipment that we make, but also electricians in the end to be able to do that job. So what kind of two things we are doing, looking at how can we build more into a factory in modular design instead of building on site, which always take longer time and is more expensive. So you can do things faster and better in a factory environment. So in modular units that is just being kind of deployed at site and being connected. So that's one thing you do. And the other one that we are, as ABB, was also helping in a coalition with others in the industry, creating also the Career Electric, which is a coalition of companies going together. We committed in starting in the state of North Carolina. So thank you also there to Governor Stein and his team. I've been able to set this up to be able to dedicate for the next 10 years. We will educate 25,000 into electric workforce, so to say, who can deal with it, because electricians will be one of the key bottlenecks in our industry. So we start in North Carolina, but we are also looking for kind of doing this nationwide together with other states. So there will be bottlenecks, but it's all about how can you move those around and address them a bit early, so we're not kind of stuck, because I would say also workforce will be one of the key issues in the coming years.
Speaking of mobilizing capital, in a past life, I worked on building power plants for behind the meter power for data centers. And I learned that welders and electricians in Texas are making about $200,000 a year. So maybe if moderating doesn't pan out for me, I can learn a thing or two. But Your Excellency, talking about from an investment perspective, what makes energy infrastructure attractive or unattractive to long-term institutional investors?
So I think from an investor lens, what's interesting with the energy infrastructure is that it's at the intersection of three major shifts: electrification, digitization, and energy security. Now, we're very much about patient capital, long-term investments. So when we look at the energy infrastructure, it's very attractive because it's all about long-term contracts. It's about regulated cash flow, and that's kind of like where the Traverse Midstream acquisition sits. On the risk side, it's the speed of execution. And this is where we're always talking about there's a whole systems approach to this. So it's about the grid, it's about the permitting, it's about getting the partners, it's about is your equipment able to come on time? It's a whole array of factors that come into that. So why we're now going strong in the US market is because it's becoming a very attractive landscape for energy infrastructure. And so this is how we're looking at the partnership that we have. There's also a partnership happening the US UAE in the UAE, which is the Stargate project. Again, I think there's been a lot of the news about how fast that's being developed because we understand that the name of the game is speed of execution. And so we've really put that into or classified that as a critical national priority infrastructure that has to be built at lightning speed. So this is how we look at things from an investor point of view. It's got to be the 5 factors that I keep thinking about is the connectivity, the finance, the permitting, the supply chain, and having the right partners.
And I think we've touched on 4 of those today in the conversation. One we have not yet talked about is policymaking, some of the regulatory framework. So I think, Bob, we're going to put you on the hot seat here a little bit. I know that the current administration has undertaken a lot of regulatory and policy changes to speed up a lot of the build out that AI demand is putting on the requirements for power generation and electrification. Have you seen examples of where industry has achieved both affordability and reliability and that we can use as a metric for our current build out? And then separately, do you see some kind of a bipartisan framework that could help to lubricate the growth that we need to see, not only in the United States, but with our partners as well?
Yeah, I think Morten described it well. On affordability and reliability can go very much hand in hand. As you build out the infrastructure to serve a growing base of customers, you're spreading the fixed costs out over a larger number of megawatt hours. And I would modestly say Dominion Energy is an example of a reliable, or maybe immodestly, reliability and affordability. I already discussed the fact that our rates are below national averages while we have done a substantial amount of investing on behalf of data centers. Permitting reform, though, will be critical to moving forward, and not relaxing rules. The permitting process should be rigorous, but it should have a beginning and it should have an end. And those 2 things shouldn't be too far apart from each other. There are examples at Dominion of transmission projects that are of a relatively short, one in particular, short distance transmission line needed because we were retiring a fossil asset, an aging coal plant. And the permitting process took years. The permit that had been issued was invalidated by a court after the line had been energized, thank goodness. And the permitting process is still going on for a line that we've built and energized 7 years ago, and the permitting process isn't done yet. That seems not logical, and there have to be ways for different agencies to coordinate better, to have parallel reviews rather than sequential reviews, to make sure that agencies are focused on their specific area of expertise, not an expertise that really should be somewhere else. This doesn't have to be hard. It can be very rigorous, but can be done more effectively than I think we're doing it today. And we're looking forward to continued movement. I know I only know what I read in the paper, but it seems like there have been good conversations on a bipartisan basis in the Senate. We're optimistic that there will be opportunities for us to achieve a rigorous and yet time-limited permitting process to allow this infrastructure ultimately to get built. And the last thing I'd say, it's incumbent on people building the infrastructure to realize we've got to communicate well, because people deserve an opportunity to participate in the process and say their piece. And so we need to be there upfront, transparent, honest from the get-go. And in return, what we would like is a fair and logical process to get to the end.
I think that's a delicate balance, but with strong partnerships and communication, hopefully that will be successful for all of us, inshallah. We only have a couple minutes left, so I want to close us out with a lightning round. I'm going to ask you to please complete this sentence. The biggest obstacle to powering the AI economy is blank. So, Gardner, I'm going to start with you.
So I'll be immodest as well. I think fundamentally the biggest obstacle is being able to get gigawatts of power online very rapidly. And there are very few companies that can do that at scale. And so we've chosen to crack that nut with both on-grid wherever possible, but also behind-the-meter solutions that really are a differentiator for us. But it's really all about power at scale quickly.
Martin.
To finish the sentence, my word was workforce.
That's a good. You talked about the electricians, the welders. Where else are you seeing gaps in the workforce?
No, it's even on contractors to be able to build. So it's not getting everything connected. So I think that's one of the challenges we see in so many markets. Will be short on skilled workforce, and that's as I gave you the example also where we're stepping up as a company and participating together with a private public and government initiative that we can help address this challenge as well.
Okay, great. We have speed, scale, workforce. Bob.
I would say workforce and policy consensus, just consensus on what objectives we're trying to achieve here.
Okay, we're in Washington, so everyone, policy consensus. Your Excellency, we're going to finish with you.
I would say speed of execution. In a nutshell, AI is moving at digital speed, but energy infrastructure is moving at physical infrastructure speed. The gap is too big. We cannot wait 7 to 10 years for permitting to be done. So I would say speed of execution.
Speed of execution. Okay, well, with that, I'm going to close out our panel. Thank you to my excellent panelists for joining us today. I had a great time and I enjoyed the conversation. So.
Ladies and gentlemen, please take your seats. To chair the fireside chat, mobilizing capital to build strategic infrastructure at scale, please welcome Vice President Energy and Infrastructure and Chief Morningstar Chair for Global Energy Security, Atlantic Council's Landon Durrant.
All right, well, it's great to be here. If you're in the back, come on in, take a seat. We're in the round, and it gives a little bit more of an intimate environment on our leadership stage. Again, Landon Durrant, I'm Vice President for Energy and Infrastructure. Excited to have a conversation on mobilizing capital to build strategic projects. Who better to have that conversation than Ben Black, who's the Chief Executive Officer of the U.S. International Development Finance Corporation, the U.S. government's principal development finance institution, also coming with a rich history from industry. And of course, Mike Sable, a friend of the Atlantic Council and the Global Energy Center, Chief Executive Officer and Executive Co-Chairman and co-founder of Venture Global, one of the largest and fastest growing LNG companies in the United States. What people may not know is he also has a rich background in finance and many things. So we have a very well-informed panel here with us today for this conversation about ultimately, how do we get things built? So I want to start off, Ben, and think about the strategic case of why this moment's a little bit different. We were talking in the back, you've been on the job now for about 8 months and coming up on the 1-year anniversary, but you have a very different vision of where the Development Finance Corporation, where DFC is headed. We've heard a lot about crisis, the Strait of Hormuz, current events. Are we at an inflection point that demands a fundamentally different outlook for how we do the work you do?
It's a pleasure to be here, Landon, and thank you. So, I think the first thing to say as we talk about economic statecraft is let's look at when we were at our height on economic statecraft. So, I refer back often to the Marshall Plan, and everyone talks about the altruistic components of it, but often flying under the radar is the fact that of 70% of the funds that went into the Marshall Plan over to Europe, 70% came back to the US in the form of purchases of US goods and services. And we were able to hardwire the US system and export it into Europe and create enduring markets that have lasted for over 80 years. We are at an inflection point in the sense that under President Trump, the United States is the largest producer of crude and natural gas in the world and the largest exporter. And so, what the DFC really aims to do to meet the administration's goals and vision is four things really. We build economic ecosystems that are predicated on US capital markets. They're insulated from adversarial control. They return strong returns and dollars to the taxpayer, and they move the needle in terms of development for our allies and help develop their economies. And as we do that in this inflection point now, we are using all of our authorities, and we'll talk about that more later, but they're much expanded. I would say under the DFC right now, after reauthorization, it's not an apples to apples comparison. It's a totally different agency. And as a result, you look at things like the Ukraine Russia war, where we have stood up alongside Treasury, the Ukraine Reconstruction and Investment Fund, which is a totally new structure used to bring in private capital and mobilize it to help allies. At the same time, we are also looking at the Strait of Hormuz, and we have a lot of different authorities we can use to change the dynamic and free up choke points.
Just a follow-up question on this as I think about those investments or the Ukraine fund, for example. One aspect of this that's really important is scale. And so this isn't one-off small development projects. You're not giving up on development, but the scale of what you're envisioning in this new economic statecraft model is much bolder and larger, both because of your authorization, but also your own vision.
So I wouldn't call it new. I would actually call it a return to basics and fundamentals as far as the United States goes, predicated on the Hamiltonian model. But even more than that, I would say no. If you look through the whole scope of human history and civilization, the single component that has brought the most people out of poverty is industrialization. And if you think about that, as you build large scale projects, particularly in energy, and then in logistics and infrastructure, that is how you're going to create markets and not stranded assets that are particularly susceptible to adversarial control.
Well, as it might happen, we have somebody that knows how to build big energy projects, Mike. And so if I maybe turn to you and think about the current moment from a different lens, obviously there are some objective facts. The United States is the biggest exporter of liquefied natural gas, and Venture Global is certainly a part of that. What do you think the current demand outlook looks like? Is this crisis a bad omen, tailwinds? What are we looking at in terms of the future of the build out of infrastructure here in America?
Thank you, Landon. It's a pleasure to be here. We tend to look at much longer term, 5 years, 10 years, 50 years. The assets that we're building today will operate for 60 years. We still think that we're still in the very early stages of really the rollout of global gas infrastructure. It over time tends to displace coal as a cleaner source of production and becomes part of a blended portfolio. And so as you have the pull, which is incredibly positive, of a growing global middle class, it's going to continue to support, provide the demand to support significant investment in the infrastructure that natural gas requires. Of course, power plants, industrial demand, domestic pipelines, regas terminals, ships, LNG facilities, pipelines, compression stations, the E&P, and all the support services that are required. It's a massive, expensive logistics chain that requires a lot of capital and a lot of people to work on. But we're tremendously optimistic that, for the last 15, 20 years, the market's grown, gas demand has grown globally between 5 and 6%, closer to 6%. We actually see that accelerating, and so we think the world needs more of all of the above. I think the most optimistic part about it is that the engineering already exists today that allows you to do everything that I just described and deliver incredibly cheap cost of fuel that gives you, 6 cent, 7 cent, 8 cent kilowatt hour electricity in Europe and Asia. And there's no new inventions that are required. It just needs, everything to work as it has been.
There's no new inventions, but there is a need for infrastructure on both sides in the United States to export it, but also to have it hit markets, whether it's in Europe or Asia. And so I want to shift the conversation to public-private partnership to make that happen. And Ben, you have been on record a little bit talking about a firm belief in private capital, but here you are helping marshal private capital through public capital. And so when you sit across from a company like Venture Global, of course, you're not investing in their export terminals, but you're making the architecture of those exports real because you're building hard infrastructure around the world. And so when you sit across the table from a company like Venture Global, how does that partnership actually work for you? Like, what should we be talking about? What do people need to know in the back room here?
So, well, first of all, I get very excited about these because there's so much we can do in terms of, look, if we're going to just jump to endpoints, building regas terminals for Venture Global to ship to, as we look at port infrastructure, that's the easy answer. But maybe we take a step back. And so I talked about the reauthorization a little bit before. When this passed at the end of last December, really it turned us into a $205 billion organization where if it comes to energy, critical minerals, or technology, we can invest anywhere in the world now. And the caps that were there before and sort of classification by country is no longer playing a part for that respect. So it is a totally new organization that can really lay the groundwork across the board for this. When we talk about all of that, and so just to go to the 205 billion, subtract out previous commitments, and basically on a 6-year reauthorization, we'll be spending $30 billion a year, or more than Abu Dhabi's sovereign wealth funds combined on an annual basis. So it's a huge amount of investment capital that can be put to a lot of really good work. And as we think about that as well, 205 is an enormous number. China's Belt and Road is 1.5 trillion. So if we were to go at it with a state capital only approach, we'd be not only dwarfed, we would not work as well. But the fact of the matter is that system doesn't work as well as the building of markets. So what we try and do is we can invest across the capital stack from senior debt to minority equity and our insurance product to boot. And as we do that, we can bring in private capital to fill up the stack, and that's a much better capital stack. As we're private, the DFC is in there, and we're incentivizing private capital to come in and make it pencil. We like to say we're a returns-oriented organization, not a risk-adjusted returns organization, because we have strategic goals.
So a lot of tools, debt, equity, insurance tools. When you're actually talking about unlocking investments and getting these private sector opportunities across the finish line, this isn't, you're not filling a huge gap, but you're filling the last mile to make sure that they become real?
It depends. I mean, look, there are going to be certain projects where the capital stack from the mezz up pencils, but maybe the equity doesn't for a fund's returns needs. I mean, look, if you believe solely in the invisible hand, there's no reason for public capital to exist at all, except the strategic projects we need aren't getting done otherwise. And sometimes it's a larger slug of capital, and that's what helps to incentivize the private market to come in.
So, Mike, I won't hold you just to DFC, but let's put this in application. How does a company like Venture Global look at public investments and public capital to help a company like yours reach even further than it already is?
We like the focus where it is today, which is on developing and supporting the demand side. projects in the developing markets, but certainly in the United States, if they really have all the qualities of a economic project, has no problems attracting the private capital. There's enormous amounts of capital, and the constraint is not capital. It's really permitting, regulatory certainty, and then you'll find essentially unlimited amounts of capital to support that. It really is on the demand side where there's less certainty, where the capital isn't there. So regas terminals, on the other side, storage, pipelines, power plants, industrial uses, 50% or more in a lot of markets of the demand is not for electricity; it's for other industrial uses and consumer uses. And so those are hard assets to build and develop in certain countries that have fundamental demand for it, but they need support. And the DFC focus on that is a great thing for our allies and people around the world and raising living standards and enhancing the energy security of the United States, but also of friends and allies around the world. So that's a great role for that, and we're excited of the support from the Trump administration and the brilliant, successful people that could be doing lots of things and are donating their time to support this.
Okay, so step one, U.S. taxpayer dollars going internationally to build infrastructure has value to America and our own energy security.
Yeah, no, absolutely, right. It's all the innovation and capital that's invested in the drilling revolution in the United States has made us, as we all know, an owner of several hundred years of supply of gas and oil, and but it's way ahead of really the infrastructure that's required around the world to build it.
Maybe I can put a geography overlay on the infrastructure that needs to be built. I think I see you internationally, certainly outside of DC, more than I see you here in Washington. And so I'm curious, where do you see that this infrastructure actually needs to get built now?
Well, pretty much all countries have demand for gas. And so if you don't have access to pipeline gas, you need to bring it in as close as you can with regas terminals and pipelines. And so it eventually brings almost all markets into focus as an opportunity. And the as I was talking about before, the existing engineering has made gas fairly competitive with coal, and so as a part of a fuel portfolio, it's incredibly attractive because to make electricity, it's competitive, but it's a requirement for certain industrial and consumer uses. And so I think the whole world is a legitimate opportunity. It'll bring economic wealth to countries that don't have it today.
I want to kind of keep building on this topic in terms of the geography. You've talked about critical minerals. You talked about energy security, Ben. I know that there's about 5 different core areas that DFC is particularly focused in. Maybe you could build out a little bit on the geographies you're focused into. It could be global. Not trying to limit you. I'm just curious when you wake up in the morning, who's typically a phone call with? Is it Europe? Is it Africa?
So look, I think under the Trump administration and the president has really been focused on the Western Hemisphere. And I think this is incredibly important as we develop this out. By 2030, 44% of new demand in global oil and gas is going to be met by Western Hemisphere countries, Argentina, Brazil, Venezuela, Guyana. And that infrastructure needs to be built. But I also want to jump on a point you were saying before as we go there, building out the infrastructure, especially for ports, power, pipelines, regas terminals, is absolutely important for the United States because, as Mike's pointing out, we have all of this gas. And if we're just using it for our own domestic needs, then that's going to be a lot fewer jobs working inside the United States on getting the gas out. By building out the infrastructure globally and serving those markets, we create a greater supply of jobs domestically. And that's incredibly important too.
To put a little bit of extra math on that, just our company alone, the total balance of trade impact is going to be a couple $1 trillion over the life of the assets. And so you think about historically, not that long ago where we were an importer of all our energy. That capital was all leaving the country, and now all that cash is coming into the U.S. and compounds. So the impact is enormous on the balance of trade and the economic growth of the country.
Okay, so we've pretty much have a well-founded economic argument for why DFC's mission exists, why companies have private partnerships to build things. But what we haven't confirmed yet is, are we building them as quickly as we can? And if not, what's standing in the way? I think the LNG sector in particular is a little bit maybe I'm not going to call it an outlier, but certainly more advanced in terms of getting things built over the last decade. That's not consistent across all of the United States. What are you looking for from a corporate standpoint in terms of how we build even faster?
Yeah, the challenge to all this now is because the innovation has been achieved. It's all about just the raw management of the supply chain, the people, the permitting, and just the execution of the complex construction projects. And it takes time, and because they're big, a summary of scopes of one phase of our project will have 80,000 scopes, hundreds of thousands of control systems. So these are just enormously complex undertakings. A single facility will have more than 100,000 people in the whole supply chain that touch it in some way before you're done. But having said all that, I think the hardest part is still permit and regulatory uncertainty, and we need to remain very cautious and worried about protecting what's really good now. I'd say we have the best permitting environment in decades under the Trump administration, but it's delicate, and there's a lot of room to make it go faster, still be fully protected and fulfill all the requirements, but it can be done much faster than it is. We would have for Venture Global, we would have significantly more LNG in production right now if permits had gone faster.
And I'd say on the other end, that becomes an issue too. I mean, look, the United States, especially right now, the permitting environment is fantastic. But think about all over the world, there's often questions of political risk and all that. And now I have to go into my insurance salesman mode, but the DFC has a product called political risk insurance, which is probably the best mobilizer of private capital and making people secure with being places. So an example I'll use right now is Argentina, where we love the opportunities in Argentina, and the Malay government is a great ally, and we believe strongly in it. The Vaca Muerta, when ginned up and getting going, looks to like it's going to produce 1.2 million barrels a day. And adding that into the energy mix will be fantastic. That having been said, the 100-year history leaves a lot of people concerned. What if there's a political change? And that's where political risk insurance, which we can write, completely changes the dynamic. We take the place in terms of risk of the payor. Premiums are paid to us as an insurance mechanism. We can write it for up to 30 years. So it fixes the risk of takings, of regulatory issues, and everything there. And then what it also does is it makes any project internationally much more leverageable, because instead of a B- rated country's credit, the credit to your project on your payer and your receivables is now the United States government. And so you've just cut your borrowing costs by 4 or 5%.
I want to expand on one other aspect of what
400 or 500 basis points. Yeah.
One other aspect of what Mike was building to. He talked about people, he talked about policy, and he talked about systems and the complexity of them. And I do think, whether this is because of your perspectives and bringing that vision to the DFC or your teams, I've heard a lot of discussion about these being more than just a single transaction, that you're taking like a systems approach to thinking about how you approach investment. So political risk insurance is one tool, but when you take on a project like the Vaca Muerta, are you also thinking about it from a lot of different angles? So it's not stovepiped in terms of how the DFC's processing these opportunities?
Absolutely. As opportunities come in, and look, in my career, I came up looking across capital structure, and I think that's the fundamental. There is no perfect capital structure at any one time. What you want is flexibility and optionality. And as different projects come in, we like to be able to work that way. And, I love this. I'm at a place where I can speak in basis points. I keep getting told only use percentages these days.
Well, he has a background.
But, look, we're not going to be 50 bips smart on something necessarily, but to be able to move across the capital structure and say, hey, this is riskier. We're going to baseline this at 8 to 10%, but we can move here and it's going to be cheaper, but you're going to have a lot stronger covenants restricting what you can and can't do, how your baskets work. It just gives a lot of latitude to how we look at it. And we're acting as a full stack financial institution when we do this. And then we're bringing in partners who can play along with that.
So let's talk a little bit about the infrastructure that has to be built, in your opinion. Then, so we're talking about process, we're talking about the systems. When you look globally, what firm, hard infrastructure are you hoping to see really develop in the next 12 months, 24 months of the Trump administration?
Well, okay, when we say develop, Mike's made a very fair
investment into getting things and projects moving.
Okay, look, I'm going to stick to ports and regas plants in particular. You can do pipelines from there, and then you get into mining. I mean, see, this is one of the really nice things as you talk about the continuum of where this works. You want a mining project, and the U.S. is getting offtake for that. It requires a lot of power, and if you're in a country that does not have that level of power, it all starts with energy first. It is the most important thing here, and then there's so many varieties of what you can do from there. Once you get your gas turbines, if that's what you're building off of, obviously pitching towards natural gas, we like that. You can make lines to the mine and making sure that operates. And at the same time, you're providing consumer electricity and developing an entire consumer market rather than just an extractive model that you might see more from Belt and Road.
Are there particular geographies in terms of those ports, or where do you feel like you're where are you going to put some emphasis to that geographically?
So we're talking Western Hemisphere. I'd say, the Indo-Pacific, especially on the port side, parts of Africa, and then, I would say from Eastern Europe to Central Asia. Now, some of those are dry ports, some of those are ports off of the Caspian and other areas, and then obviously down into the Middle East as well.
I've seen in my travels, in particular in Eastern Europe, I was with some of your team in the 3Cs initiative in Croatia, a desire for greater economic partnership with the United States, especially at a time where the strategic calculus of how we're engaging, say with troop posture is changing. And so the economic opportunity of building those long-term relationships is really real. And so what you're doing is clearly having an impact around the world that way as well. Mike, LNG has had an impact around the world. This is a conference on the geopolitics of energy, and energy shapes geopolitics as much as geopolitics shape energy, right? And it goes both directions. And so the United States is a massive LNG exporter. By 2030, it's going to be even bigger. You're building an energy legacy here. What do you think the next chapter of American LNG looks like? Where are we taking this?
Well, I think, as I said a minute ago, we're in the very early stages of the build out of global gas infrastructure. And as you build more of that, the markets will become more liquid, more tradable. The end users can go directly to the producers. Costs will continue to come down, which will create more and more demand. As Ben was just describing, when you build power plants or gas infrastructure to support a mine, for example, once investors around the world, industrial investors, see available electricity and power and fuel, they come pouring in to innovate and make investment that just lifts the standard of livings and creates even more middle class demand and improves the quality of life for ultimately billions of people. You're going to see Africa, I think, accelerate in infrastructure and creating demand. You're going to see their domestic gas exploited. And I think I'm tremendously optimistic about Africa. We talk about Asia all the time, but I think Africa is going to surprise people.
I've made you pretty passionate about this in a private conversation we had before, so I just want to, with Iran happening right now, with countries thinking through energy security, you're still pretty bullish on the gas future, and I think it's an important thing to drill down on. Right, we're going to hear a lot about, for example, India pushing forward with solar and storage. What gives you the confidence that gas remains such an imperative to the global energy mix?
Well, the challenges that we're experiencing in the gas markets today and the oil markets have nothing to do with it being oil and gas. It's just geography and politics. And so there's plenty of alternative basins for oil and gas beyond the Middle East and beyond the United States as well. And the combined industrial and electricity uses of gas will just make it a core part, and the fact that it's much cleaner than coal will make it a core part of countries' portfolios. And as long as you have a growing global middle class, you're going to have demand for gas. And it has been playing out for the last decades. It continues to accelerate, in our opinion. It's going to accelerate. There is a lot of consensus around an oversupply in upcoming years of LNG and gas. We never saw it. We think that the markets will in the future do what they've done historically, grow at 5 to 6% a year. The oversupply analysis assumed that growth rates and demand were closer to 2%, 2.25%. And that has not historically been the case. And so we thought the market was in balance. And in fact, the market is probably going to be short materially in the early 2030s.
Well, it's a good thing because we got a lot of gas coming into the world's market. Ben, I want to come back to you on one final point, building on something that Mike talked about earlier, which was the durability of the policy landscape, and in particular for him, a big compliment for getting permitting moving quickly under this administration. I think the fact that you have the DFC reauthorization shows that there's a bipartisan vision and support for your institution. And so how are you pursuing, whether that's nuclear, where we have a lot of bipartisan support, a enduring program at DFC so that congressional leadership, political leadership sees the value as you two have articulated incredibly well long into the future?
Look, so at DFC, we have an all of the above energy policy. Obviously, as the world's largest oil and gas producer, we want to do things that are to the advantage of the United States. Like when people come in with solar, and it's interesting you mention India because this is the one caveat to the question I often ask in return, which is where are the project's solar panels being purchased from? I think it's a little difficult as a United States government agency to fund projects where you're buying hundreds of millions of dollars worth of Chinese solar panels. Now, the Indians are coming up the curve there to be able to produce more panels, but the reality is right now, that's a Chinese-owned market. Hydro, on the other hand, is something we talk to people about all the time. So energy mix and energy needs really depend on the country at hand. But obviously, we're big proponents of liquefied natural gas and natural gas in general.
Well, that's great. Gentlemen, unfortunately, we're coming up here on time, and I just want to end by thanking you on this conversation and bringing some real honest discussions on how we're mobilizing capital to build at scale. I think that there's clearly a strategy, and it's bold. I wish you great success, Ben, as you continue to lead the DFC to move that 30 billion a year effectively, and Mike, of course, with VG, continue to grow your export portfolio.
Great, thank you very much. What Ben is doing over at DFC is extraordinarily revolutionary. To have this level of sophistication and creativity is going to have a huge positive impact for the world. It's unprecedented.
Well, I thank you both.
Kind of you.
And if everybody would join me in thanking them as well. Following this fireside chat, we'll have on the leadership stage here a conversation with Stephen Kobos, the CEO of Accelerate, chaired by Roger Dewan from S&P. Thank you, everybody.
All right. I'm not sure I see it, but good afternoon. Welcome to the session here where we're going to be talking about really global energy security. And the global energy system has been completely redefined by this issue of energy security. So what it takes to deliver reliable energy in a disrupted world. So we're lucky to have with us today Stephen Kobos, the President and CEO of Accelerate. And if you don't know Accelerate, you really should. Accelerate sits at the point where energy supply become actually energy security and delivered energy. They provide molecule, but also infrastructure, speed to market, and policy support required to deliver reliability on the ground. So often we focus on the supply side and we not very often focus on the other side. So Stephen, I really wanted to start there with you and understand how Accelerate really translates supply into energy security, and in particular, how do you bring reliability and optionality to your customers? What it takes to turn energy supply really into energy security in this world?
Thanks, Roche, and thanks to Atlantic Council for having this opportunity. It's a great question, and at Accelerate, we have thought of ourselves as providing energy security for some time, for a long time. Everybody knows energy has to be reliable and it has to be affordable, or it's not of much value for anyone. We are at a point of time, I would say in the past 4 years, where more and more people are focused on energy security. Just in the past year, I've heard different energy ministers. Some have framed energy security as national security. Some frame it as survival. It's all of those things. What we've seen over 2 decades of doing this all over the world, and we're in South Asia, the Middle East, Europe, Caribbean, LATAM, so we're all over the world. What we've seen is LNG is a critical part of energy security. The other thing we've seen is once you have access to it, you want more. It does so many things, and I would just point out energy security comes in many forms. It could be you have a baseline need. You have a thirsty market. You have to keep the lights on. It could be a market we're in like Brazil, where you have a fabulous energy mix. You have 80% hydroelectric between free-flowing river and reservoir. You have 10% renewables, but you need robust backup nat gas to just so the lights don't go off when you have drought. That's a different form. And then the third form of energy security, and we can touch on all of these, is just physical security. And the example there I would give is Finland, where over the course of 6 months, we put a terminal in 2022. December of 22, October of 23, the Baltic Connector pipeline from Estonia to Finland was cut, and their sole access to nat gas was through Accelerate. So energy security comes in many stripes, and we're there trying to make sure they have the LNG to have it.
So speed is important, but not only speed, affordability. And we were just talking about all the countries that Accelerate is present, but let's focus a little bit on the hemisphere here. Tell us a little bit about your project in Jamaica and what you're providing to Jamaica, and maybe we can touch again on Brazil, really, to kind of expand on that.
Okay, sure, Roche. I was just down in Jamaica last week because Embassy and U.S. Navy had a great party on the USS Nimitz that was making a port call in Kingston. And kind of my inner 12-year-old boy wouldn't allow me to miss that party. And it was fantastic. Good opportunity to speak with the PM, the finance minister, Minister of Foreign Affairs. And my message to them was simple. You know, we have an integrated LNG platform there. We bring Henry indexed LNG to them, plus a margin. And I just said, Minister, you have taken notice that there's a conflict going on and yet your country has not seen any fluctuation in the cost of LNG. And that's because you were sensible enough to partner so that we can have long-term predictable pricing tied to a US index. And while much of the world is struggling trying to find replacement fuels, you have this stability that comes with this US indexed LNG into your market. And we're hoping we're going to use our asset in Jamaica as, I think of it as a tank farm, and we intend to be loading affordable US LNG there and effectively breaking bulk and delivering it small scale from there. So hope we can repeat that elsewhere. And then Roche, you also mentioned
Brazil.
Yeah, I mean, as I talked about it, hey, we like renewables because we like backstopping renewables. And if you are going to have that kind of 90% of your energy baseload mix be renewables, spoiler alert, you need nat gas, you need LNG, and ideally you need sensibly indexed US LNG for it. So it's a great place.
Yeah, and I mean, if you're focusing on security, can we go back to what you did in Germany just after the invasion and the gas cut off from Russia?
Well, that's about speed to market. And, I talked about our friends in Helsinki, but our friends in Berlin were just as fast. And it is a reminder, when you need to, speed's the most important thing. We're talking Voltaire's perfect's the enemy of the good. If you're in a crisis, you want good, and you want good as quickly as you can. So there's no time for perfect. Perfect's for peacetime. Perfect is for when there's no crisis. But otherwise, you need an alternative to liquid, and you need to fill a deficit as soon as possible. So we have seen what's possible when a government gets their regulations in line, when they're pushing from all sides, and when they understand the existential aspect of the goal.
So you bring your ship very quickly to speed to market. How does it work after? How long do you stay? I mean, let's take the example of Germany or Jamaica. Do real infrastructure get built, or it's more permanent?
Horses for courses. We like to sell to people what they like to buy from us. It seems to work best that way. And everyone has different things in the back of their mind. Certainly, Europe still has this date in the 2040s where they don't wish to commit to infrastructure beyond that for now. That's fine. Why not? As I mentioned, what we found is once people start accessing LNG into their market, they want more LNG. So we will sometimes say, yeah, you think you only want it for 5 years, that's fine. But I mean, we know in our heart that they're going to be there longer. We first went to Argentina, I think in 2009. It was supposed to be a seasonal 3-year deal, and we're there in 2026. So, once you become an important part of an energy system, you tend to stay.
Sounds like me. I came here 30 years ago for 18 months. In Washington, we spend a lot of time discussing this whole issue of US LNG approvals for export terminals. The political environment is really primed to only talk about this one side of the equation. And you're really the company which working on the other side of the equation. How do you explain that to policymakers? How do you address that need in a way in Washington to the administration and to Congress?
First thing I would say is the support across the industry from USG has been fantastic. Secretary Wright's here today. Secretary Burgum is always active with NEDC. You had Jared here on a panel earlier today. Their staffers, I saw Brittany out back. Tireless support all over the world, and you have to love that. It's fantastic. They understand the importance of this. If I were going to recalibrate slightly, I would say, job well done on much of this liquefaction. I mean, we know there's going to be a wave. We know that wave will be slightly bigger than we thought it was going to be 4 or 5 months ago. So that's good news for future affordability. The capital hasn't been deployed sufficiently where it needs to. And, rule of thumb, I like to think that 1 million tons of LNG represents, of liquefaction, probably $1 billion US. That same 1 million tons for regas, maybe 100 million. So the downstream that has to happen, that has to grow, is a fraction of the cost of the supply. So we're doing a great job on supply. I would just focus the attention a little further downstream. But again, USG, NEDC, Ben Black at DFC, all have been tireless supporters, and everyone is grateful for that.
If you have to rank the policy tools that they can deploy, which one would, how do you rank them?
As the British say, horses for courses. I generally like to go in and say, hey, we don't need any money. That helps get you past the door. And it's true, we have a good balance sheet. It allows us to do what we do to integrate LNG supply with infrastructure. But they do have great tools in terms of debt. I think sometimes it's useful to have a little bit of USG equity, just for what that signifies implicitly. So I think they have a lot of tools in their toolkit, and I'm pleased that they're working those.
You also work, maybe last question, in an area where there is regional conflict. How do you look at that aspect of the business and the risk or the opportunities that present itself when energy security become really very important?
It's interesting. I think before 22 and perhaps now before this conflict, people get comfortable very quickly. But when they are reminded about the criticality of energy security, then our phone starts ringing because that's effectively our brand. So, I don't wish this on anyone. I've made 2 trips to the Gulf since the conflict started. I have a lot of friends over there. We have employees over there that I was checking on too. My heart goes out for everyone that, I think I've made 75 trips to the Gulf in the past 20 years. So a lot of friends, and I'm heartbroken about it. That will remain a good area for LNG, by the way. We do have a project in Iraq. We started our company with a project in Kuwait. So I think KPC CEO was mentioning this morning, they're still taking LNG while this conflict's going on. I think intra-basin projects in the Gulf, like we're advancing, are going to be extremely interesting for a lot of people who have trains in the Gulf. So it's always going to be a critical region, but there's a reason that we built a global platform.
Thank you. In this disrupted world we're in, when the ability to provide quickly molecules in a way is a unique skills and business model that you have. So if you don't know well Accelerate, I really urge you to go look at what they do, because something you didn't really say, that very few people do what you do, and that's quite a unique proposal.
We need more of it. And by the way, it's a huge TAM. We don't want all of it. We do want to see more capital deployed in the space. It's good for everyone.
Thank you. Thank you, everybody.
Thanks. I'll be in for it.
To chair the panel on products under pressure, a stress test for the future energy system, please welcome Senior Advisor, Economic Impact and Non-Resident Senior Fellow, Global Energy Center, Atlantic Council, Philip Cornell.
Great. Well, good afternoon, everyone, and welcome to this panel this afternoon, Products Under Pressure. I'm Philip Cornell. I'm a senior fellow here at the Atlantic Council and also a senior advisor at the Economist Group on Energy and Sustainability. What's been going on over the past decade? The past decade, the dominant energy conversation has really been about transition. But this year, obviously, we've received a real shock, an abrupt reminder of the continued importance of physical energy systems. This disruption in Hormuz has been a real stress test for the global energy system. And in fact, the system has responded with quite a bit of resilience. Traders scrambled to find alternative pathways, governments have assessed stocks, and hard-hit countries have tamped down on demand. Refiners have showed remarkable flexibility, and companies are forced to distinguish between what is resilience on paper and what's resilience actually look like in real-world examples. And of course, headline markets have been surprisingly calm, but maybe desperate for signs of conclusion and apparently ingesting lessons of success while downplaying a reckoning. But still, millions of barrels of oil and refined products are still missing every day. 20% of LNG cargoes are still off the market. And the crisis revealed that not all commodities behave the same way, and that market effects quickly spread. And yet still the kind of harbingers of severity and signs about the bad things to come, particularly in specific parts of the world, can seem easy to write off, particularly for some market players. So today, I'm very happy to have this panel. I want to answer a couple of big questions. First, what did this crisis reveal about actual resilience of global oil products, gas markets? Where did the system absorb the shock? Where did it show signs of strain? Second, have we become too comfortable? Have we become too comfortable in sort of assuming that global energy markets will always find a way? And as third, as companies and governments sort of assess risk, how will things change going forward? So I'm very pleased to have such a great panel with me. Zeynep Dareli is president of ODAS and vice president of Denarius. Alex Grant is Senior Vice President of Crude Products and Liquids at Equinor. Jason Lemmy is Managing Partner of Hartree Partners. And Clifton White is Commodity Strategist at Bank of America. So thank you all for joining us and for joining me today. Maybe, Alex, I can start with you. You know, I mean, if we only looked at the Brent price, we might think that the system has coped really well. But from your perspective of somebody that's responsible for crude product movements, what's really happening beneath the surface? What's happening at this moment? And what sort of surprised you?
Yeah, thank you. As you say, Equinor is a physical player. We export about 2 million barrels a day of sales of our own equity, 50%, and then of third-party crude. And our customers are the Koreans, the Japanese, the Chinese, the Europeans, etc. And I agree with you, first of all, that the financial markets throughout this have been relatively calm. I also think, as we sit here today, the physical markets are also quite calm. But they haven't been. From where we see it in the physical markets, there's been two occasions where the market has got stressed. Firstly, when it first happened, when the conflict first started, the physical markets in Asia got stressed. They weren't short of crude at that point. In fact, they were receiving exactly the same amount. They could just see the vacuum that was coming afterwards with the strait being closed that was going to hit them. And then they got stressed. And the way we saw that was the difference between the physical prompt price and the financial price. So while we only saw $100 a barrel on the, and we're reading the FT or wherever you get your price from, on certain days, Chinese were paying $200 a barrel.
And I was hearing some cargoes in South Asia, it was like 240 as well, so
yeah,
getting very
maybe
high.
higher. At that point, Europe, the difference between the dated or the prompt and that financial price that we read was blissfully at the same levels, give or take a dollar or two. But then those pricing signals did what they were meant to do, which was they pulled crude towards Asia and they sent signals to the refineries to cut. And that crude that was pulled put Europe under stress. And we saw the same difference there, which again, the price, I can't remember what it was at the time, $95 a barrel, $100 a barrel. Dated was 65 on that. And then the prompt differential, the grade differential, which is a big portion of time, was another 20. So the European refiner was paying $185 at that point. The market was stressed. And we saw signs at that point of the market we were worried about, will the market break down? Because governments and companies started putting in place things that to try and prevent market signals. China, the most obvious, just ban exports. Doesn't matter what price. India, $65 or whatever it is, export tax has the same effect. Other things we saw, vessels that were sailing towards Korea, where the pricing signal said, don't sail it there and refine it, instead resell it into Europe, they carried on sailing it because we want to refine it in our country and produce products for our country. So a little bit of sort of COVID analogy in a way that, you know, when you had PPE during COVID, didn't matter what price people were offering, you kept it for yourself. But as we sit here today, the markets are, physical markets seem relatively calm. There's more oil perversely in the market today than is being demanded. But that, I think, is mainly due to temporary storage releases rather than permanent production balances.
And, you know, just to close off, I want to come over to Alex in just a moment, but when we think about sort of product and oil inventories within some of these most hard-hit countries, and let's forget about China for a moment. I do want to get into what's going on in China. But where do they stand right now? I mean, are they well supplied? Some of these, for example, emerging Asian countries where we've heard about a lot of the big issues?
No, they are lower on inventories, not as bad as they were. But when the crisis first hit, we want to see what our customers want, and we tried to speak to our customers, and they said, unless you've got a cargo to sell us, we're not interested in talking to you. In the last few weeks, we've talked to them more about how they're seeing the long term. A lot of them are saying, we have diversified well. We bought from the Middle East before and maybe from one or two other places. We were short, and so we rang up Brazil, we rang up Guyana, and we were able to attract the cargoes. So we've managed to diversify and we've managed this crisis. But I think my conjecture is it's because there was a lot of oil around that they're able to attract it from all those places. And the reason that there's a lot of oil around is because we're basically putting it all on credit card. You know, there's the Russian and Iranian floating storage monetization. That credit card is maxed out. There's the US exports up 2 million barrels a day, but production isn't. How long has that got before it reaches its credit limit? There's the big question. China has got a huge credit card. No one even knows what the credit limit is or when they'll pull it, but that one could go a lot longer. And then there's SPR. And all of those injections in mean the market is well supplied today, but none of them are long-term steady state.
Great, and I really appreciate that. I think a lot of the conversation really ends up being, yeah, when do these limits run out, right? And what does it look like at that point? Maybe Jason? I lost my mic. Cheers. Hello? Okay, this one's working. Maybe Jason, I think that's a good point to turn to you. Obviously, you know, we're hearing about how really from a logistics perspective, we've managed to paper over and cover a lot of these problems that Alex was talking about. He did mention China. I'd like to ask you about two things. First, from a trader's perspective, how do you see the kind of things that that Alex is talking about? Maybe also, we've talked a lot about oil, maybe a little bit on LNG and the gas market. And eventually, I'd like to hear about China a little bit too.
Sure. Oh, I don't know. I could do my best on China. But and just to give you some perspective on where I'm coming from, I'm at Hartree Partners. We have 5,000 people across 60 offices. We're an American-owned, American-managed global trading company in critical minerals, agricultural products, and energy products, including LNG and crude oil and refined products as well. So, you know, Alex's job and my job to an extent is very similar in that you're trying to take all these micro stories and create a mosaic of what's really going on in the world and how does that jive with what you're seeing with the impression of the big picture. And one thing I also want to point out is if you remember in 2022, we had the Russia-Ukraine war start. And I try to remind myself all the time, that was not over in a day, it's not over now, but the energy impact was felt in multiple waves, right? You had the initial shock where the prices of energy had spiked. Then you had a second one in May, 2 to 3 months later, that was related to policy changes that were a reaction to whether there would be enough natural gas to sustain the market for winter. And then you had a liquidity crisis come August that led to the nationalization of 2 utilities in Europe and putting many of the global commodity trading or energy-related houses on the ropes because of the demands on capital that were required. And I always try to remember that during this whole thing. So to say it's going well or whatever it is right now is just a milepost. And to sort of what Alex was implying is we have to think about what's a stock and what's a flow in this experience, right? So, you know, if you think about what you've lost on the oil and refined products side, what's tight, what's not, why does it seemingly not seem so tight right now, you have to consider how much of the lost supply has been met by lower demand or by stock change, right? And obviously SPRs or commercial stocks have been depleting rapidly, and we've lost demand as well. I don't always think of demand as a deadweight loss. I think of it often as a deferred stock change in some downstream industrial sector that will have to restock with energy at some point in the future. So that in itself is a form of destocking we should be mindful of. To go to the LNG example, the stock versus flow concept kind of works here as well. My rule of thumb in commodities generally is that the harder it is to store something, the more ridiculous the spot price for it can get. And you could see in, for example, U.S. natural gas, the price could be $1.50 per decatherm one day, and it could be $150 the next day. Power you can't store. It could be $5,000 the next hour. LNG, natural gas, is very similar to that. And so the price can correct very quickly, but the information is much less reliable in LNG. What we've seen in the global market is not so much that you have released stocks as much as you have failed to inject inventories for the coming winter. So if you think about the storage cycle for natural gas globally, especially in the US is an exception because it's landlocked. But globally, generally, natural gas is used for primarily heating, and then it's used for industrial processes and power. In the heating market, well, basically you have these peak demands in the winter, and what you want to do is you want to restock throughout the spring and then somewhat in the peak summer. Peak summer, it's very difficult because you have a lot of power demand for cooling globally. So what we've done, what we've noticed in the global market so far is if you look at May data, to the best of our ability that we build up, supply in May, even without Qatar, is equivalent to May last year. Pretty impressive. Demand, however, is higher than it was last year. Only one country has demand lower than it was last year in May, and that was Pakistan, right? So they have destroyed some demand or seized up some industrial processes, or just basically don't have the air conditioning on. But even China, demand is higher year on year in May, right? Just to give you the most recent data point. Now, very impressive on the demand side, kind of scary too, because it is the shoulder season. The supply side has come from several sources. One is we have basically deferred all the LNG maintenance, right? So what you would normally do at this time of year is you would lose supply while LNGs did their maintenance in order to meet the peak summer and the peak winter demand. The netbacks are too good right now to pass up. You would not want to lose that capacity. So that will have to be made up at some point, right? Maintenance has to take place for a reason. If you forego it, you will subject yourself to unplanned maintenances that could happen without schedule, right? And we also are entering storm season in the US Gulf come August or September. Be mindful of that. But the other big contributor to global supply has been the relative relaxation of Europe this time round. So if you looked in 2022, one of the reasons why the price spiked was that policymakers said storage has to be full to 100% no matter what, and that created essentially a squeeze in the market, right? Now, I'm not saying that policy was wrong. You do need gas for the winter. This time round, whether it's a bluff or not, you see much more relaxation. Europe is not lifting a finger to try to build inventories, and they're going to go into their winter probably with 80% full stocks, which is 20% below what they usually like to have. At the moment, that's providing enough sequential supply to keep the market relatively tame on the LNG front. We don't think that's sustainable, just FYI, but that's how the market is kind of met its needs so far. And by the way, if this was going to happen in natural gas, they could not have picked a better time to start closing the Strait of Hormuz, because it is the deep shoulder in the natural gas cycle, right? It's when you have the least amount of demand.
Also thinking about how many volumes were already scheduled to come online this year. New volumes, right?
Right,
So
absolutely.
that also
Good
helps.
point.
And it's interesting, I mean, when you talk about a bluff, because obviously Europe just went through a pretty cold winter. Those stocks were...
We could all be bailed out by El Nino, by the way.
Right.
Just FYI.
Unless we need the cooling, right? So it could be a steamy Asian summer. Great. Clifton, maybe I can come to you. Just thinking about the price shock. So we've heard a little bit about how the physical markets maybe are at the moment more eased than we would have expected. But a lot of people really thought that there was going to be a pretty serious price shock as a result of this much product being off the market. And some of it is a physical market flexibility, but some of it seems to be a disconnect, at least to some degree, between financial markets and physical markets. Can you talk a little bit about what market players have been thinking? Did it correctly assess resilience, or did sort of actors in the market simply decide that this was going to be temporary, and they're just continue to hope that it's going to be temporary?
Yeah, I mean, there's a lot going on, and I'll start with what Jason just talked about on LNG and the policy in Europe. I just published a report this morning titled Euro Gas Traders Waiting for Policy Pivot. We've got basically record net length in TTF contract. It's going to be a struggle. We at least we believe at the bank for Europe to fill. A lot of other investors seem to share that view. But so far, European countries really haven't gotten involved in the markets that they did back in 22. Netherlands did just recently announce a big subsidy, billion euros or so. So maybe that trend is starting to start there a little bit. But I think the world learned a bunch in 22, right? Huge loss of supply, big difference this time. Back then it was mostly gas, Atlantic Basin. This is everything Pacific Basin. And I think the everything is where a lot of folks that I chat with at the bank, we talk to Bank of America, we Bank of America, so lots of clients there from the corporate side to the institutional side, and the focus is typically on what's Brent doing, what's LNG doing. But the petchem, huge impact there, right? About over a third of the seaborne naphtha goes through the strait, about 25% seaborne LPG. We could talk about a third of the world's helium. We could go to fertilizer, all the way down the list, right? It's kind of everything everyone uses every day has some sort of connection to the strait there. Physical markets, you start us off saying, hey, we saw some really kind of panicking physical trades early on. Well, we saw quite a bit of extreme volatility on the oil trading, right? Which made sense at the time because, the first week or so, no one knew. I mean, Trump was saying 3 to 5 weeks, right? 3 to 6 weeks and 50 days. It kept going on. And I think the 100-day was just over the weekend, right? But in the early days, we lost basically 20 million barrels of oil, right? Each week, that's a big deal, right? 150 million barrels per week as that went from 20 to 15 to 12. And, our estimate right now, somewhere in the 3 to 5 million kind of deficit is where we are today. But as y'all talked about already, is that's coming from the stocks, right? So we've taken some of the volatility out of the market, but it's at the expense of stocks. So now we're kind of at a duration game here. How long? We've lasted the first 100 days. We've utilized a bunch of things like SPR and demand destruction, et cetera. Can we make it through another day, 100 days if we have to? And more importantly is, if there's another shock, could we withstand that as well? I mean, you mentioned LNG in 22, right? The actual peak price back in 22 was 6 months after the initial invasion, right? Because we got the shock of Freeport. The market just couldn't handle another event.
And I mean, and to that point, you think the market has kind of, has it internalized the kind of ticking clocks that both Alex and Jason are talking about? Whether it's on sort of the drawdown, whether it's on, the limitations around how fast we
This
can
is
run
the
some
thing
of
that's
runs?
been confounding everyone, is why does the price not respond, right?
Because we're
I have a
wrong.
thought. I don't know. What is your thought, Alex?
Well, first of all, I think we all have to say I've been saying this for about a month now, and so far I've been wrong. And everyone I meet in the physical markets, it's not like I have a contrarian view. everyone has it. So one of the things I'm trying to do is, where are these people that don't think it's going to be tight, that are driving the price at the moment? But I just can't get over the scale of it. You quoted the numbers. We lost peak at 20 and whatever it is now in 100 days, 3 million barrels a day averaged over the year for the 100 days. Peak of COVID, we lost 20 million barrels a day of demand, and average over the year was a couple of million barrels of demand. The other way around, of course, oil price went to zero. Close enough. So the scale of this thing is just so big, and just running the maths, you just think it's got to, the physics or whatever has to add up. But so far, we've been wrong. And I think that a lot who are sitting further away from it and in the financial markets lack or see much less credibility. You've been saying this for ages. Yeah. What did they say at the Milken conference? Who gives a shit about the Strait anyway? To a round of applause. You know, I think there's just a very different aspect.
Yeah, sorry to interrupt, but I like exactly where this is going. I mean, a lot of the question is sometimes, is there too much information in the market, or are they in places that we just don't recognize as much, right? So Zeynep, I think this is a great place for you to come in. Obviously, you know, ODAS is operating in regions that have experienced repeated energy shocks and supply disruptions. So maybe you can talk a little bit about, from your experience, does it expose, let's say, vulnerabilities that, you know, developed economies or people in the markets maybe haven't been thinking about?
Thank you. It's actually a pleasure to be back here at the Atlantic Council after 16 years. Just a little bit of background. I helped coordinate the Energy Forum in Istanbul back in 2009. My God, time flies. But I started my career in trading, and so I can relate to where you guys are coming from. But as someone who's now investing in real industry, in energy production, and you guys are also doing that too, I know. But we see it very differently with boots on the ground. We have investments in Uzbekistan and in Venezuela. And obviously Venezuela has been talk of the town in the past 2 days. There was a special Venezuela forum yesterday. And everybody is very optimistic about Venezuela. And I think what's happened right now is we're shifting back to hydrocarbons. There was too much talk about the electrons and very little information about the molecules. And the molecules had become less sexy in a way. You know, it was more about that. And electrification paradox and where electricity is going to take us. Should we be investing only in that? Now we're coming back and realizing that, you know, with full circle, we definitely need stable base loads. It's not about only SPRs, but the operational liability, sorry, my English there, about the SPRs. How can you turn that into energy? Because ultimately, why we need the hydrocarbons is for energy, and electricity demand keeps increasing. How are you going to help with that? What we see on the ground in Venezuela, just a little background, we invested in an American company back in 2024 that is operating in Venezuela in oil well services. I think I would probably be one of the very few people who has experience on the ground in Venezuela, and it's great to see friends here. And we were only servicing Chevron. And since January 3rd, obviously, we see a change in policy, and we're really grateful for it. And we're trying to increase our investment in Venezuela with great support, but it takes time. So when the opportunity presents itself, you know, such as disruption shocks like this, then you assume that Venezuela is going to take over, and it might take over, but it's going to take time because it's a vertically integrated system as well. You need supply chain, you need chemicals. You need workforce. You need a lot of things for these to come on board. So it's not just, you know, the trading side of it, but in reality, when are we going to see these changes? How are we going to see them? How do you deploy capital in countries that are, you know, seeing these changes? Uzbekistan is an excellent example because the projects there have become bankable. So as investors, we can then answer back to our shareholders because we're a publicly traded company. And we need to make sure that we're able to do that. But you need to deploy your own capital in order to invest in countries like Venezuela, because raising funding is not so easy at the moment. These are a couple of my thoughts.
Great. Sorry. you were about to.
Well, I wanted to chime in on what we find as the puzzling part of the market really not responding the way you would intuitively think to the supply loss, right? I mean, if you had to do a basic risk reward just for oil, for example, you would say I could buy Brent at $90, and if peace broke out tomorrow, it might go to $80 in a day. But if things got worse, it can go to $150. So from a risk reward standpoint, as an investor, it seems like a no-brainer, right? But yet it hasn't really had that experience so far, and that tells me two things. One is it's a crowded thought, and then the other one is, you know, I look at the supply and demand of futures contracts, and one thing I noticed, and you probably did too, Clifton, is shortly after the event took place, you know, the oil market, obviously, if you look at the futures forward curve, the front of the curve spiked, but the rest of the curve did move up, you know, for the next 12, 24 months. And that was a decidedly positive netback versus what producers were expecting to get. And we've seen anywhere from 500 to 700 million barrels of producer hedging hit the market. And the market, the speculators and everyone else has to absorb that 500 to 700 million barrels. And if people were already, let's just say, bought into the, you know, good risk reward idea at the time the event took place, and you have this incremental $1 zillion worth of producer selling, you're going to need some other person to step up to the plate to take the other side of that futures trade, right? And when you don't get that, you get essentially a revolving door of weaklings saying exactly what I just said. It's a great risk reward, and then 5 minutes later, they're stopped out of the futures market and it goes down. And I think a lot of what we've seen has resembled that behavior. The physical market being somewhat, it is very tight. I mean, by any historical measure, this is a very tight market, but it's manageable, all things considered. And I think that has taken some of the incremental fuel away from a potential incremental investor that's been in the market. And there's another part too, which, because so much investment is systematic now, they are dictated by the notional of it. So if you have a $50 barrel of oil, $1 million goes further in barrel count than at $100 per barrel. And the other part is if you're trading a 30-vol product, you can do more of it than if you're trading a 100-vol product. And so I think some of the people who are motivated to be interested on the buy side of the market are necessarily shrunken in the size of the participation they can have. And essentially you have this mismatch in the futures supply-demand balance coinciding with what I think is a temporary sufficiently supplied front of the market. And so you have this issue where we all sit here scratching our heads and trying to come up with reasons why the market is, thinking this is a dumb thing. But to your other point, does that mean the, futures market are a good indicator of what is happening, right? Is a good price determinant. It's a good price determinant for right this second, but is it a good price determinant down the forward curve?
Clifton, what do you think about this? I mean, this idea of just sort of, traders that are sort of tiptoeing up to this trade in the futures market and then sort of coming back from it. I mean, is it sort of a form of complacency about sort of what the future effects are going to be, or are these sort of dynamics holding them back for pricing that in at the moment?
Yeah, I think Jason made some good points there. Especially with the risk capital available to deploy. Prices double, vol, triples. You can deploy a lot less capital, right? I mean, Jason and I, our background's mostly U.S. gas and power. So almost every winter, we're used to 100 vol products. They last for a couple weeks, maybe a couple months, and winter goes away and vol goes away, right? Here
and I've lost another year of my life. Yeah.
Oil markets, even metals, late last year, silver and gold actually got up to that 100 vol level. Now we're seeing oil there, in the early days of this conflict. And that's really reducing the risk capital available to deploy from investors, at least, for sure. One thing I hear consistently across all of our clients, the corporates and institutional, et cetera, everyone's tired. Like this is worn out. If you're trading the oil markets or any of the energy markets today, you basically wake up and say, okay, what tweets did I miss overnight? What's the headline? Did someone agree to maybe do an MOU or not do an MOU? It's that back and forth is driving a lot of the volatility, and I think that's just there's almost no way for an institutional investor to kind of have edge in that. You don't know when that next tweet's coming. You don't know when the response from Iran's coming and all that. So I think that just kind of takes folks out of the market.
Maybe then, Alex, I can move back to you. I'd like to hear sort of how these dynamics of current pricing affects how you think about sort of investments and how you react in the physical market. But I also wonder if you might respond to Zeynep. I think she had this very interesting point about narratives and about sort of narratives around electrons. We've been talking about electrons and electricity, and all of a sudden there's a sort of new view about the importance of hydrocarbons to balance.
Yeah, well, first on the first point, I've been listening very carefully and got a few new pointers to factor in, especially on the sort of the forward hedging, which we've not been thinking too much about, but resonates very strongly. I think just on that, maybe just to add one or two things. I mean, the other thing when we look at a bit further out in terms of if this does resolve in whatever way, the demand picture then, everyone talks about how much will bounce back, but I think there is another piece when it comes to hydrocarbons, and that's bring me on to the electrons, which is, there's that stat, which is, I don't know if it's true, but why let the truth get in place of a good stat, that 90% of people upgrade their house security straight after they've been burgled. And I think we'll see that same dynamic here. I was in India last week. They're talking about moving from 40 days to 90 days of oil storage. Even in Norway, not on the oil side, obviously, but on the diesel side, they've upped their targets. China's been saying that it wants the highest in Asia post this, and Japan's at 260 and China's at officially 180. So there, and all countries are looking at adding more storage. Whether when things pass, they forget when they realize how expensive it is to do that is another matter. But if you just said, well, on average, everyone increases their storage or buys a bit more insurance, because the ones that bought insurance, the Chinese, who bought 500 million barrels the year before, at the time looked very expensive. Now looks like the cheapest insurance out there. If everyone buys 10 days more insurance, 100 million barrels a day, that's 1 billion barrels more of demand. Add on to that the restocking already, even if it opened tomorrow, of 1 billion. You've got 2 billion barrels more of demand there underpinning that long-term price. But move on to the electrons piece. I find that fascinating because a lot of the electron development is policy-led, needs to be policy-led for various reasons, not least because you can't store it, but also on the renewable side because it needs frameworks and subsidies. And there I think you'll get different responses from different countries. Coming back to India, I think their response is not so much electrification. They've actually got a fantastic grid. Their response will be more diversifying away from LPG. I think gas will be the winner. If I look at Europe today, the narrative, and it's the narrative of politics that then puts the money behind it, today is this is why we need to electrify more and build more wind farms, etc. And I think if it ends today, I think that will be the prevailing narrative. But if this continues and we do get higher prices, I think European politicians will be forced to admit or realize even, not just admit, realize that 82% of European energy is not electricity. And that 82% actually counts as well. At the moment, there are more electricity departments than there are energy departments in Europe. But that, of course, we'll see it through inflation and cost of materials and everything else. So that narrative may change, but at the moment, the narrative for Europe is good for electrons, good for renewables. And as for the narrative in the US, I'll leave that to some American colleagues or panelists.
Well, I think you hinted at a few things that bring us into the last part of this conversation, which is what we have to look forward into the future. What's going to be the impacts? I mean, I think what you discuss here is what sounds like a whole bonanza of infrastructure build that is going to be in the pipeline, whether it's to electrify or whether it's to build some of that insurance. So maybe, Zeynep, I don't know if you have some comments on that, really, about where these new investments are going to go for things like storage or transmission or these kind of areas, and what is insurance? What does it mean to buy insurance in the kind of context where you're working?
Thank you for that excellent question. And all of the remarks have been quite wonderful. And I'd like to thank the audience for listening to us during lunchtime, because I realized that we're in between your
There'll
lunch.
still be some left, by the way, when we're finished, so don't worry.
It will be a few minutes. But actually, I really believe that, this policy-led conversation has been mainly geared, spearheaded by Europe. And I have a lot of respect for that. But there is also reality on the ground. And electrification comes at different costs. And that's something that I would like to mention. Electric vehicles, for example, they are fuel dependent. In the previous combustion engine, the current combustion engine vehicles are fuel dependent, whereas the electric vehicles are critical minerals dependent. And this is going to be another bottleneck that we will need to think about. So friend-shoring critical minerals mining and operations and refining is going to be a major issue. I'm not saying it's just because we are in critical minerals mining or refining, but this is going to be an important factor. This is because China has majority of those resources. And yes, we will definitely have to increase the insurance supply, and we'll need to build more storage. We'll need to be able to use the stored oil, stored LNG. So regasification units are going to be really critical, but also you're going to need much more than that. It's not only that, but I think, for example, one of the things that we didn't talk about is grid stability. And there will definitely be increased electricity demand. They were talking about it in the previous one of the previous panels. AI, the hyperscalers, they're coming on board. They're taking up a lot of the new grid capacity, which means that renewable energy. So there are two players that are going after additional grid capacity that need that grid capacity. And are nations going to spend money on the transmission lines? Because, for example, in certain countries, apart from the US, the transmission lines are owned and operated by governments. Are we going to see changes there where private entities would be allowed to come in? But then that pricing is going to change, and it's going to have effects on the end users and manufacturers. These are all issues that we need to start thinking about, and thinking about in a global perspective, while making sure that obviously each country is able to protect its manufacturing base and its own industry. So energy is very much intertwined with policy, but also economic development. And none of these are going to happen alone. And we have definitely seen that this is just yet another shock. But we will keep on having shocks. And I was listening to a friend of mine who was saying, those who sit on the boards of companies, it's their responsibility to predict what will happen next. It's like, almost you're a fortune teller. Not really, but it's almost like that. But where is the next crisis going to be? And how am I going to be able to invest in that and position myself for my shareholders so that they will be able to benefit from it while also serving the countries and the people that you're operating in?
Yeah, I mean, this whole question, obviously, both of you hit on this sort of policy question that's going to be really defining, how countries position themselves to have a more resilient posture, right, against future crises. And God knows where the next ones come from, right, because we're hitting a world where those are multiplying. But maybe I can follow up with you. If we're talking about investing into resilience or investing into what might have been considered inefficient on a quarter-to-quarter basis under previous investment cycles, who pays for it? I mean, does it land onto operators like you? Are there systemic cost-bearing?
I think there needs to be systemic cost-bearing mechanisms in place, because this switch to renewables has been very much, it's been cost-borne by governments and public. It's been public and private partnerships. I think we need to rethink this insurance policy in hydrocarbon space and allow for companies to develop these tools. For example, we as a company, we have investments in natural gas, in coal, in thermal, and it's currently very, very difficult to find financing for thermal power plants. But I think this is something that needs to be rethought as well, because if you're operating in an environmentally sensible and correct way, then this is also another form of base load that creates stability for a country.
Absolutely. Clifton, maybe then I could finish with you and then finish out here. From sort of an investor and a market perception, So as we look forward to some of these new either requirements, thinking about what makes a bankable project, or we think about risks that the market is going to have to contend with, right, under something that might look like a structurally different energy market, how do you think the market is going to have to reassess those kinds of calculations? And do you think it's ready to do it?
I mean, the beautiful thing about energy is, whether we're talking gas, oil, power, there's disruptions across that value chain, and that drives the volatility. And so whether it's a weather event, a geopolitical event, you mentioned hurricane season, I'm down in Texas, hopefully we skate through another one and don't impact LNG, which, over 25% of global LNG capacity is right along basically a 400-mile stretch from, basically Corpus to New Orleans these days, right? So we haven't had to deal with that yet, right? So, we're concerned about geopolitical storms plus, tropical storms. But higher volatility, in theory, should help improve the investment case for assets, right? All these physical assets are real options, and, important part of any option valuation is the volatility component, right? Talking to clients, it seems like there could be too much volatility at times that kind of inhibit, developing. In this case, you mentioned shale producers might be hedging here in the U.S. Talking with clients, that seems like that's probably a fair guess. But what we're seeing, put out a report last week that U.S. shale oil is not taking the Iran bait. So we're not. We might see the hedging, but we're not really seeing.
Right. I mean, how many months into this are we, and what are Permian rig counts? They're the same.
Right. There's been a pretty good relationship. We go back, the entire shale era. Go back 10, 15 years at this point, and we use 10 weeks as sort of the lag between you get a price signal and you start seeing increased activity. That slope's kind of changed over the years, but we're now past 10 weeks of this event starting. And we've seen high oil prices 10 plus weeks ago, and rig count barely has moved. And to the extent it has moved, it's been from the private drillers. The public drillers, those that made it through COVID have been consolidated. Capital discipline, right? You could outspend cash flow last decade. You can't do it today. So the publics just haven't taken that bait yet. The privates, though, are looking at it and say, shoot, end of last year, early this year, we were looking at, pretty terrible crude oil pricing out the curve, and they get an extra 10 or 15 bucks in Cal 27, Cal 28, they're willing to add a rig or two here or there. And so that's what we're seeing, but we're not seeing the big majors make a big shift, at least on shale oil yet. So the volatility, we think is having a big driver of that.
So capital discipline and risk assessment, risk appetite obviously is driving some of these. But maybe Jason, thinking about this, if we're thinking about a new world, right, where there's more volatility, there's more kind of geopolitical disruption, what kind of asset classes become particularly attractive?
First of all, I want to say I don't want to be on any board now if I have to predict the future. Look, I would say, and if you're in trading, it's cliche, but storage is one of the best parts of the supply chain to deal with disruption. How you build more is a question of pricing for that storage. In other words, as an investor and a user of storage tanks, whether it's for any commodity we ship, will depend on what we perceive the intrinsic and extrinsic value of that storage is. And I can tell you right now, it does not pay to build that storage, particularly in oil and maybe barely in liquefied gas. And so it is, so two things go into this. It's price and policy, right? And the surefire way for many jurisdictions who are suffering from demand loss now are going to be ways to create their own independent storage reserves for refined products or whatever it is. And that's going to have to be some sort of policy
Public
solution.
storage.
I would think it's going to have to be. I mean, look, in Europe, they have compulsory stocks for private companies. I'm not sure how they get funded, right? There's going to, every time policymakers say we should do more of this, and the private sector says, great, we'll love to do it. What are you going to give me, right? And so it is going to be a back and forth. And many countries, look, the U.S. generally is going to fare fine in this because we have an unbelievable midstream sector with, robust storage for basically the whole world. From an export standpoint, we can cushion a lot of the supply disruptions if there's an oversupply, certainly. But in other markets, they're just not nearly as mature on the midstream side, whereas that's basically where you need it. And I don't know why the U.S. I mean, the U.S. has very deep capital markets, so the midstreamers can borrow at very cheap rates. The equity markets price their equities at low yields, and so therefore they can either issue equity or get debt very attractively, and that's probably why the private sector is built out so heavily in the U.S. But you have to create the same thing in these other countries. That's going to be hard. And you have a big problem here, not in the U.S. necessarily, or even in Europe, but incumbent governments tend not to do well in high-price environments.
Well, just to finish off with my 2 cents about storage here, I find it remarkable, obviously, when you say, look, there's no money in building storage. We all agree that those are necessary. And, I started my career at the IEA where we were managing both, strategic petroleum, but also product stocks, particularly in companies in places like Europe that had privatized over the course of the 90s. It becomes like a cat and mouse game to chase down whether they're actually holding the inventories that they're required to by law. And so eventually we need to figure out some kind of plan and some kind of way to manage those stocks in a way that's sort of reliable, but at the same time that they're paid out. So we'll end it there. I really appreciate having the panel here with me. Zeynep Dorelli, Alex Grant, Jason Lemmy, and Clifton White. Thanks very much for joining me, and thanks to all of you.
Ladies and gentlemen, thank you for attending this morning's sessions. Please take time to enjoy your lunch in the lobby. This room will resume its programming at 2:45. Thank you. To deliver this afternoon's keynote remarks, Energy and the Recovery in Syria, please welcome Minister of Energy of the Syrian Arab Republic, His Excellency Mohammed al-Bashir.
السيدات والسادة أصحاب المعالي والسعادة الحضور الكريم يسعدني أن أكون بينكم اليوم في واشنطن للمشاركة في المنتدى العالمي للطاقة وأتوجه بالشكر إلى المجلس الأطلسي على هذه الدعوة وعلى جهوده في تعزيز الحوار الدولي حول أمن الطاقة والاستدامة والنمو الاقتصادي.
Ladies and gentlemen, Your Excellencies, distinguished guests, it is a pleasure to be with you today in Washington to participate in the Global Energy Forum. I would like to thank the Atlantic Council for this invitation and for its efforts in promoting international dialogue on energy security, sustainability, and the economic growth.
تأتي مشاركتنا اليوم في مرحلة جديدة من تاريخ سوريا، مرحلة تتجه فيها البلاد نحو إعادة البناء والانفتاح الاقتصادي وتعزيز الشراكات الدولية، ونحن لا ننظر إلى هذه المرحلة باعتبارها استعادة لما فقدناه فحسب، بل فرصة لإعادة تعريف موقع سوريا كشريك فاعل ومركز إقليمي حيوي يسهم في أمن الطاقة الإقليمي والدولي.
Our participation comes at a new stage in Syria's history, a stage in which the country is moving towards reconstruction, economic openness, and the strengthening of international partnerships. We view this stage not only as a recovery for what we have lost, but also as an opportunity to redefine Syria's position as an active partner and a vital regional hub contributing to regional and international energy security.
لقد تأثر قطاع الطاقة السوري بشكل كبير خلال السنوات الماضية، إلا أن إرادة السوريين كانت الأساس الذي ننطلق منه اليوم نحو مرحلة جديدة من التنمية والاستقرار.
The Syrian energy sector has been significantly impacted in recent years, but the will of the Syrian people has been the foundation upon which we are building today toward a new phase of development and stability.
ومن هذا المنبر أود أن أؤكد أن سوريا تنظر إلى الولايات المتحدة كشريك مهم في مجالات الطاقة والتكنولوجيا والاستثمار والابتكار، ونؤمن بأن التعاون الاقتصادي وبناء الشراكات يمثلان أفضل السبل لتعزيز الاستقرار وتحقيق المصالح المشتركة.
From this platform, I would like to emphasize that Syria views the United States as a vital partner in the fields of energy, technology, investment, and innovation, and we believe that economic cooperation and partnership building are the best ways to enhance stability and achieve shared interests.
السيدات والسادة، لقد اختارت سوريا أن تجعل من قطاع الطاقة بوابة رئيسية لانفتاحها على العالم، وخلال الأشهر الماضية نجحنا في بناء شبكة واسعة من الشراكات مع شركات ومؤسسات دولية وإقليمية رائدة في رسالة واضحة تؤكد أن سوريا عادت وجهة جاذبة للاستثمار.
Ladies and gentlemen, Syria has chosen to make the energy sector a key gateway to its openness to the world. Over the past few months, we have successfully built a broad network of partnerships with leading international and regional companies and institutions, sending a clear message that Syria has once again become an attractive destination for investment.
واليوم تشهد سوريا عودة عدد كبير من شركات الطاقة العالمية الكبرى إلى السوق السورية، فقد أطلقنا مسارات تعاون وشراكات استراتيجية مع الشركات الأمريكية شيفرون وكونوكو فيليبس واتشكي ان انرجي وجي اي، إلى جانب شركات عالمية كبرى مثل توتال وسيمنز وأنسالدو، فضلا عن مناقشات متقدمة مع شركة إيني الإيطالية وعدد من الشركات الأوروبية والعالمية الأخرى الراغبة بالمساهمة في مشاريع الطاقة السورية.
Today, Syria is witnessing the return of several major international energy companies to the Syrian market. We have launched strategic cooperation and partnership agreements with American companies, Chevron, ConocoPhillips, HKN Energy, and GE, in addition to major global companies such as Total Energies, Siemens, and Ansaldo. Furthermore, we are in advanced discussions with the Italian company Eni and a number of other European and international companies interested in contributing to Syrian energy projects.
كما شهد قطاع الطاقة السوري توقيع واحدة من أكبر الاتفاقيات الاستثمارية في تاريخ سوريا الحديث من خلال الشراكة مع شركة UCC هولدينج وشركائها الدوليين والإقليميين باستثمارات تصل إلى 7 مليارات دولار أمريكي لتطوير مشاريع استراتيجية في مجالات الكهرباء والبنية التحتية والطاقة المتجددة، إضافة إلى شراكات أخرى مع شركات تركية وخليجية وإقليمية.
The Syrian energy sector has also witnessed the signing of one of the largest investment agreements in modern Syrian history through a partnership with UCC Holding and its international and regional partners. This agreement involves investments reaching $7 billion to develop strategic projects in the fields of electricity, infrastructure, and renewable energy, in addition to other partnerships with Turkish, Gulf, and regional companies.
السيدات والسادة، إن رؤيتنا لا تقتصر على إعادة تأهيل البنية التحتية الوطنية، بل تمتد إلى تعزيز الترابط الطاقي الإقليمي، فموقع سوريا يضعها عند نقطة التقاء مهمة بين مناطق الإنتاج الرئيسية في الخليج والعراق والشرق المتوسط وبين الأسواق الإقليمية والدولية.
Ladies and gentlemen, our vision extends beyond simply rehabilitating national infrastructure. It encompasses strengthening regional energy interconnection. Syria's location places it at a crucial crossroads between major production areas in the Gulf, Iraq, and the Eastern Mediterranean, and between regional and international markets.
ومن هذا المنطلق نعمل مع شركائنا على تطوير رؤى جديدة للتكامل في مجالات النفط والغاز والكهرباء والبنية التحتية المرتبطة بالطاقة، بما يعزز أمن الطاقة والأمن الاقتصادي الإقليمي، كما يشكل التعاون مع جمهورية العراق الشقيقة بما في ذلك جهود تطوير آليات نقل النفط ومباحثات إعادة تأهيل وتشغيل خط أنابيب كركوك بانياس، جزءا من رؤية أوسع لتعزيز الترابط الإقليمي وخدمة مصالح البلدين.
From this perspective, we are working with our partners to develop new visions for integration in the oil, gas, electricity, and related energy infrastructure sectors, thereby enhancing regional energy and economic security. Cooperation with our sister nation, the Republic of Iraq, includes efforts to develop oil transportation mechanisms and discussions regarding the rehabilitation and operation of the Kirkuk-Banyas pipeline, form part of the broader vision to enhance regional interconnection and serve the interests of both countries.
إن هذه الشراكات لا تمثل مجرد استثمارات اقتصادية، بل تعكس تحولا حقيقيا في موقع سوريا على خريطة الطاقة الإقليمية والدولية، وتعزز الثقة بالدور الذي يمكن أن تؤديه سوريا في دعم أمن الطاقة والاستقرار الاقتصادي خلال العقود المقبلة.
These partnerships are not merely economic investments. They reflect a genuine shift in Syria's position on the regional and international energy map, and bolster confidence in the role Syria can play in supporting energy security and economic stability in the coming decades.
السيدات والسادة، تنسجم أجندة هذا المنتدى مع رؤيتنا الوطنية التي تنظر إلى الطاقة باعتبارها أحد أعمدة الأمن الاقتصادي والاستقرار الإقليمي، وهدفنا لا يقتصر على إعادة بناء ما تضرر، بل يتجاوز ذلك نحو بناء قطاع طاقة حديث ومرن ومستدام.
Ladies and gentlemen, the agenda of this forum aligns with our national vision, which views energy as a cornerstone of economic security and regional stability. Our goal extends beyond simply rebuilding what has been damaged. It aims to build a modern, resilient, and sustainable energy sector.
وترتكز رؤيتنا على 4 محاور رئيسية. أولاً، إعادة تأهيل وتطوير البنية التحتية لقطاع الطاقة وفق أحدث المعايير العالمية.
Our vision is based on 4 main pillars. First, rehabilitating and developing the energy sector infrastructure according to the latest international standards.
ثانياً، تعزيز أمن الطاقة وتنويع مصادرها وتحسين كفاءة الإنتاج والنقل والتوزيع.
Second, enhancing energy security, diversifying energy sources, and improving the efficiency of production, transmission, and distribution.
ثالثاً، بناء شراكات دولية طويلة الأمد تسهم في نقل التكنولوجيا والخبرات وتوفير التمويل والاستثمار.
Third, building long-term international partnerships that contribute to the transfer of technology and expertise and provide financing and investment.
رابعاً، ترسيخ موقع سوريا كممر إقليمي للطاقة وحلقة ربط موثوقة بين مصادر الإنتاج وأسواق الاستهلاك.
And fourth, establishing Syria's position as a regional energy corridor and a reliable link between production sources and consumer markets.
وقد بدأنا بالفعل بتحويل هذه الرؤية إلى واقع من خلال إعادة تأهيل وتشغيل عدد من المنشآت الحيوية في قطاعات النفط والغاز والكهرباء، وتحسين كفاءة محطات التوليد، وإطلاق مشاريع جديدة في مجالات التوليد الكهربائي والاستكشاف والطاقة المتجددة.
We have already begun to translate this vision into reality by rehabilitating and operating a number of vital facilities in the oil, gas, and electricity sectors, improving the efficiency of power generation plants, and launching new projects in the fields of electricity generation, exploration, and renewable energy.
كما نعمل على تطوير الأطر المؤسسية والاستثمارات التي توفر الشفافية والثقة للمستثمرين وتدعم بناء شراكات طويلة الأمد.
We are also working on to develop institutional and investment frameworks that provide transparency and confidence for investors and support the building of long-term partnerships.
السيدات والسادة، رسالتنا للمستثمرين واضحة. إن أبواب سوريا مفتوحة أمام الاستثمار المسؤول والشراكات طويلة الأمد.
Ladies and gentlemen, our message to investors is clear. Syria's doors are open to responsible investment and long-term partnerships.
ورسالتنا للشعب الأمريكي أيضا واضحة. إن سوريا تتطلع إلى المستقبل وتؤمن بأن التعاون الاقتصادي والعلمي والتقني قادر على بناء جسور جديدة من الثقة وتحقيق منافع مشتركة لشعبينا وللمنطقة بأسرها.
Our message to the American people is also clear. Syria is looking to the future and believes that economic, scientific, and technological cooperation can build new bridges of trust and achieve mutual benefits to our two peoples and the entire region.
وختاما، إننا ندعو العالم أن لا ينظر إلى ما مرت به سوريا خلال السنوات الماضية، بل إلى ما يمكن أن تصبح عليه خلال السنوات القادمة.
In conclusion, we are not asking the world to look at what Syria has endured in recent years, but rather at what it can become in the years to come.
سوريا اليوم ليست قصة تعافي فحسب، بل قصة نهوض، وليست ساحات أزمات بل أرض فرص، وليست عبئا على المستقبل بل شريكا في صناعته. ونحن نتطلع إلى العمل مع شركائنا في الولايات المتحدة والعالم لبناء مستقبل أكثر أمنا واستدامة وازدهارا في قطاع الطاقة.
Syria today is not just a story of recovery, but a story of resurgence. It is not a battleground, but a land of opportunity. It is not a burden on the future, but a partner in shaping it. We look forward to working with our partners in the United States and around the world to build a more secure, sustainable, and prosperous future in the energy sector.
شكرا لكم جميعا لحسن الاستماع.
Thank you all for being here.
To chair the next leadership conversation, please welcome Director of the Iraq Initiative at the Rafik Harari Center in Middle East Programs of the Atlantic Council, Victoria J. Taylor.
And thanks to the minister for his excellent remarks, really providing a great outline for the government's vision. Now I'm going to turn to a conversation with Syrian Petroleum Company CEO Yusuf Kablawi. Appointed by President al-Shara in November 2025 as President and CEO of SPC, Mr. Kablawi is a seasoned oil and gas executive with nearly 3 decades of experience leading large-scale projects across the energy sector. He's worked at McDermott International, Honeywell, and a number of other positions in the sector and throughout the region. Now, Mr. Kablawi, we were pleased to host you in March at the Atlantic Council along with our partners at the U.S. Syria Business Council for a symposium on the Syrian energy sector. It was a standing room only event, and I think a clear demonstration there's quite a bit of enthusiasm for Syria's energy sector. Let's start with the upstream first. You've signed a number of MOUs with international investors over the past year, and you've really been working along with the minister to send a signal that Syria is open for business. By some estimates, these preliminary deals total up to $28 billion. How are you going to translate these MOUs into contracts? And in turn, what does this mean for production, and how are you going to get production moving?
Thank you, Victoria. Pleasure to be here, and thanks for the Atlantic Council sponsoring the energy forum here in the capital of the country, in Washington, D.C. It was our pleasure. As the Minister of Energy, Mr. Mohammed Bashir, mentioned, Syria is opening for investment, for all kinds of investors. To go back to your questions about the MOU we signed, a bunch of MOU we signed for the energy sectors, the fast track we are processing now in the Syrian Petroleum Company, we are converting those MOUs to contract is really in high tracks. So, and we are not talking, we're actually outside currently. First MOU has been converted to contract last month, or the previous month, sorry, it was in April, with Saudi company. So they are now mobilizing their team in the center of the country to increase the production of the gas. The second one, which is the major global company here in the United States of America, which is ConocoPhillips, a joint venture with Novaterra, who will sign the contract on 16th of June. This is the biggest contract we are going to sign since we established the SPC company. Of course, currently the contract under the board for discussion. Hopefully within 2-3 days will be ready, and then we are going to sign it next week. The other things also, in additional to the MOUs, or let's continue MOUs and then I'll move to something else. We have the Chevron, as His Excellency Bashir mentioned. With Chevron, we signed it for the block number 1 for the offshore investment, oil and gas exploration, Total, Qatar Energy, and ConocoPhillips together for block number 3. And we are working now day and night to convert that MOU to contract. And hopefully before end of July, there is something we'll see the final discussion about the term and conditions. Part of those MOUs, there is major companies we have contracted with them in the old regime. They removed the force majeure and they are coming back now strongly to their block, to their assigned block, like Gulf Sand, for example. Gulf Sand mobilizing already, and hopefully next week or the week after, we are going to kick off the site activity work itself. There is American company ABR as well. Petro-Canada, they are also in discussion with us. HKN has been, I forget that one, it's an important one. HKN Energy, it was MOUs, we converted already to contract, already demobilizing, and tomorrow, 8 o'clock morning, they are going to start operation at the field. So all those kind of things, it is not easy. It is not easy job, especially SBC established back in October. So from October to now, almost 8 months or 7 months, and we did that much progress. It's really appreciated for the team itself, for the collaboration between us and the international companies, and for the effort that the Ministry of Energy provide in order to give us the roadmap in this regards.
And so then to follow up, when you were in March, you were kind of listing out for us some of your production targets. What are the new targets, and do you think you're on track to meet them?
Yeah, so we talked about that back in March. You're right. As maybe Mr. Bashir mentioned during his speech, currently our focusing is to increase the production, oil production and gas production. Gas production for the electricity, for the people, oil production for the refining and for the oil product, and also to sell out the heavy oil outside and then bring in new. So far, we are producing almost 130 times before we take over the northeast of the river. So I don't like to give numbers, but by end of this year, the number will be amazing or number will be enough, more than enough, to swipe the heavy oil with the light oil we need for the refinery. By end of next year, definitely we are going to have more stability for the production. By end of this decade, which is 2030, by 2030, I see 1 million barrel per day. I can see that one in 2030 with those kind of cooperation and joint venture with American companies and others. There is like almost more than half of the country ready for exploration. There is a brand new virgin blocks never touched before, ready for exploration. So those contain huge number of reservoir, required really big names to enter the market, like my favorite, the tier 1 company, to enter the market and investment in order to get those oil from under the ground. So I can see that, yeah.
So I'm glad you mentioned offshore. Obviously, a number of MOUs signed for offshore exploration. Some of the major U.S. energy companies are sticking to offshore, and they're not coming onshore. What are you doing to convince those companies that they need to look onshore as well?
Yeah, actually, maybe the message was not correctly translated to you, Victoria. They talked to us about onshore as well. And to prove that, last night I got a dinner with Chevron, and they got the first block for offshore, and they are ready to invest in the onshore as well. Not only onshore exploration, onshore midstream. They are thinking about that as well. So ConocoPhillips they invest in onshore, and now we sign with them the offshore block. So those big companies like Chevron, Conoco, Exxon, and BP is now, I think with BP, by the way, British Petroleum as well. So they look for like what is the best investment that they can, enter the country with. Offshore plus onshore. Onshore is easier. Offshore costs a lot, take more time. That's why they need revenue to generate from the onshore in order to invest in the offshore. So both opportunities for offshore and onshore are open for all the companies. Yeah, and we're pushing in that direction, by the way, for both.
On both. Okay. And so I'm glad you mentioned domestic consumption and local energy demand. Understandably, after years of war, the electricity infrastructure is damaged. Some of the power plants don't have enough fuel to really operate. And I know that, throughout the country, some Syrians are not really getting as much electricity, many hours of electricity every day. Can you talk a little bit about how the SPC is working to help meet this electricity demand and how quickly you think you can help get more power out to the Syrian people?
Yeah, that's actually critical questions here. Currently, we are in much better situation than before. I think during the conversation with the U.S. Department of Energy, Mr. Wright, yesterday, His Excellency Al-Bashir mentioned that before it was 2 to 3 hour maximum per day, the number of hours provided to the customer for the citizen of Syria. Currently, more than 10 to 15 hours. So there is huge improvement to provide those kind of facility and services. SPC is the main provider for the electrical power stations. So there is number of cubic meters coming from our land. There is number of cubic meters imported from our neighbors. So both are enough to run the current existing power plants. The vision which we put here together with the Minister of Energy, with the Ministry of Energy, is after UCC Power Holding, the complete the construction of the 4 power plants. There is, as you know, there is 4 power plants, double cycle, and there is 1 solar. So after we complete those one, they need more gas to run those power plants. That's why we take advanced step in order to increase the production from the land. That's why ConocoPhillips, they are going to sign next week. Addis from Saudi Arabia already mobilizing. Both companies working mainly for the gas in order to achieve the number of quantity that need to run the future power plant we are going to construct. Here we have also the Prime Minister of Energy, Mr. Ibrahim, is following up with all those party, mainly the international companies. In order to achieve to that number, we have kind of forecast and projection how many cubic meter we need really for the existing power plant plus the future power plant. We calculate the number. This is the number. We have the number. Now our target is to achieve that number. Maybe we will be shorter a little bit from our land, and that's why we need to continue importing gas to put the demand behind us.
Yeah. Well, you mentioned in March, projects to rebuild some of Syria's refining capacity. How are those projects moving forward?
Yeah, the refinery currently, as mentioned previously and in multiple meetings, we have 2 refineries, as you know. So there's one almost dead in the center of the country. There is one operated good, not very good, but is okay, which is in the shore, Banias. This will shut it down by July. So next month will be shut down completely for very major maintenance. It will be huge major maintenance for that refinery in order to increase the oil product capacity production from that refinery to the maximum number, which is 130 barrel per day. Currently, that refinery producing 95. So it will be like around 40,000 more barrel per day by October. So we'll shut down in July, and then we open again in October. Those will support us in order to reduce importing oil product from outside. In parallel, we are working with our neighbor and to construct brand new refinery close to the desert, bad outside of the density of residential area and commercial. So that one will produce around, the plan is 200,000 barrel per day. So 200 plus 130, we are talking about 330, 340. So more than what we need for the country. That's why Syria will be exporting oil product, hopefully within 3 years from now. After we finish the construction of the new refinery, we'll have extra quantity of the refining products, so we can export to our neighbor, Jordan, Lebanon. We have a lot of neighbor without oil. They are not oil countries, so we can sell those extra product to them. So this is the plan. Now we start the discussion. Hopefully the FEED, the fundamental engineering design, will start in Q3 this year. So from that date, you have to count 3 years in order to finish the commissioning of that new refinery and start producing the oil.
Well, these are all a lot of ambitious targets. And so if I were to summarize, it seems like more of everything is really on the agenda right now. Obviously, one of the major themes of this conference and the global energy market is the Iran war and the impact of the closure of the Strait of Hormuz, which has really, very dramatically highlighted one of the major vulnerabilities in the global energy market, and particularly for many of the producers in the Middle East, including Iraq, which I also work on. I think this has understandably prompted a lot of conversations about how to develop more export routes. And of course, we heard the minister outline a vision of Syria as an energy corridor. How can Syria become an alternative hub to market or an energy corridor? What projects are you going to prioritize to actually make this a reality?
Yeah, so this is a really important topic here. And actually, it's become a hub now. So we started with exporting the oil from our neighbors, mainly Iraq. Unfortunately, the war which has happened now in the Gulf area and Hormuz give us that chance and that opportunity to be the hub or the exported land for Iraqi fuel oil and oil. Syria, it was before like that. There is major pipeline between Kirkuk and Banyas, which has been destroyed after Iraqi war, and the previous regime, they continue that destruction for that pipeline. So currently, the plan is to relive that lines and put more investment in that line and rebuild it again from scratch, all the way from Kirkuk to Banyas, around 1,200 kilometers, really long destination. So it'll be like a major distribution line for Iraq, or transportation line for Iraqi crude oil and plus the fuel oil through Syria all the way to Tartus and Banyas for exporting outside the country. This is the vision, which just to let's say, reformulate that, as His Excellency Al-Bashir mentioned, and yesterday also we discussed with Mr. Wright, the U.S. Department of Energy. Our vision really supported by U.S. Department here of Energy, by U.S. government. Syria need to be more active in order to consider it as a hub for oil and gas distribution. In addition of that, our neighbors, like from Egypt, from Jordan, not only the oil, the gas pipeline, the Arab gas pipeline, which is the main gas pipeline over all the country, over all across the country, from all the way from Egypt, from north of Africa, passing with the Middle East, all the way to Turkey. This is life. We are using it now to transport gas to Syria to feed our power plants. And in the future, after Chevron and Conoco, they finish their project, we'll have extra gas. So we'll use that pipeline to pump it up with our Syrian gas in order to distribute it outside the country through Turkey. Plus, our vision also is to have an offshore platform to distribute the offshore gas, which we are going to with our joint venture companies helping us to explore those and use that one, that hub, to distribute our oil gas from the sea to oil and gas from the sea all the way to the Europe and our neighbors. There is also Lebanon, our neighbor, they need the gas. So there is a pipeline we are building now, or actually already built, but we are doing kind of intelligent bidding for that pipeline in order to feed Lebanon with the number of cubic meter to their power plants. So we are working in that very, very important subject, which is to be a hub for oil and gas distribution. There is oil pipeline distribution from Iraq to Banias. There is Arab gas pipeline. There is a connection between Syria and Lebanon. There is multiple projects really we are working on that. Plus the offshore platform and the offshore terminal, which we are going to expand and support in the future, near future, to be in order if you need to bring liquid natural gas, liquefaction natural gas from other countries. So maybe we can regasificate that gas and use it for natural gas distribution as well. So we are working on that very heavily.
And so, what are the obstacles to achieving this vision? Just off the top of my head, I would think funding and resources would be one of the challenges to bringing all these projects to fruition right now. Is there funding behind all of these pipeline projects?
Now, for the Arab gas pipeline, there is a small piece, like between two cities, Aleppo and Homs, like around 185 kilometer. This is EBC. This is awarded for EBC company. We are going to fund this one ourselves. So SPC, Syria Petroleum Company, they have the money to construct, commission, and procure that new pipeline, not a new pipeline, the extension, or to complete the Arab gas pipeline. Currently, that Arab gas pipeline coming from Egypt all the way to Turkey, that B is not yet there, so there is bypass, 24-inch. So we are going to remove that bypass and continue the 36-inch construction for that pipeline, and this is funded by the Syrian Petroleum Company. The heavy fund we need, or the budget that we need really for the Kirkuk-Banias pipeline, it will be like kind of BOT deal, build, operate, and transport. So the company now we receive an offer from American companies, from GCC companies. I don't like to mention the name. And yesterday, during our dinner with other friends also here in Washington, they are interested in that pipeline. So we are going to pick the best deal that fit Syria Petroleum Company, in order to construct that Kirkuk-Banias pipeline. The Kirkuk border, it will be under Iraqi responsibility. From the border all the way to Banias, it will be under Syrian responsibilities. And the vision from the head of the pyramid, which is the President Ashara, and all the ministers, including His Excellency Al-Bashir, is to really support that idea, support that vision, to use Syria as a hub for distribution.
And is this, maybe you could talk a little bit more. I've seen President Al-Shara refer to 4 Cs, 9 corridors. Beyond pipelines, how much bigger is this vision? And does this involve logistics and other infrastructure?
Yeah, I think just to reaffirm what we said, currently we are using trucks from Iraq to transport the Iraqi fuel oil through the Syrian land all the way to the port. When we start the process 2 months ago, we were not able to receive more than 200 trucks. Currently, we are receiving 1,000 trucks. Each truck contains 220 barrels, so almost 220,000 barrel per day transport the fuel oil from Iraq through Syria. This means we invest a lot in the infrastructure in order to increase the capacity and accept more crude oil and fuel oil from Iraqi. And we are continuing doing that. So this is one very important thing. The road itself, the road that trucks drive on, the security, the cameras, the gate in, gate out, passport control, all these kinds of logistics and facilities within 2 months since we start oil transport from Iraq, which is back in March, until now, the beginning of June, We increased the capacity from 200 truck to 1,000 truck. This is a sign how we are working in SPC to support the vision.
Yeah. Well, this is a very ambitious agenda, and we're always delighted to hear from you and have an opportunity to hear from the minister as well. I know there's a number of energy companies here who are already in Syria, a number who are considering Syria. And I hope that this conversation has been useful to everyone in highlighting some of the opportunities and the challenges. And of course, we wish you the best of luck as you continue to move ahead. And really, this is upon powering the economy, providing power to the people, and ensuring that Syria's economic development can continue to support its transition.
Thank you, Victoria. I appreciate it. Thanks for the opportunity.
Ladies and gentlemen, please retake your seats as this afternoon's programming is about to continue. Thank you. Ladies and gentlemen, please retake your seats and silence your cell phones. Thank you. To chair the panel on the infrastructure backbone of energy security and regional energy cooperation, please welcome the Director of Research and Programs of the Global Energy Center Atlantic Council, Reed Blakemore.
All right, good afternoon, everyone. My name is Reed Blakemore. I'm the Director of Research and Programs for the Atlantic Council's Global Energy Center, and I'm pleased to kick off this panel this afternoon on the infrastructure backbone for energy security and regional energy cooperation. I think if we reflect on the conversations we've all had during day one of the Global Energy Forum this morning, I think we all can agree that energy security is the word of the day. I think the question we're asking ourselves is how we go about achieving that. And there's a number of words being thrown around, energy independence, et cetera. But the thing that sticks out in my mind is interdependence, right, isn't necessarily a bad thing. And in order to achieve that interdependence, we need infrastructure. We need energy connectivity to take electrons and molecules from point A to point B. And to facilitate that discussion, this is why I'm really glad to be hosting this panel today, because we have three speakers who each play a different role in establishing that connectivity, not just regionally, but on a global scale. So I'm honored to welcome Secretary General Jassim Al-Shirawi from the International Energy Forum, Deputy Director Thomas Hardy of the U.S. Trade and Development Agency, and Secretary General Osama Mubaraz of the East Mediterranean Gas Forum. Each of you represent absolutely critical institutions as we think about this idea of infrastructure, connectivity, et cetera. And so what I'd like to do to start is to turn to each of you and get your perspective, your reflection on what your organization's role is in establishing that connectivity, establishing that infrastructure. Deputy Director Hardy, I'll start with you.
Sure. Thank you very much, and thank you to the Atlantic Council for hosting this forum. I think this is a perfect opportunity, maybe not the best timing, but I think as we talk about dependence, interdependence, USTDA is focused more and more on energy infrastructure. As a U.S. government agency, I'm fortunate to lead an agency that is focused on that energy backbone. USTDA is the first mover on infrastructure development. We take the earliest risk capital. At the bottom of the capital stack, we have grant funding to finance early stage project preparation, whether that's feasibility study, pilot projects, design engineering, front-end engineering design. That risk capital that our partners in emerging markets need, that U.S. companies need to help de-risk their investments in emerging markets. As being the first mover, USTDA's looked to more and more. We've been doing this for 30 years and have a long history of supporting core infrastructure. I look, when we talk about interdependence, many, many years ago, we were one of the first ones involved in the Lithuania LNG import terminal in Klaipėda. Goes to the heart of interdependence. Lithuania saw what was coming down the pipeline, the challenge with Gazprom, and they turned to the U.S. and said, help us bring that infrastructure to bear that we can get new gas into the European market. The result of USTDA's grant capital, kind of that early risk capital, has led to U.S. LNG coming into Lithuania, but U.S. LNG across Europe, and now just as of a month or two ago, into Ukraine. And that is the heart of what USTDA is designed to do, which is take that early risk to speed in and crowd in both U.S. company, but also financing to make greater interdependence on energy infrastructure.
Secretary General, I'd like to ask you the same question. IEF is an impressive organization. You work globally with a lot of energy producers as well as consumers. How does IEF approach this issue of interconnectivity, infrastructure, and to pull off kind of a lot of the material that Deputy Director Hardy was saying, the idea of interdependence and collaboration?
Thank you. First, I would like to thank the Atlantic Council for giving us the opportunity to be here with you today. And congratulations on the 10th anniversary of the Global Energy Forum. And I'm pleased to be here with this distinguished panel. On the subject of energy security is no longer a question of just supply and infrastructure alone. It depends on how countries, markets, energy systems, infrastructure connects together. If we talk about my organization, the IEF, this year marks the 35th anniversary of establishment of the IEF. The IEF was established to provide a neutral and inclusive platform for dialogue between producers and consumers of energy. Our membership consists of nearly 70 countries. We represent both producers and consumers and transit nations, covering governments in the advanced and emerging economies industry. We have an industry advisory council that has more than 50 companies covering all forms of energy, because our mandate covers all forms of energy, is oil and gas, renewables, hydrogen, nuclear, all the forms of energy. Inclusive dialogue contributes to deepen understanding widen perspectives, and enhance channels of cooperation and ensure that energy received where it's needed, particularly in situations where we have geopolitical crisis and when we have energy market disruptions. Producers need stable demand, consumers need reliable supply, and transit nations need predictable flows. The role of organizations like the IEF is to help to understand those interconnections, clarify interdependencies, and provide the confidence and trust in order to encourage capital flows and investment into resilient infrastructure and diversification. So it's important that the organizations like the IEF focus on dialogue, and this dialogue can lead to turn exposure into shared understanding, and shared understanding into better decisions, and better decisions can lead to greater affordability and supply and energy security.
Starting with cooperation, building to dialogue. I think that's a critical part of the discussion. Secretary General Mubarak, EMGF is actively doing the combination of diplomacy, infrastructure, but very much focused on a part of the world where this infrastructure and this regional connectivity is absolutely necessary. How do you see these conversations around energy security, infrastructure connectivity, kind of shaping the way that EMGF is approaching your work?
Thank you, Reed. Thank you for the question, and also thank the Atlantic Council for the invitation. It's a privilege to be within this distinguished panel. And as you said, the EMGF is focusing on the East Med region and also focusing on gas. It is trying to do a similar job like the IIF, but with a smaller focus regionally and also a specific energy source. And I think the disruption in the global energy system currently have shown that energy security is not just about providing supplies. It's also about diversification of routes of supplies. And this definitely, when we talk about routes of supplies, this is infrastructure. And this is part of what we are trying to do at the EMGF. The East Mediterranean has a lot of gas discoveries and a potential to discover more gas. But one of the challenges is that there is not enough infrastructure to get this gas from production sites into markets. That's why the first thing that we are trying to do is to align with our producers, consumers, and transit countries is first to capitalize and use the existing infrastructure. And we have, I think, a very successful example between Cyprus and Egypt. Cyprus has gas discoveries that are not yet monetized. At the same time, Egypt has LNG facilities that can bring this Cypriot gas to markets. So the recent agreements between the two countries is an example of this in this regard. In addition to this, we're also trying to promote with our member countries and also our companies within the EMGF, how can we add the necessary pieces of infrastructure, either connecting the countries of the East Med, or also, especially within this disruption and the closure of the Strait of Hormuz, how can we provide optionalities to the Middle East producers, to the Gulf producers, and taking advantage of the East Mediterranean geographical location being some sort of a corridor between the Middle East and Africa. And this is definitely has to do with infrastructure.
So when we talk about infrastructure projects, infrastructure development, it feels like there is a wealth of opportunities in terms of the projects that we can identify and we can build out in order to establish the infrastructure needed to provide the energy security we're looking for. I guess, Deputy Director Hardy, I'd be interested in your perspective, and particularly USTDA's perspective of how do we actually identify the infrastructure projects that matter most? And how do you then, after identifying them, get them through to and through the project financing stage?
Thank you. I think there's two issues that I'd focus on first. I think President Trump has laid out a roadmap for USTDA. Through his executive orders, USTDA was specifically called out to support opening markets for gas infrastructure around the world. And we're doing that. We launched a global gas initiative with the U.S. Chamber of Commerce, with LNG allies, likewise with nuclear. The president was very clear that nuclear is going to be the future for energy development, and USTDA was specifically called out saying, USTDA, you get out and be in the front driver's seat of this effort. And I think, so that's on the administration side. I think on the congressional side, we're in a unique position. As an agency, Congress has incentivized USTDA to take risk, to take smart risk. As an agency, we're being asked to make that early risk capital investment on technology risk. We've got SMR investments in Romania and Bulgaria across the Indo-Pacific, investments that we know the technology is there. We know the U.S. investments going into the nuclear industry, and USTDA is being called upon to seed those markets. So when the technology is ready, the U.S. industry is well positioned. With that investment the USTDA is making, it's bringing along the Export-Import Bank. It's bringing along the Development Finance Corporation. When we first got into nuclear 5 years ago, DFC and XM didn't want to talk to us about nuclear. That was not where they were. Today, they're asking us more. Where are your investments? Where are you going? How do they make the How do they change their authorities to get greater cap to take those risky investments in nuclear, but critical investments for long-term economic development? So I think on the administration side, we're being driven by the president's executive orders. On the congressional side, they've given us a long lead to take smart risks on infrastructure development. And on I think what we were talking backstage is it's not just the big infrastructure. In this interdependent world, small economies, small island economies in particular, are hurting today. And we're working in the Pacific Island region. And Deputy Secretary Landau has been very, very active in the Pacific Island region and has come to us and said, help our partners in Tonga build out their gas storage capacity, their jet fuel capacity. And just this morning, they approved a project that we're going to be making that investment in Tonga to help them build their gas storage capabilities, but also looking at mooring capabilities, gas pipeline capabilities, so they can bring larger payloads into the economy and provide greater stability. And I think that goes to the heart of the interdependence that we're talking about today.
It's really about interdependence is going to require a level of additional risk tolerance, right? And where you make those bets does matter. It's the tricky business is how you go about making those bets. And when you're looking at some of the jurisdictions that you articulated, I think those are very almost geostrategic places to make those bets. Secretary General Ashrawi, I want to come back to you on this idea of cooperation and IEF's role as a place for dialogue. One of the challenges that I'm struck by with cooperation and dialogue at sometimes is you have individual national interests in terms of how they want to approach their own infrastructure, how they interpret their own energy security needs. And for example, that can vary based on different parts of the fuel mix that individual countries are interested in. I think that speaks to what you've articulated before as IEF taking a little bit of an all of the above approach, right? How does IEF build that dialogue to encompass the totality of options for energy security? And I think how do you do that in a way which supports additionality and actual complementary investment amongst your members?
Okay. I think, the organizations like the IEF need to clarify the interdependencies, need to make an assist in understanding the dependencies between the various energy systems. And also we have like three gaps that we need to fill. One is the connectivity gap where energy needs to move from where it's produced to where it is needed most, and it has to be reached securely and affordably. And the world needs more energy. So all forms of energy need to be available, need to be capital and investment in all forms of energy, and to build the connectivity between the systems, you need to have more pipelines, more storage, more interconnections, more grids. So investment in all these systems need to be made. The second gap, I believe, from the IEF perspectives, is the resilience gap. So we need to have the capacity to deal with disruptions of energy and to have a cushion to manage such disruptions. And this building additional storage, transit, diversified transit routes. You have to have strategic stocks. You have to have additional production capacity. All these things need to be provided. I think the third priority or gap is the confidence and trust in the system. And this is the role of the organization like us, by having dialogue and by having market and data transparency, where the market needs clear signals in order to move investment and in order to have stable policies, frameworks. And we do this on a number of aspects where we have dialogue between producers and consumers and industry. As I mentioned, we have the Industry Advisory Council. We have more than 50 companies in the energy spectrum that are involved in our Industry Advisory Council. And we meet regularly to have the dialogue between all the various stakeholders in the energy industry. And we have a trilateral program with the International Energy Agency, IEA, and OPEC, where we hold a number of events and meetings to discuss the issues that relates to the energy challenges. We also coordinate the Joint Organization Data Initiative. As I mentioned, data and market transparency is very important. JODI was established more than 20 years ago for JODI Oil, Joint Organization Data Initiative for oil, and for gas, natural gas, it's like 12 years ago. So it's providing a service to the energy industry in order to improve information and also build statistical capacity within the member countries. And we produce data for more than 110 countries for both oil and gas. And we are also considering expanding JODI to include other forms of energy as well. So by having all these events, and as well as the ministerial meetings that we hold every 2 years, where we have one of the biggest gathering of energy ministers in the world. Our next ministerial meeting is going to be held on October 11th this year in Riyadh, and the next one will be hopefully in Italy in 2028. So by cooperation can turn exposure into shared understanding, and shared understanding can turn into better decisions, and better decisions can lead to greater energy security, resilience, and affordability to various consumers.
I'm pretty sure that we should make attendance to the Global Energy Forum contingent upon whether or not each guest is an active user of JODI, because it's that good of a resource for everyone. Secretary General Mubarak, I think Secretary General Al-Sharawi articulated a number of kind of the infrastructure gaps that we see when we talk about regional interconnectivity, gaps in resilience, the need for pipelines, the need for storage, diversified transit, et cetera. Those are all features in almost what makes the Eastern Mediterranean an incredibly exciting place to talk about regional infrastructure, regional connectivity. Can you walk us through a bit further, those gaps in mind, what does make the East Med an interesting place, an exciting place to be talking about this? Because in some ways, yes, these are gaps, but they're also opportunities to strengthen that type of regional energy cooperation that I think we hope to see in the Eastern Mediterranean.
Definitely. I think the East Mediterranean has several advantages when we're talking about energy. First, there is a lot of gas discoveries with a potential to discover more gas, significant resources. Second, there is a lot of infrastructure that is existing and it already has LNG capacity. Third is that we have a huge footprint. The major IOCs are already operating there. We have the two biggest American companies, Chevron, Exxon, in addition to other European and other nationalities as well. And also the geography itself is definitely significant. East Mediterranean is brilliantly located, connecting Africa, Middle East, and Europe. So these are the features or the advantages. But again, geology and geography alone will not sort out everything. What we need to do is, as Jassim has been saying about the bringing not just dialogue, definitely dialogue is important, but bringing people and people's interests together. I think for a successful work to be done, it has to be win-win. And in this regard, we had our 10th ministerial meeting yesterday here in Washington, and it was hosted by the Department of Energy. And the ministers in the countries came together, again, recommitment of their collaboration and the value that they see of the East Mediterranean, not just for the East Med countries and people, but even the value proposition can go beyond this. It can be a valuable optionality to Europe, but also this connection, especially with the disruptions in the Strait of Hormuz, can sort out a lot of challenges that the Middle East and the Gulf states are facing. So again, it is win-win, but we need to go beyond the alignment of policies and the dialogue into real projects. And this is, I think, one of the key themes of today's panel.
The Secretary General mentioned the need for every project to be win-win at a level. And Deputy Director Hardy, I do think you mentioned the Tonga approval, which is fantastic. I think that speaks to a need to make sure we're thinking globally about what those win-wins are. But I'm struck by when we look at emerging markets in particular, those win-wins can be a little more challenging to come by. When we think about how USTDA is approaching those projects for the needs of emerging market consumers, how do you strategize scaling power generation? Because due to project risk, due to cost, those win-wins can be a little trickier to craft from time to time.
Sure. I mean, we meet our partners where they are. I mean, we're not going to get 1,000 megawatt power project in smaller markets, but the investments we make, as I said at the beginning, are smart investments. Even in Sierra Leone, I was fortunate to lead this agency during President Trump's first term, and one of the investments we made in Sierra Leone was for a 100 megawatt gas-fired power project. Again, not 1,000 megawatts, but 100 megawatts. DFCs come in to finance that. What is the win-win? You now have Sierra Leoneans power, reliable power. U.S. companies, I believe, sold $400 million worth of exports. That's what we talk about when we talk about win-win. It is how do we help our partners support long-term economic development, but do it in a way that is opening markets for the export of U.S. goods and services, and increasingly, obviously, gas itself, the molecules themselves. I think the work, I've met with Secretary General Barros on a number of occasions. USTDA works in emerging markets solely, but the work that the Eastern Med does is so important, as he was saying, into Europe, into the throughout the Middle East, into Africa. They're that interconnector, and it's the work that if the Eastern Med gas firm gets it right, that's going to be able to drive new investments in Africa, in Eastern Europe, in the Middle East, emerging markets in the Middle East, where we can make more investments. I think, and same with IEF, it's having these forums that can raise up the partners so they can they find areas where they can cooperate. I think the more that happens through those dialogues, the better it is for us to have those win-win projects on the back end that provide long-term power generation, economic stability, but also regional stability.
And then Secretary General Al-Sharawi, I want to come back to you on this idea of fostering cooperation, particularly amongst your members. Obviously, I mentioned at the outset of this conversation the preeminence of energy security has really taken root, and the way we talk about the urgency of energy security has grown in a positive direction, I think. But amongst your members, as you're facilitating dialogue, have you noticed a change amongst your members about how they talk about the role of infrastructure in providing that energy security? And how does IEF take that change in discussion and apply it into practice?
Well, I mean, when IEF was established, one of the main focus areas is energy security and also market and data transparency, as well as energy transitions or additions, as now is being termed. So we focus on those three areas, and these are inbuilt in our program of work. And we are flexible in terms to the priorities that our members, when they meet, whether it's the governments or the industry. So it varies on situations where the situation calls for energy security or data and sharing, and we try to focus into turning dialogue into more action and turn them into more meaningful outcomes that would help address the issues facing the energy industry. It's through the forums that we hold, the ministerial meetings, and through the trilateral program that we have with the IEA and OPEC, and through the JODI partner organizations. We always are flexible to be aligned with the market needs.
And then Secretary General Mubarak, one last question direct to you before I think we begin to wrap the conversation up a little bit, which is, we've talked a lot about gaps and risks and opportunities in this conversation. If you were going to summarize, as we look to optimize our cross-border infrastructure, particularly in the Eastern Mediterranean, in a way which provides shared value amongst the various parties, but also fundamentally advances the shared need for energy security, what are the key factors that you're noticing that are shaping that pursuit? How do we optimize? How do we actually make all of this work in a successful manner?
Yeah, I think the first element we already touched base on this about the win-win, the shared value, talking about shared infrastructure for shared prosperity. The second element is how can we support, again, between the governments and the private sector, how can we identify the projects and develop these projects, package them in a way that can attract investments. I've been personally working with Tom and his team for a long time. So I think to some extent we understand what would make a project fly from the perspective of investments and funding. This is very important, and to some extent this could be a gap in some of the regions. The second is, and I think the third element is, resources underground does not have value. It's only when you bring those resources to surface, develop them, get them to the market, then you create the value. And this value has to be shared. you have producers, you have consumers, you have transit countries, you have governments, and you have the private sector. So it goes back to the win-win issue. The last, I think, element is that you try to turn challenges into opportunities. The disruption, the energy disruptions now is definitely a huge challenge, regionally and globally. But what can we make of it? Each country, each region, how can we turn this into an opportunity that also sort out some of the problems to the others?
So the light is beginning to flash that we're running out of time slowly, but I want to do one last lightning round, and I'm going to go in reverse order this time, contrary to how we started. So a question right back to you, Secretary General. What are we missing in this conversation? I'm struck by, okay, we're spending a lot of time at this forum and in other conversations talking about, okay, energy security is the fundamental thing we need to pursue. And associated with energy security is infrastructure. How do we actually give that conversation more depth? What are we missing here on stage as we're having this conversation? What are our colleagues in this community here at the Global Energy Forum and beyond missing? What's the fundamental piece you think people need to take away in order to actually build the infrastructure needed to make energy security happen?
Well, I cannot say that we're missing, but if we're talking about this panel, I would have loved to get one of the operators, one of the investors who really do the infrastructure.
Mm-hmm.
So you have a funding agency or an IFI, you have an international organization for dialogue between producers and consumers, and you have another organization focusing more regionally and on gas. If we can also bring to this discussions or the broader topic about infrastructure, the private sector who really does their job. And I think these different aspects of the, let's say, of the picture would make it fly.
It all comes down to putting dollars in the ground and building
Exactly.
something ultimately. I think that's the right takeaway. Secretary General, from your perspective, what are we missing in this conversation to advance?
Well, I would agree with what my friend Mubaraz have just said, but also I would just like to add that energy is about people, and we must not lose sight of the human dimension. We often talk about barrels, megawatts, and other things that relates to the energy. They are all important, but we have to also consider that behind these we have households, we have workers, we have businesses, we have communities, we have national aspirations, and we all have to take care of those. And we have to look at what we do and ensure that we don't impact all those different concerns.
So we have financing and getting dollars in the ground to build something, not forgetting about the final consumer of energy as we have these conversations, because that's ultimately who we're trying to serve in this conversation. Deputy Director Hardy, what else are we missing in this?
It's interesting. I'm not sure I was missing, but I think something that we have to keep an eye on is the innovation that's taking place in the energy space. It's not just moving electrons. It's not just moving molecules. There is so much advancement in innovation, advancement in some of the investments we're making in deep borehole nuclear waste storage, things like that will transform the energy sector in the long term. I think keeping an eye on not just the basics, LNG terminals and so forth, but what is the next innovative step? We've got SMRs. We've got 3 different types of SMRs now. You've got microreactors. How do we keep a focus on what's next in the innovative space to make sure that our partners around the world understand what's coming down the pipe and are prepared to make those investments that will drive their economic growth in the long term?
So really not just only about what we need to build now, but what we might want to build and need to build well into the future in the tech stack. I think that's a great way to frame this. Well, gentlemen, thank you very much for joining us today. Thank you to the audience. Let's give them a round of applause. Thank you. Close.
Please welcome the chair of the next panel, the future of the USMCA, securing North America's energy edge. Please welcome energy and climate analyst of the Washington Post, Catherine Clay.
Great. Well, good afternoon. Good afternoon as our esteemed panel comes to join us on the stage. Welcome to all of you, and thank you for being with us for this session. You're really in for a treat. We have a rare opportunity here to speak with former government officials from each of the three North American countries, Canada, Mexico, and the United States. And through chatting in the back halls, they are able to speak their mind to some extent, still feeling some loyalties to the decorum of being officials, of course. But it does give us an opportunity, since they are speaking on their own personal capacities, to get a little bit past the talking points and to hear from the perspective of people in the know how these different countries are approaching questions about energy in the context of the USMCA. So the central question for our discussion today is really about whether North America and these three nations will be able to meet the moment. We are blessed in the continent, in each of the three countries, with enormous energy resources. And traditionally, we've had integrated markets. We have a lot going for us. The question is, in this increasingly fragmented world, can we work together, and what lies ahead with the USMCA? So I'd like to spend just a few moments introducing our panel, because we do just have such a wealth of information. I want you to really understand who you have the privilege of hearing from and learning from today. I know I'm very excited to learn from these three impressive individuals. And I'll start with Antonio Ortiz Mena. Antonio is president and CEO of AOM Advisors and a non-resident fellow of the Atlantic Council with its Latin American Center. And at his firm, he provides strategic counsel on geopolitics, trade, and foreign investments to clients across energy and manufacturing. From 2007 to 2015, he led economic affairs at the Embassy of Mexico right here in Washington, D.C. Great. So welcome. Thank you for being here.
Thank you.
Great. Next, we have Kimberly Breyer. She is former Assistant Secretary for the Bureau of Western Affairs at the U.S. Department of State. She brings more than 20 years of foreign policy experience and was previously the founder and director of the U.S.-Mexico Futures Initiative and Deputy Director of the Americas Program at the Center for Strategic and International Studies. She served at the White House in the National Security Council early in her career, holds an MA from Georgetown and a BA from Middlebury in Spanish, and has a daughter who's studying astrophysics. And then our third panelist is Jay Khosla. Welcome, Jay. Jay is the Executive Vice President for Strategy and Policy at Canada's Public Policy Forum. He has decades of experience as a senior public service leader, including 10 years as the Assistant Deputy Minister. All right, excellent. For the Government of Canada for energy. He is, in fact, one of Canada's leading experts in the energy sector, has worked with numerous cabinet ministers from Rick Perry to Ernie Moniz here in the US as part of his counterparts, and has also advised countless private sector and international stakeholders. And he holds a degree in history from the University of Ottawa and a master's degree in public administration from Dalhousie. So please join me in welcoming our panelists. Now, I'd like to start at 30,000 feet. We know that we're at a moment where global energy supply chains are, to put it mildly being reorganized. Countries are increasingly competing for investment for everything from manufacturing to critical minerals, energy infrastructure, and advanced technologies. So, as I mentioned previously, North America has abundant energy resources and has a tradition of integrated markets. And we're at this moment where we are taking another look at the USMCA framework. And the question, I think the larger question for our session overall is, can we meet the moment? And the question I'd like to start with and put to each of the panelists is this a strategic moment? And what I mean by that is, as we are looking at a review of USMCA, is this a different kind of conversation than just a standard trade negotiation? So, Antonio, what do you think?
I would say this really is a different moment, and let me give just a brief context. Going back to the original Canada-US FTA, late 80s, there was a proportionality clause, Article 904, which was no go for Mexico. Under Article 904 of the Canada-US FTA, it didn't mention Canada, but it was obvious that Canada was exporting oil to the US. Canada could not reduce oil exports to the US unless it reduced its domestic availability, proportionality, Mexico said that's a no-go. So extremely important for trade and security in the original one. Second, for Mexico, it was not only no-go for that, but no for oil exploration and exploitation. And I think that to a large extent, the exclusion of energy, except for secondary petrochemicals in NAFTA, is what allowed NAFTA to go through the Mexican Congress and the Mexican body politic. We kept it out. I would say it was partly out, but we said it's too important to keep it in. It must be out. Under USMCA, there was originally an energy chapter, but as negotiations proceeded and López Obrador won the presidency, the energy chapter turned into like a two-senses chapter, Chapter 8, saying Mexico's sovereign and everything relating to energy has to be consistent with the Mexican Constitution. I thought that every treaty or agreement had to be consistent with the Constitution. So for me, it means nothing. The Peña Nieto reforms were grandfathered, even though the president, López Obrador, insisted energy was out. No, it's in, completely in. Thinking about soccer, we can use the immediate repetition VAR. It's in. It's not out. It's in. Okay, now what happens going forward? I think that we will meet the moment, but maybe not when we need to, maybe a little bit slowly and a little bit late. And I'll just give 3 ideas. I'll shut up briefly. Why I think this is a different moment. Number one, 6 years ago, the geopolitical situation was fraught, but it is not what it is now. Right now, it is incredibly volatile and unstable, and the UN, the WTO, IMF are weaker now, I think, than they were 6 years ago, not to mention WHO, whatever. Number 2, the level of nationalism that we have now and protectionism is much higher than it was 6 years ago. And thirdly, I'm sure you've spent half the panel speaking about AI. We didn't use ChatGPT to analyze the USMCA originally, right? So it is a new world.
Wow, a lot to react to there. I'm going to turn to Jay next. And in particular, I know that some of the things that our colleague has alluded to, you've been advising your government about. So Jay, your thoughts?
Antonio's reminding me of some movies I've lived that I don't want to see the sequel to, namely the NAFTA provision. Not many people remember that. I think that's critical, like that NAFTA had that, and there was a huge debate on proportionality and provisionality. But we should be proud, though, at the end of the day, that we got somewhere with that. And I think those are building blocks, especially, and also the annex letter on, we call it CUSMA, you call it USMCA. I know Antonio has a different acronym for that, but that energy annex did have some provisions in it that are worth building on. And I think that's really what's important when we talk about going forward. The simple answer to your question in my mind first is absolutely this is a critical moment. It's a critical moment for a continent. Like if you just look at our trading relationships, we're one of the biggest trading blocks in the world, if not the largest when you think about the 3 nations. And the question is not whether we're doing well in this space. Like if you look at the markets, if you look at the supply chains, they're doing what they need to do, and they're integrating, and they continue to integrate. But if you look at the policies and the strategies that are being pursued by the three governments at this moment in time, unfortunately, they're headed in different directions. So the policy is not, in my mind, keeping pace with the actuality of what's really happening out there. And at the end of the day, I think as a policy person, I think it's important for us to educate folks. And so I just want to run a set of ticker tape of stats that I think are critical for anybody who's thinking through this stuff, because the data speaks for itself, right? Like, we're enabled by Infrastructure Canada, US. We have 70 to 80 pipelines across our borders, 30 transmission lines. In the US, and I didn't hear too much of this today, and it kind of disappointed me, but you know, a lot of talk about energy abundance and energy sovereignty and energy security. Not one mention of Canada is playing a key role in that. 66% of US oil imports come from Canada. Like 20% of your system on oil runs because of Connect Canada. And we are integrated the other way as well. You export, most of our oil imports come from the US. That's terrific, right? It means things are working the way they should. 99% of your imports of natural gas come from Canada. Electricity, 100% of Canada's electricity exports go to the US. We power the island of Manhattan. That's important to know that. Uranium, 50% of Canada's uranium exports go to the United States. That supplies 1/3 of your uranium needs. And our nuclear supply chains are integrated. That SMR play, small modular reactors, is a Westinghouse Canada US play in Canada. And it's critical. And then, if that wasn't enough, 50%, 57% of your critical minerals come from Canada. So what more do we need? And I'm not going to leave Antonio out of this, okay? Because Mexico knows very well that Canadian multinational and super majors are working in the oil sector there. I can talk about TC Energy till the cows come home. I've been down there many, many times on various pipeline issues. But what you may not know is that 70% of Mexico's mining activity is run by Canadian corporations. So, and I could give you the reverse stats the other way. Texas supplying Mexican gas, but at the end of the day, we are integrated. And the question is not about whether that's a good thing. The question is, are we maximizing that advantage? And can we collectively develop a North American energy security strategy? And we've tried, but it hasn't. But as long as these tariff actions continue and these, I would call sort of short-sighted debates on whether integration is a good thing, we won't get there. And that's the moment that will be squandered, because when you look at the bigger picture in the Strait of Hormuz, and I'm sorry to keep going on, but I'm pretty passionate about this. When you look at the bigger, just imagine if we were further integrated, if we had Keystone XL, like if we had Keystone XL, we should be thinking that way. We should not be thinking the other way. And the antidote would be to look at CUSMA and get that energy chapter back to the, if we could do the World Cup very well as a trilateral, which we're doing, why can't we do that kind of stuff? So using your soccer analogy. So that would be my starting point.
That's fantastic. Kim, so let's hear your thoughts and share some of the U.S. perspective.
Thank you, and I appreciate, and thanks to the Atlantic Council for this, inviting us to this amazing event, and happy to be here with my fellow panelists. And I regret to inform you that I'm in violent agreement with both my Mexican and Canadian colleagues, and with the overall view. I think we are suffering from abundance, and I think we need to take a step back from the day-to-day debate about North America and appreciate what it is that we have. If you look today in the newspaper and any on social media, all you see is discussion of sovereignty and areas where we disagree, and the uncertainty of the review and the regulatory changes in Mexico that have caused uncertainty. All of that is true, but when you step back and look at it, I think we have to be realistic about the fact that we've built something pretty special here in North America with these three countries. We are extremely fortunate to have neighbors like Canada and Mexico and the United States, and I think we need to appreciate that from afar. And if you don't want to take my word for it, I asked AI what it thought of the USMCA review, and I asked it to be funny. And the response that I got was that the three countries are in a relationship, and they've decided to have a conversation about whether they should see other continents. And the answer is, of course, we should not see other continents. We should focus on the good things that we have here. And I would just add on the review, I understand that the USMCA review is generating quite a bit of uncertainty for the many corporations that I see in the audience here. But with that said, I would submit that having lived in Washington and under the several decades of NAFTA, not having a review also generated uncertainty. And so I think we need to appreciate that we have a mechanism. Our three governments are following it. There is a vibrant dialogue going on about things. AI didn't exist even when we wrote the USMCA, as Antonio pointed out. I think it's actually a very valuable process, and even if we don't get it done by July 1st, it seems that we may not be quite there by July 1st. My hope is that the dialogue will continue, the meetings will continue, and we will get there and we'll be able to have, at the end of the day, a modernized, updated agreement that reflects the fact that the world has changed. Do I think we're in a different moment? Yes, absolutely a different moment. And for me, the overlay that changes this conversation is it's a national security overlay. And I think it got emphasized by obviously competition with China, but it also got really driven home here in DC by COVID and the shortages of supplies and pharmaceuticals and PPE and all of the things that happened during the pandemic that we as three countries, I think, dealt with reasonably well once we got going. We had Mexico looking for a vaccine, the United States looking for PPE. I mean, everyone was going around the world looking for inputs that we didn't have. And I think that's a wake-up call. And I think that is the different framing now, that this is a conversation. Yes, it's about trade, and we're going to have professional negotiators arguing about rules of origin and what level of this or that. But ultimately, it also has a national security overlay now, which I think is I wouldn't say it's entirely new, but it's a much more prominent overlay to the conversation.
I really appreciate the optimism of bringing in the analogy to COVID times and collaboration with the World Cup and the potential for the three nations to work together. And I want to get back to the China question that you brought up, Kim. But before I do, and I completely agree that national security is such an important overlay, and potentially that is the overlay that is most appealing to this administration. But before we do, I'd like to return to just the issue of costs and competitiveness. And if you were just explaining to normal Canadian, Mexican, American citizens, what's in it for them? If the countries can work together, what's to the benefit for the ordinary citizens of the three countries? What do you think, Jay?
Well, I think I'd go from 30,000 to 3,000 feet very quickly, but 30,000 feet, there's nothing like energy security. I mean, what have we been talking about here all day? And last year and the year before that, I've been lucky to be here many, many times, and that's the dream, because energy provides it is the source of everything, right? I mean, air, water, land, energy, right? That's what we have, and if we can maximize our advantage in all these various spheres, look out! Like you can create new supply chains, new orders of business. We've been talking a lot about AI. I do agree with all the commentators who've talked about the fact that we are in a race. We are. And you can't turn a blind eye to that. But imagine if the three nations got together and said, wait a second, we're not going to let China dominate it. Imagine if we got strategic and had some plans and some frameworks to use all of these resources, whether it be nuclear, whether it be gas, whether it be et cetera, like an all of the above strategy, to link it all up and make sure that we've got the labor connected to all of that. I think that's a big part of this, that we do not, and we're even short on types of skills, right? If we had that connective tissue, we would maximize this advantage. And I think then you create better economies of scale, you create regional economies, et cetera. I mean, we are in Canada right now actually moving away from that. And it kind of makes little sense to us because it's been, since our history, 200 odd years, this is what we've been doing. We don't do east-west. But right now, we have government policies that basically say, okay, tariff actions are actually damaging our economy. And I'm sorry to say, but that's a fact. And what do you do about that? You have to diversify away. It is the AI analogy. We are trying to date other continents. They may not be the continents that we always want to do, to put a ring on it with, okay? But at the end of the day, like, it's forcing us to do that. Yeah. We are building infrastructure to go to Asia massively. We're looking at the EU. big trading partner. We're trying to maximize all of our trade agreements. We have more trade agreements than we've ever had in our history. And that is unfortunate because the one trade agreement that has always mattered is this one. And so why we're doing that? Because our economy is imperiled. It shouldn't be that way. We could do much better by integrating. So we have a two-pronged strategy, not to, like, we'll never get away from the US-Mexico dynamic. That'll never happen. But there is definitely a two-pronged strategy that says, A, we're going to diversify our markets as fast as we can. B, we're going to get investment into a country much more than we've had in the last decade. And unfortunately, we haven't been building as much as we should have. And C, we're going to get our big projects going quickly. But we're not talking the ones that perhaps we should be talking north-south. Yeah.
Well, that's very powerful. And, Jay, part of what I took from your comments is that energy security is connected to energy affordability, that security means access to affordable energy. And I wonder, Antonio, do you see it the same way? Do you see that connection between the affordability issue and the national security issue?
Absolutely. For example, for those of us who spend all day too long reading about the USMCA and playing inside baseball, whatever, we forget that if we achieve the best USMCA review possible, in my view, that would be zero tariffs for every good that complies with the rules of origin and very low levels of uncertainty regarding US unilateral actions. Yes, I'm mentioning, national security trade restrictions or Section 301 for that matter. We have to cut down the level of uncertainty. But that being said, if we achieve that and we don't have enough energy that is reliable, clean, and competitively priced, what good is having that agreement? For example, if we are going to produce in the region a lot of goods that we import from China now, we will need more energy. If we are going to take advantage of the AI revolutions, we will need many more data centers and ideally redundant data centers, Canada, US, Mexico, the US. We need energy. Mexico and the U.S., I think in past February, signed a bilateral agreement on critical minerals, right? So Mexico has some assets. Does Mexico have enough energy to exploit those minerals where those minerals are? I'm not sure. So you can sign that agreement. If you don't have the energy, you cannot exploit it. If you don't have Canada refining, you have the minerals, but you can't refine. So I'd say if you think about production of goods, production of services, trade in goods and trade in services, and everybody is a producer and a consumer, you need energy. If you don't get this right, nothing else matter. It's so obvious that people sometimes forget about it. The rule of origin 82 or 80%. Like, who cares? If you don't resolve this, it's irrelevant.
Yeah. I had a question specifically prepared for China, and I'm really struck that all three of you have just organically gone to the China question. And Kim, maybe we can build on that. You've heard your co-panelists refer to the imperative. How do you see it? How do you see the USMCA? How much of it is a reaction to China?
I think a lot of the discussion has that as an underlying. I mean, you hear discussion now of whether there should be an investment screening mechanism in Mexico like CFIUS in the United States. You hear discussion of North American content or U.S. content or the rules of origin. All of those things, I think, go back to the competition with China. And again, I asked AI what it thought of North American supply chains, and I asked it to be funny. And its response was the North American supply chains are like a game of Jenga being played by overly optimistic economists. One ship from Taiwan doesn't show up and the whole thing falls down. So this is what AI is telling us about where we are. It's a very precarious game of Jenga. So I think what the trade negotiators have a very difficult job because they're trying to balance American jobs, the inputs we need, the affordability agenda, which is obviously very important. We want to be able to make things efficiently so we can sell them to American consumers at prices that are affordable. At the same time, there is this national security overlay, and that is, in the rationale of the administration, the tariffs are a way to bring some of that production home that we let move overseas over time. Now, home to me as now a non-government official means in North America. I am perfectly happy buying steel and aluminum from Canada and Mexico as long as it's not being transshipped from somebody else. But I think, I hope that we're going to get there. The truth is, I'm guessing we're going to get to some sort of new status quo with USMCA, and there will still be some lingering tariffs alongside, precisely because of this national security concern that we need to be making our own products here at home. So that's the sort of balancing act. And I will say, I don't want to be overly optimistic about it, but I also am not pessimistic in the sense that we've had a list with Mexico of how many, 54 things, 54 and growing number of issues on the table. And I think the teams have been very quickly sort of ticking them off and moving through the various issues. And, if this were a moment where we were not going to have a USMCA, I think you would have seen it already. So I think we're going to get there. I don't know what it looks like, but I think we're going to get there precisely because the national security overlay also dictates that it be so. If we want to compete with China, we have to do this. We have to figure out a way to do this. We may not do it perfectly. We may not maximize it, but I think that there is an understanding that the three of us, the three countries, are better when we're together and when we're aligned.
That was really powerful, Kim. And I want to follow up on one thing you just said, because I think it's such an insider observation that other people that hadn't been close to the process wouldn't be able to share. And that is that you just shared that you felt that if it were going to fail, it would have failed already. So can you tell us a little bit about what would you have expected failure to look like? If it were going to not cross the finish line, what would have happened by now?
Well, I think I was a little bit worried, I'll be honest, and I've said this in public, I was a little bit worried about Canada until recently. But now Canada and the official conversations have come. And this is, by the way, not dissimilar from how it happened last time. The US and Mexico were intensely debating the finer points of trade policy, and Canada stood and waited until the US and Mexico sort of got through some of the issues that we needed to get through, and Canada came in later. So I wasn't overly alarmed. But I had said to a publication in Canada that if I hadn't seen a meeting with Canada by June, then I was going to start really worrying, because we were coming up on the July 1 deadline. And obviously now we've also seen Canada and Mexico profess that they want to stay within the continent and that they want to stay with the trade agreement. And so, I think the will is there. And if the administration here in the U.S. had fully decided that it didn't want to have some kind of arrangement in North America, I think that probably would have manifested already. And just given the timing, and people are spending, the Antonio knows this better than anyone. These trade negotiations are extremely detailed and in the weeds, and people are spending an enormous amount of time and energy trying to get through these long lists of everything from digital trade to rules of origin and automotives and all things that are way beyond my capacity. So when you look at that investment, it's pretty clear to me that we're gonna end up with some sort of framework in the end, and I hope it's a trilateral one. I think it's trilateral. I hope it is.
Jay, you had her worried. She thought you were seeing one of the other continents, I think.
I think there's some irony in saying that Canada is causing worry in this space, but
It's fair.
and I'm also really happy to hear that you're hopeful. That matters a lot. Canadians are really attuned to this conversation. It is like bread and butter for us. Our country is going through a complete reshaping for the first time, and the Prime Minister would argue, since its inception, about where we go, and it's because of this conversation. And I do remember the last round because I was involved. And I know our negotiators would not say that they sat on the sidelines. It was a very different experience in Canada. We learned a lot. We learned not to take anything for granted. And I think this time around, this whole conversation was preempted by tariff actions. And that is something that's super serious for us. Like our steel industry, I love to hear you say that. I love that. We are one of the biggest suppliers of steel to the US of any nation, and yet our steel laborers are getting out of work because of this. Our aluminum factories are going down. This is not fun and games. So it's great that we'll get an agreement, but I do think it's not okay to have the lowest common denominator agreement. And I do think right now that set of negotiations is really being used as a proxy war for specific sectors. And I think I want to be hopeful. I was there when we signed the North American Energy MOU. I believe Rick Perry was the Secretary of Energy at the time, Jim Carr, who's a liberal in Canada, and Pedro Joaquin Coldwell in Mexico. And we were going to work hard across lines to make sure we integrated far more, and that is where we should be, not saying dairy's a problem. And the other thing I would say is, you know, we have a lot of work to do. People don't know this, but the first thing we did back then, this is only 2017-18, that realm, we created data maps. We don't even have joint data maps here in the continent, sort of articulating where the pipelines flow north-south, where the transmission lines flow north-south, et cetera, et cetera. Rail, you wouldn't believe how much rail conveyance. When we started to look at that with Melanie Kenderdine in the Department of Energy, the maps that she created it was shocking. It was almost like we created a pipeline through rail. So these are the areas that we should be promoting and advancing. And honestly, the Mexican government, SENAR, I worked very closely with them. They wanted to create renewable supply chains. They wanted to start to understand from Canada how we did hydro. That is where we need to be. So as far as CUSMA goes, at least for energy, mining, and critical minerals, they should be exempt. Just exempt. There should be a chapter in there in my mind. And I wanted it the last time. I would fight hard for it again if I was still around. The main point is, and anything else that creates wealth in this trading block should be exempt. Now, luckily, you're right. Most things are still exempt, so we're okay. But let's not go downwards. Let's go upwards. Yeah.
Well, that's really well said, Jay. And I really appreciate you pushing back and my lightheartedness about Canada having us worried, because you're so right. I mean, there's a huge context there that there are very good reasons why Canada may have thought very deeply about whether to engage. So really well taken. And I really also appreciate the ticker tape, I think you called it, of data about just how connected we are. And one part that caught my ear in particular was a very well-made point about uranium, and you just mentioned critical minerals. So I'd love to go there next. So clearly, I think that everyone believes that we have an opportunity to build supply chains in critical minerals as a broad class, as a concept. But I would love to get your thoughts as experts. Is there a particular critical mineral or minerals that you are especially worried about that we could get this wrong?
Oh yeah. I don't know if you guys want to start but I think you know where I'll go on this one.
Yeah. Why don't you kick us off, Jay?
Well, just look at China's dominating the market. Cobalt, lithium. Just look at the stats on that. I have them here on paper, but forget it. It's enormous, and we're sitting here watching it happen. And I call it the OPECing of critical minerals. That's literally what's happening, except for it's monopolistic. Okay, it's one nation that is kind of owning the market, and the rest of us are sitting around because we're market-oriented systems, watching it. It's been recognized by the G7. We've signed a pact there to try and solve that problem. We have all of the resources we need, and again, we can't put those building blocks together. But it's not that hard in my mind. We're talking about project-based activity. Like, that's where we should go on all of this. Like, where are the mines across this region? What do they look like? Which ones do we want to promote? I think it's the Department of National Defense that has invested in 2 Canadian mines, critical minerals mines, early early exploration. That's a very positive sign. But at the end of the day, we have to get our value added going in this continent, and we don't have it. It's a smelting question. And to get technical, that's what it is. It's a processing question. We're not even close to that, you know. And meanwhile, China is going gangbusters in that space, and so we in Canada export a lot there. And does that make sense geopolitically? And shouldn't there be a premium on this geopolitically, in the continent? But again, I kind of wonder from a CUSMA angle, where's that conversation, right?
Yeah. And how about, Antonio, from the Mexican perspective, or your own expert perspective, are there particular critical minerals that you in particular stay awake at night worrying about how we're going to get our act together as a continent?
There's one, lithium. Mexico has lithium in the northwest, state of Sonora, among other regions. And the previous government decided it would, take full control of lithium lithium reserves and production. They have it Lithiumex. And the end result is that we have the lithium underground, and it'll be safely underground for many decades unless we change a policy. So I think we have to be much more realistic. Yes, focus on sovereignty. Yes, I'm nationalist as anyone else. I'll be rooting for El Tri, which is the Mexican team, and the soccer competition. But I think we have to be super sharp, super smart. Do we want foreign investment there? I would say yes. The question is from whom? For example, from our friends the Canadians or the US have maybe joint investment. Canada has refining capacity. So for me, the number one question is actually lithium. And that's symbolic because of what happened during the previous government with Lithium-X. Now, let me take one step back. When I think about trade and investment and negotiations, I see countries like Korea or Japan that are energy dependent or food dependent, or that they have an old demographics. In North America, we're basically food self-sufficient. We have food security. We have critical minerals and refining capacity. We have demographic complementarity, and we are basically energy self-sufficient across the matrix. So other countries are trying to achieve what we don't have. And in North America, the table is set. We have everything there, and we are bumbling. Honestly, when there's geopolitical stability, AI revolution, everything is set. I'm frustrated and optimistic at the same time.
That seems very fair. Yes. Kim, how about you? Are there particular critical minerals that you worry more about than others?
I mean, I've sort of all of the above. What comes to my mind is copper, which Mexico also has an abundant supply, and so do we here in the United States. And it's very difficult here, as it is in Mexico, to actually get that out of the ground and then to process it. And as Jay was mentioning, the processing and smelting is really the area where I think the Chinese have monopolized, and we need to do better. I fully agree with Antonio. The table is set, everything's there. The fact that we have a bilateral critical minerals framework between the United States and Mexico now is wonderful, but why isn't Canada in it? And clearly that's just something that we should be in addition to the USMCA conversation. It matters a lot less to me whether it's in the USMCA or whether it's adjacent to the USMCA or whether it's an annex to the USMCA or whether it's a side letter to the USMCA. Whatever the mechanism, there should be a trilateral critical minerals agreement. I mean, we have the best miners in the world in Canada, some of the most prominent companies, deeply invested in Mexico, as Jay pointed out, and in the United States. And here we are having a bilateral conversation that should be a trilateral conversation. So I think we have to dare to go there. And I would say the same on energy. I'll be a little bit critical of the previous administration here in the U.S., and not for political reasons, but because we had pretty fundamental changes going on in both the energy and mining sectors in Mexico, and the U.S. sort of punted and kept kicking the can down the road rather than having the discussion. Mexico has the sovereign right to change its constitution, to change its laws, to do whatever it likes to do. But at the end of the day, if it impacts the agreements that we have, the USMCA agreement, I think we should have had a conversation about it at the time. I think they did eventually sort of get to the point where we were having the conversation, but very late in the previous administration. And I think we need to take advantage now of this moment with USMCA and put all of that on the table. Energy needs to be on the table, critical minerals need to be on the table, and we need to figure out whatever the mechanisms are, whatever works in the real world, given the different political differences that we have among the three governments, that whatever the mechanism, we need to have some kind of mechanism for trilateral coordination on these things. And I'll just throw out a couple of pieces of data, and you can correct me if I'm wrong, but on the Mexican side, I've spent a lot of time on it, and I've had a hard time understanding sort of the sovereignty piece of it. And I understand that it's about hydrocarbons and the way Chapter 8 was concluded during the previous negotiation. But at the same time, Mexico imports 70% of its natural gas and 70% of its refined fuels. To fund to drive the electrical grid and the Mexican economy. So we're already integrated. So why not have a conversation about it that respects Mexican sovereignty but recognizes the reality that we live in? And that's the part. I mean, I've studied this for many years, and I'm obviously aware of the history. But I just think we've got to get to the point where we can have that conversation where people feel comfortable having that conversation. And unfortunately, it's been very hard.
I just one quick point because I really love what you said. So the question becomes, what does that framework look like, and what's incorporated in it? And Antonio, I really liked your point about demographics. I always think about that because Mexico is much younger than the other two nations. We've got aging pop in Canada, where I think our average age is 40 or 41 now. That's kind of a thing. So what would you do in this area? Well, we've got the resource base in Canada. You'd acknowledge that. What do you have in the US? You have the investment and the technology and the capital. And what do you have? You have the ability to process all this stuff potentially. That's what an integrated framework could look like. And how hard can that be, for nations that are so like-minded and have been for a long time?
Well, I can't think of a better closing word for this. I think you all three have made such an amazing case for the strength of the three nations working together. And Antonio, as you've said, the table is set. You've all made your case for this being a critical moment. I know that all of you are in the position to advise. And so I think everyone in the audience will agree with me that we hope that the officials in Ottawa and Washington and Mexico City listen to what you have to say. So please join me in thanking our panelists. Go Canada.
To chair the next leadership conversation, Integrated and Indispensable North America's Energy Advantage, please welcome Vice President, Policy and Insights, TC Energy, and Distinguished Fellow, Global Energy Center, Atlantic Council, Dr. Julia Neshwat.
Getting towards the end of the day, but save the best for last is what I like to say. Well, good afternoon, everyone. It's a pleasure to be here. As we kick this off, we're going to be talking more to follow up on this fantastic USMCA panel on the North American advantage. And I can't place any heavier emphasis when I say advantage and opportunities, which is tremendous. So the topic we'll talk about or get into a little bit is more on and it touched a little bit before, on integration and being indispensable when it comes to where we are today. As you heard, my name is Julia Neshwat. I'm a fellow with the Atlantic Council, but I'm also Vice President for Policy and Insights with TC Energy. TC Energy is Calgary-based. We work all the way across North America, from Canada, the United States, and Mexico. So with that, I'm joined here today on stage by Mr. Corey Hogan. Corey, you were elected to the Canadian Parliament, Member of Parliament for Calgary Confederation just last spring, if I'm not mistaken.
That's right.
And in addition to that, I think you're dual-hatted. You've also just been, in addition to being elected, appointed Parliament Secretary to the Minister of Energy and Natural Resources. So you are, I'm sure, quite busy these days with that additional hat. And if I'm not mistaken, is this your first visit to Washington as Parliament Secretary?
It is. I used to come to this city a lot in a past life. I used to be a consultant in the energy space, and actually one of my clients was API way back in the day. Yeah, but so I know the city well. I love the city, but this is the first time I've been here in 10 years, and some things are very different and some things are very the same. And it's wonderful to be back.
Excellent. It's great to have you here today. And just for those who may not understand or know, Corey, you play such, I'd say, the most significant time with what's happening today, with a key role when it comes to advancing
Canada and even overall North America, I'd say energy policies, but in particular drawing both the private sector and industry as well as bridging government and communities today. Also, obviously representing your district or riding, if you will, in one of North America's, I'd say, most dynamic energy regions when it comes to Alberta. And again, just bringing that, I'd say, unique perspective, if anything, on how do we integrate North American energy markets that can certainly drive that economic prosperity as well as energy security, which we heard a little bit about earlier. So let's just jump into the questions, if I may, and let's see. Goodness, I mean, there's so much to cover in a little bit of time. Let me see, where's the clock? All right, we're good. We're good to go there. But let's begin with the goal, I'd say, of Canada as an energy superpower. How would you define that? What does that mean in practice, if anything? And how would one make that a reality, given your role?
Yeah, so when we ran in the last election under Prime Minister Mark Carney, one of the things he talked about was making Canada an energy superpower, both in conventional and renewable. But in many ways, that was a bit of a shift back to saying, yes, it will take all kinds of energy in order for us to address the challenges of the 21st century. And what does that mean? I mean, underneath our feet, in Canada, we have the fourth largest reserves of oil. We have we're the fifth largest producer of natural gas. We've got 1.4 quadrillion cubic feet of natural gas that's economically recoverable at $2 per MCF. And that's to say nothing of our power in nuclear. That's to say nothing of our strength in solar, in wind, hydro. My goodness, I can't believe that's the end of the list. That is actually our original energy superpower. And it's capitalizing on all of those and creating the environment to capitalize on all of those. So the Prime Minister's been really clear, and he's set with us a direction to make it easier to unlock that opportunity that exists in Canada. And of course, we want to do that for Canadian reasons. I almost said selfish reasons, but Canadian reasons. We want to make sure we're supporting our citizens. But there's also an immense opportunity to think about this on a continental scale. And, there's a lot of back and forth and thinking about the times we're in, and obviously between Canada and the U.S., sometimes it, can feel a little strange rhetorically, but of course you are our closest neighbors, and our prosperity is shared, and our continent is shared, and we're stuck with each other either way, and I think that's great because we've been wonderful neighbors to each other over the years.
Absolutely. Well, has then, I'd say, public opinion in Canada changed then over the past year or so when it comes to energy development?
That gets asked a lot, and it even gets kind of asserted a lot that it has changed. But I'll actually tell you, as somebody who's worked in the energy sector and as a deputy minister in Alberta, which is like the energy producing jurisdiction of Canada, and as somebody who also was at a research university, I was vice president at a research university where we looked at these issues a lot. Shout out to the University of Calgary, a really great university for energy research. It hasn't actually changed that much. If you polled going back 15 years, I see my colleague from Parliament, Shannon Stubbs, nodding vigorously. Canadians have always supported energy development, but there had become a bit of a leadership consensus that wasn't the case. Canadians have actually been pretty consistent on this. They want energy development. They want it done right. Absolutely, no question. They want to make sure that we're moving forward on our climate goals, our environmental goals more broadly. They want to make sure it's done to high labor standards. But the sector also believes that too, and the industry believes that, and that exists. And what I think we're doing is we're unlocking a sentiment that has maybe been a little bit more dormant in Canadian politics over the past 10 years, but is back. It's kind of that pragmatic, middle-of-the-road approach that we Canadians, we like to at least try to live to. We don't always, but we try to.
No, that's a great point. Sometimes the messaging gets lost in some of the weeds, if you will, when it comes to those dynamics. But now more than ever, as we see what's happening in the world today, geopolitically in particular, that development and that infrastructure is needed now more than ever again. So that being said, as we heard even in the previous panel and now, I mean, with Canada and U.S. border, more energy flows there than almost anywhere in the world. Our systems are the most deeply integrated globally. So as we look across the globe, again, hearing all these various panels, we've got conflicts. There's geopolitical competition that continues. How do you see the strategic importance, I would say, of this energy integration, especially speaking today with what's happening, and in particular, can we do anything more on infrastructure?
Sure. So listen, as a supplier, like if you're a country or if you're a company, you're thinking about markets. We are so fortunate to have not just the supply, but the world's largest, wealthiest market next door. I mean, that is an incredible advantage for any supplier, and that's an opportunity Canadians would be not well served to pass up. Now, there's no question we have, over the decades, become almost overly reliant on that customer. I'll also say, in no industry of the world would you want 90% of your product going to one customer. So Canada is absolutely looking to diversify and make sure we have access to global markets in different ways. But this is not an or conversation, this is an and conversation. And we certainly have the capacity with all of those resources I was talking about, all of that natural gas, all of that oil, all of that hydropower, all of that nuclear, to walk and chew gum. We can do multiple. And I think that, well, Canadians don't want to go back to the way it was. We are willing and interested in going forward in productive ways. And one of the ways we can be very productive is in sharing each other's goals on energy and making sure that we can be energy sufficient together and both prosper from that. Certainly, we talk about AI booms, but it's not just AI booms. If you care about climate action, one of the best things you can do is you can electrify. You can electrify industries that were not previously electrified. So that's going to take a certain amount of natural gas. That's going to take hydro. That's going to take nuclear. And there's lots of opportunity there for us to push forward on. And certainly, given the nature of our continent and its north-south integrations, I mean, there's a lot of mountain ranges that are otherwise splitting us, tons of opportunity. Canada is the largest supplier of the United States of oil. 63% of the oil you import comes from Canada. And I think that's funny because sometimes in a conference like this, you can almost forget that. You hear Venezuela, you hear Saudi Arabia, you hear a lot of countries, and yes, they're large producers too. But nobody provides more than Canada. But to your point earlier, nobody provides more to Canada than the United States. We have a deeply integrated sector, and working together will serve us both.
Absolutely. And I think you hit the nail on the head when you talked about energy diversification, both from a supply and source standpoint. I mean, there's so many lessons learned when you think transatlantically with Russia and Europe and so forth, hard lessons learned, but to be able to do that here in North America is critical. Let me turn a little bit to Ottawa, if I may. There's been a big push out of Ottawa to speed up major project approvals in Canada. What reforms or policy approaches is your government pursuing to try to improve that regulatory efficiency?
Well, let's start with where we started, and I'll tell you what we have planned over the next couple of months. One of the first bills that we brought in as a new parliament was a bill to create a major projects office and to create powers that would allow us to approach major projects in what I would argue is a much more rational way. And so if you think about how we have historically approached regulation in Canada, let's just call it for fun, 4 different departments, but it could be far more than 4. So you get your fisheries approval, then you get your environment and climate change approval, and then maybe your transportation approval, so on and so forth. And that happens sequentially in almost a waterfall fashion. And that made it slow. And God help you if something happened on step 4 that kicked you back to step 1. It also meant you were engaging with stakeholders at step 1, 2, 3, and 4, and there was stakeholder fatigue as well, especially and being very mindful of our First Nations partners. We're being asked to consult a lot on what were fundamentally the same issues. So what we decided made sense as step 1 of, I want to make sure I don't shortchange step 2, is okay, well, let's say if it's a major project, acknowledging major projects everywhere, globally, no matter where you are, whether it's Canada, the United States, anywhere, often involve a lot of government intervention in terms of assisting with either public financing or just pointing people towards the right financing, helping with regulations, all that. We'll stand up a major project office. We'll create this power to allow all of those consultations, all of that to happen under one department. Everybody can feed into it and they can happen concurrently rather than sequentially, and we'll get things done faster. Now, there's an obvious flaw with this, which is government then has to determine which projects are major and which ones run faster, right? So as part of the work, the Prime Minister then also said to the Major Project Office, I want you to tell me what needs to happen to make the overall regulatory environment better, faster, stronger. And they've come back with their first thoughts on that. We released a discussion paper just a couple of weeks ago. It's not legislation yet. We want to hear what people think. But ultimately, what it comes down to is we want to take an approval process that was running 2 to 5 years optimistically, often much longer with those various approvals, and get it down to 1. And in that 1, we want to make sure that we are doing the kind of political analysis, that what we call a governor and council approval, the various things that are more, well, let's call it ephemeral, but or tactical, or whatever you want to call it, that will now happen at the start of the process, first quarter. And then within a year, you will get your approval, and then you go. And we just want to fundamentally change how long it takes you to get something built in Canada. And that work will be ongoing, and there's our first thoughts on it that will turn into legislation in the fall. What that is, we'll have to wait until we get actually to the fall, because of course engagement, consultation having very specific legal considerations, engagement will occur over the summer. But it's our intention to be the fastest in the OECD. We want you to be able to build faster in Canada than anywhere else.
I think the U.S. can certainly relate to that. It takes us quite a bit of time just to get these projects going, and because of the regulatory barriers and all the red tape to get through. I mean, it's astonishing. China can build up an energy plant in 2 to 3 years, and in the United States can take over a decade. So to see Canada try to do something similar to cut some of that red tape and reform when it comes to those barriers.
Yeah, and I just want to be clear, like our biggest concerns are pancaking of regulations, pancaking of jurisdictions. This is like zero cost reforms from like a regulatory, safety, environmental point of view. We can do the same things better and faster. And there are just practical ways we can approach things when we've said, okay, this is in our interest, how do we do it, not whether we do it. And that is the big mindset change that we are trying to push throughout the government and frankly throughout Canadian society.
Well, let's hone in on a particular project. Just a year ago, Canada had its first LNG shipment from the LNG Canada facility on the West Coast, which is a direct route to Asia, which, as we all know, is certainly needed now more than ever. And as I understand, the government has recently reevaluated its stance on the production and export of liquefied natural gas, LNG. So has Canada found a new role on LNG? I mean, especially as it relates to energy security?
I think so. And I think it goes back to the word that we try to define our government with, which is practical, right? That we talked about electrification being an opportunity for climate action. You can maybe trade 50 million tons of emissions in energy to save 400 million in industrial sectors. That's a good trade for the planet. Those are the kinds of practical conversations we want to have. So when you talk about LNG, I think that there is certainly appreciation that it is an opportunity to provide both energy security and provide a bridge to kind of more sustainable futures as well. Like one of the projects that was recently approved, and it was approved very quickly, was Silissums, which is a project in northern BC. Now, it's still waiting FID. There are still some pieces there. But it will produce natural gas, LNG, I should say, at 94% less carbon intensity than the standard. That's incredible. And when you start talking about the opportunities that provides across a number of different avenues, that's great. It's also fairly close to Asia. And so there's an opportunity to, and this is a common thread, Canada and the United States working together, but also Canada individually. We can provide energy security, and we can provide it not just on this continent, but in other continents too.
I mean, Canada on the West Coast and the U.S. on the East Coast, and see where that goes, right? Tag team.
Well, the nature of the markets is there's swaps that are available. There's ways we can move product. But also, we want to make sure that there are opportunities across the board. And oil and gas is something I'm a Calgarian. I'm going to naturally just fall into that space. But to be clear, it's not just that. It's also hydro. It's also nuclear. We're a tier 1 nuclear nation. We have a number of nuclear technologies and by the way, very integrated nuclear industries.
Actually, that was my next question.
Oh, geez,
was
I'm
on
getting ahead of
nuclear
myself.
supply chain, because we share that very closely. And I didn't realize until recently, Bruce Power is the largest operating nuclear power plant in the world at the moment, and that's in Ontario.
Yeah, and we just did some refurbishments at another plant, and all of them came in under cost, under budget, and under time too. And we are kind of cracking that chestnut in a way. But yes, we have some significant opportunities there, and the integration of nuclear in particular. Like there's Canadian ownership of American companies, American ownership of Canadian companies. We're all sharing research. We're all working together. We have uranium. Obviously, America needs uranium. Like the opportunities there are immense.
Well, I see that we have about 2 minutes left on the clock. Real quickly, I know it's been touched on a little bit here and there, but we can't have an energy panel without talking about AI. So how is the Canada government looking at AI today?
Well, we just released an AI strategy. I mean, one of the things that I think we've all seen, and certainly it's kind of been the subtext of a number of panels, is there are some backlashes to AI, and those backlashes are based on things, sometimes misinformation, sometimes things we can entirely control. Fundamental truth is it is one of those technologies that the productivity gains are so enormous, the opportunity is so enormous. It's not just ChatGPT, it's the way it can help in healthcare, it's the way it can help modernize so many different industries. It is with us. So the question becomes, how do we enable it in ways where we can all benefit and prosper? And I don't want to repeat the great comments of a number of panelists that have talked about how AI can actually help support an electricity sector, which I 100% agree with, because it provides, some base demand that allows some modernization of systems. But beyond that, we also have the opportunity through AI, if we do it thoughtfully and right, to make sure that all of us can prosper and the benefit can be broadly shared. And that's something that's really a big piece of our strategy. But the subtext is it will take energy. And natural gas is an obvious source for that. And you see previous comments about 1.4 quadrillion cubic feet. So I think that Canada has a place to play in that. I think that there's a role. And I think that there's a huge opportunity for North America if we work collectively.
And just geographically, I mean, with the need of data centers and the cooling aspect of it, what better natural place than Canada, which has some natural cooling
Naturally
systems?
cold.
Naturally cold, exactly. Makes a lot of sense.
Yeah.
Well, besides energy these days, another topic right now is North American soccer. Any predictions? I know Canada has a game this Friday.
Yeah, we do, and I feel like I'd be a poser if I said I had any opinions about it. I'm not like the biggest soccer fan. I'm pretty excited about the Knicks. That's pretty cool. Yeah, there you go. Yeah, actually, I'm a long-suffering Washington Wizards fan. I'm probably a little older than I look. I'm 44, and in the early '80s, mid '80s, late '80s, somewhere in the '80s, the Washington then Bullets had the tallest and the shortest player in the NBA on their team at the same time. And 8-year-old me thought that was awesome. And so, unfortunately, I hitched my start of this wagon. It has been really tough to be a Wizards fan over that time. But yeah, I'm very excited that we're in the NBA Finals. See how I just pivoted to something else on that? There you go.
No, it's great. It's great. Well, please, everyone, let's give a warm thank you and an applaud to Corey Hogan.
Well, thank you very much. It's a pleasure talking to you.
To continue the conversation, integrated and indispensable North America's energy advantage, please welcome back to the stage Vice President, Policy and Insights of TC Energy and Distinguished Fellow Global Energy Center of the Atlantic Council, Dr. Julia Neshwat.
All right, thank you, everyone. Now I really mean it. We're saving the best for last here when it comes to this panel this afternoon. So again, thank you for joining here at the Atlantic Council on this important discussion when it comes to North American energy. As many of you know, and as we heard from the past couple panels, North America certainly stands at such a pivotal moment, if you will, as we certainly possess some of the most abundant and diverse energy resources today, both conventional and unconventional when it comes to world-class talent across the United States, Canada, and Mexico. So I do want to continue on this theme when it comes to integration as well as being indispensable for North America's energy advantage. So as we were just sort of discussing here with Mr. Hogan, North America, again, with all these amazing advantages, world-class operators, deep capital markets, but that advantage is not automatic, right? It depends on whether we can really move across those energy borders. We talked about building infrastructure. How do we maintain that reliable policy framework, deploy that technology, and deliver affordable energy at home, while, of course, supporting our allies abroad? So I am absolutely pleased to be joined by two leaders operating at the heart of the system. We have Clay Gasper, CEO of Devon Energy, a major U.S. shale operator, and Brendan McCracken, President and CEO of Ovintiv, one of the largest producers of oil and natural gas in North America, with a focused portfolio in the United States and Canada. So let's just jump into it here. Round one. Well, let's talk a little bit more about, I'd say, defining that North American energy advantage. So I'll divert this question to both of you, as far as sharing, first of all, a little bit about your companies and maybe touch on what exactly is that North American energy advantage. And maybe we'll start with Brandon.
Sure. Yeah, pleased to be here. Look, the North American advantage, I think, sits on a foundation of a blessing of resource. I think it's been well covered already today, so I won't go over that again. But that blessing is then amplified by a highly competitive industry. And I'm so pleased to be here with my good friend Clay, who is also one of our competitors, and we'll compete fiercely on the playing field here, and that fuels a real engine of innovation that has driven a really creative approach to identifying and then producing those resources and delivering the independent North America that we have today. So Ovintiv's history, actually, origin story dates back into Canada. Today we're an American company, but the origin story dates back over 140 years to the Canadian Pacific Railroad. And as the railroad was being built across Western Canada, they were drilling for water as they went. And they accidentally discovered natural gas, which was really the first natural gas discovery in Canada, was trying to drill for water. And so that abundant resource made itself available to us very early on. Fast forward to today, we have a portfolio in West Texas in the Permian and in a play called the Montney in Canada. We produce around 600,000 barrels a day, focused on medium oil in West Texas and light oil in Western Canada.
Excellent. And Clay.
Yeah, so I love this industry. I'm dedicated to energy my entire career. And I think one thing unique about our industry is just what Brandon was talking about, this competitive yet collegial relationship. We're in each other's wells, we co-invest, we do research projects together. There's a lot of partnership along with that competition that I think it just makes us all so much better. Devon's story originates about 55 years ago. A young 55.
That's right. Yeah.
But we started in a very small play in northwest New Mexico, and our journey's taken us kind of around the world and back. Today we are in 6 different basins around the United States, and we entirely focus on horizontal drilling in resource plays, shale wells, very tight, hard to produce wells that we believe we've got a great expertise. When we think about the future of energy, there's no doubt about it. North America has tremendous continued resource, but we also think about the opportunities that are around the globe and exploiting some of these same opportunities, these hard to kind of crack the code opportunities that I think the U.S. and the Canadian companies have a significant amount of experience, and we'll be able to export that over time and help our friends and neighbors around the globe exploit those resources as well.
Fantastic. I have to say, while the political will is there, both United States and Canada, it's having that momentum and building that in this exciting time, and it can't be done if you don't have the private sector pushing that through with that on the ground experience. So it really does matter quite a bit. Let's now turn maybe to you, Brandon, first. When it comes to integrated flows and tariffs and just the whole U.S.-Canada system, which we touched on earlier, one of the most, I'd say, tangible examples of North American integration is that actual physical flow of energy between both countries, whether it's Canadian gas, it's crude, it's condensate, it's natural gas liquids, refined products, as well as like electricity, all move across the border every day. And you certainly see that in your business every day. So what would you say, especially with this last year and a half has, as it told us about integration, maybe are there any examples? I mean, is there a vulnerability when it comes to those systems overall?
Yeah, if you think about the integrated energy system between Canada and the United States, it's the most integrated market in the whole world. It's worth, on the energy side alone, about $150 billion a year. The headline level, of course, is the U.S. is energy independent. And I think we heard from Mr. Hogan before this. There's actually a lot of swapping and trading that's happening underneath the hood to kind of make that top line claim work, and a lot of that is coming from Canada. The U.S. imports about 40% of its oil every day. It also exports an equivalent volume of oil and product, but most of that imported oil is coming from Canada. A lot of that Canadian oil is bitumen. We don't produce any bitumen. We're light oil producers in Canada. But that bitumen product is blended with light oil that comes from the Gulf Coast and round trips its way back to the U.S. Midwest and Gulf Coast refineries. On natural gas, roughly 10% of U.S. natural gas consumption every day comes from Canada, largely in the Pacific Northwest and California. And then again on electricity, a lot of that electricity is round tripping itself either from hydro projects in Canada South or from gas generated power in Washington State going north. And so the integrated system as it stands today is a marvel of the modern world. Nowhere else in the world do two countries cooperate in that way. And while that's amazing and terrific, it does have some vulnerabilities. And one of the things that we're watching closely is the USMCA renegotiation that's up this summer to be revisited, and those early conversations have begun. And energy today is exempt from tariffs. So all the headline tariffs that you hear about in the U.S. and retaliatory in Canada have exempted energy, which is very important and critical that continue, and really critical that they ultimately get resolved in the renegotiation of the trade agreement.
Excellent. And Clay, following on that, I'm glad you mentioned USMCA a little bit there. From a U.S. producer perspective, how should we think about the Canadian-U.S. energy as we tend to think about competition, but really as complementary to each other, if anything, as opposed to a competing source of supply. So how would you see that as complementary?
Well, I think Brendan said it very well, that when we think about that literal blending of the barrels, I think that's kind of the most obvious and necessary interaction. When we think about the way our refineries are configured and the type of oil that they really relish, are built around Venezuelan crude and some other heavier crudes. And now in the U.S., most of the oil that we produce is actually a very light, intermediate to West Texas light type crude. So that blending really helps both products get to the right market and therefore get refined into products that we can more beneficially use.
Then, and I don't mean to put words in your mouth, is it safe to say that North America is stronger when we treat energy security as more of a continental system, not just a domestic production?
Yeah, I'll go with stronger. I like
Stronger?
that.
Okay. Very good. Very good. All right. Well, let's turn to more about supply outlook and capital discipline. I'll start with you again, Brandon. Ovintiv has effectively really I'd say, concentrated, as you noted earlier, on Montney, but also the Permian. How do you think about where North American shale is in its development cycle? And as operators certainly move from the very best rock into more varied inventory, what matters most for their production?
Yeah, I think it's a really important question. It's probably the single most important question before or on. It was the question that the industry's really been wrestling with for the last, call it 3-4 years, is where are we at in the maturity cycle of shale? And the punchline answer, I'll give away the answer before I kind of explain it a bit, is I think we're in the 7th inning. But because of strong companies like Devon and Ovintiv, we're replaying the 7th. We seem to be able to kind of get back and replay the top of the 7th every couple of years here. And so if I back up and explain what I mean by that for a moment, if you look at the long arc of the oil and gas industry, 100 plus years, there's always been a play type that's dominated, a play type that's been the low cost winner globally. It's been the place where growth has come from. And for the last 20 plus years, that's been shale. It's been North American shale has been that dominant player. And that's actually, if you look back through that arc of history, an abnormally long period of time to be in the dominant seat. If we walk back even just through the last few decades, the 80s were really the decade of Alaska. And I know in the other room we had the governor. Alaska's getting a renaissance, which is awesome, but production in Alaska peaked at the end of the 80s. 90s was the former Soviet Union countries becoming available to Western technology and innovation and drove a big spike of production from those resources. And then the 2000s was really the advent of deep water. The Gulf of America switched on, North Sea switched on, and those plays peaked towards the end of the 2000s. And then really after that, it's been shale. And so we're into this phase here now where it's getting a little long in the tooth. But really this innovation capability is what's driving the future. And so, our two companies that are at the forefront of this, I always like to say, if you're like a high school baseball player, you want to know, can I hit a major league curve? I think it's the congressional baseball game tomorrow, so members of Congress are gonna duel it out. They're probably not gonna see a major league curve in the baseball game tomorrow, but that's the test, the standard, right? Well, I think if you're an oil company today, you want to try and play in the Permian. That's the equivalent of finding out, can I hit a major league curve or not? And our two companies lead in the Permian there. And so this innovation capability is going to allow North America to continue to be at the forefront of the global energy dynamic, but we need some help, right? So we can do as much as we can on the innovation side. The big challenge is we need to be able to get our products to market efficiently. And the pieces that we need in place to do that are permitting reform. It's a big issue actually in both countries. It's an issue Congress is grappling with today. And it's also an issue I think you heard from Mr. Hogan earlier that Canada is grappling with as well. And we also need to not have tariffs. These artificial barriers to our energy products reaching market are going to be the catalyst that cause shale to come off of that front end of the curve, and we don't want that. So I think that's the way to think about where shale's at today.
Great point on the permitting reform. In fact, we ran out of time. I wanted to ask Mr. Hogan, just like the U.S. created an energy dominance council, but maybe Canada might think of something similar like that could help bypass or expedite some of these permits overall.
They've got a major projects office. Just I'll answer for Mr. Hogan.
Thank you.
Yeah, they've created which we love. But we're also fans of, then taking the principles and values that the Major Projects Office is delivering and permanently putting those into legislative policy going forward.
Excellent. Well, Clay, I just wondered if you share the same views as it sounds like you do with Brandon, in particular with Devon emerging from the Coterra merger with more scale and I guess a broader multi-basin portfolio, if you will. What does that allow you to do that maybe you couldn't do before?
Well, I think scale is important, and I agree. I think the high strokes of the evolution that we were just talking about, I think is exactly right. And I had the pleasure of living through some of those waves. But I also think about, the old adage, the best place to find oil is where you found oil before. And I think about a place like the Permian Basin, where in the 1960s it was having a heyday. And it was done about the 1970s or so. We kind of rolled over. And then back in the 80s again, there was a little bit of a wave and kind of a falling off. First time I worked the Permian was in the late 90s, and this was a old, very tired oil fields that felt a rejuvenation around water floods. And so you're taking these old primary fields and re-injecting water back into the rock and sweeping it. The initial recovery factors were 15% or so on this primary recovery. There was a mechanism to go recover maybe another 10%. And then the innovation continued from there, and CO2 entered the play. And you now are injecting CO2. And again, grabbing the oil molecules from this rock and stripping it from this rock and getting another 5-10%, kind of rejuvenating these amazing, semi-tired, but truly amazing fields. What we had to leave behind were all of these shales in between these sandstones and big porous rocks. Somewhere along the way, brilliant people in our industry figured out, how do you extract the oil from these shales? And that's really the early 2000s and teens and what we're benefiting from today. But what we haven't figured out quite yet, at least from an economic standpoint, is how do we apply some of those same technologies, these enhanced oil recoveries? How do we re-enter these fields? We estimate that we recover about 10% of the oil in any given resource play, plus or minus. Think about the recovery. If you've already invested in the land, invested in the infrastructure, you may even have wells that you can re-enter. You've certainly got all the facilities and all of the surface equipment to go re-inject CO2, natural gas, even solvents, surfactants. We're trying a lot of these opportunities to go wring out a little bit more from this amazing rock. And you think about the most amazing basin we both work is in the Permian, and you think about just driving that recovery factor a little bit more. We have smart people working on these things every day, showing really good promise. And I would say promise on the technology front. Some of those are actually showing promise on the economic front, but that gets me really excited about kind of what's next in this space. Now, above and beyond that, there are resources around the world that I think have real opportunity to benefit from the experience that we've been using over the last couple of decades here. And that also gets me pretty excited about what's next for energy.
Absolutely. It is very much an exciting time. If I could just shift real quickly so I can make sure we're still good on time here. Maybe we can talk a little bit about market access and maybe a little bit on infrastructure bottlenecks. So the Montney, as you noted earlier, is one of North America's most important gas and liquids resources, but Canada has historically faced maybe some constraints along the way getting that energy to the global markets, as you noted. So we talked about this earlier, but what really needs to happen for Western Canadian gas to play, I'd say maybe a larger role for LNG, energy security, and even allied supply?
Yeah. So we built a really successful and valuable business in Canada by focusing on the only premium energy product in Canada, which is condensate, which is a very light oil. And it's a premium product because it's used to blend with the bitumen to get the bitumen to market. Now, the byproduct we produce in Canada is natural gas. And so my joke with my CFO, and he hates it when I say it like this, is we produce a lot of gas. We produce 2 BCF a day of gas in the 2 worst gas markets in the world, West Texas and Western Canada. And so fortunately, our commercial people are much more smart and talented than Corey and I are, and they've found a way to diversify our sales away from those 2 basins. But today, just as an example, I looked at the prices on the screen this morning, so they're a little dated, hours dated. We're going to sell 2 BCF a day. I'm going to sell some of it at global LNG prices, which is awesome. So that's $19 a unit. We're going to sell a bunch of it at NYMEX price, which is a little over $3 today. We're going to sell a little bit of it for my sins in Western Canada at $1.25. And then I'm going to sell a little bit of it again in West Texas for -$3. That is insane. That is bad for my shareholders, but it is even worse for our two countries. That type of arbitrage is not a healthy market, and it only exists because we've been terrible, and this is actually a shared challenge, both sides of the border. We've been terrible at building linear infrastructure. And so that's why the earlier comments around permitting reform, but it's really a recognition that these are jobs, this is capital investment, this is GDP growth that's really going out the door. I mean, the World Cup's going to start, I think, this weekend. So if I steal a soccer term, this is an own goal, right? We did this to ourselves. The good news is we have the resource. So we have the power to undo this and reset the economic setup and be able to capture that GDP in our two economies instead of letting it leak away. And so this is something we're really passionate about, and the gas is just one example of that. That's happening really on all products across North America.
It's a great point on the condensates. I mean, most people don't really understand how important that is to integrate that with our North American energy system. So, Clay, and then you have Devon's expanded portfolio as well that includes major U.S. Oil and gas basins. That's Delaware, Marcellus. So, how do you see U.S. shale gas fitting into the next phase of LNG growth, and as well as power demand and also allied energy security?
Yeah, so the merger we just did, you mentioned earlier, was with Coterra. And so Coterra brought Marcellus, which is one of the best U.S. Gas production areas, to the portfolio, along with a really complementary asset in our crown jewel assets, or their crown jewel assets in the Delaware side of the Permian Basin. Very different markets. And so in the Marcellus, Northeast U.S. desperately needs more gas. It's a very cyclical market, though. It's still hard to build that infrastructure, supply the desperate need, even when it's one state over sometimes. We need to get better at that. I completely agree. When I look to West Texas in the Permian Basin, it's really it's disappointing. And I think about the incredible resources we have there, and then the desperate needs for natural gas around the planets. You know, the only disconnect is the infrastructure. And so making sure that we have the ability to get it to the coast, turn it into liquefied natural gas, and then ship it to the needs around the planet are things that we need to work on. I think in Devon's view, one of the things that we really are focused on is when we see one of these critical needs, if you can see it ahead of others, a lot of times you can either own the constraint or you can optimize or build around that. We've been very aggressive in the midstream space to really partner up and really unlock that. But I can tell you, it's a real challenge. You know, it is not something you snap your fingers and unlock the potential on.
Is there something domestically that can be done, in your opinion, that could help with these constraints?
Well, it starts just with the permitting reform. And so the ability for us to put pipe in the ground when there is more pipe than there is roads on the on the surface. Sure. There are that many pipes underground, but we still act like it's the first time we've ever done this. It's an amazing opportunity for us to connect the dot from this world-class resource to the Gulf Coast, and then get serious about LNG construction and exporting. And that puts us in an incredible position as a country to help peers and friends around the world.
And as I asked Corey Hogan in the last session, we can't have an energy panel without talking about AI. So I'd like to get a feel for how your companies respectively are putting AI to use when it comes to enhancing your operations.
Yeah, we're pursuing 4 different channels of AI utilization in the company. The first one is safety. So working safely is an important value at our company, and this technology has a lot of potential to transform how we work, and in particular has a lot of utility around safe work. One of the places we're most excited about the technology today is it helps really challenge human bias. And we're all subject to this, whether that's like an overconfidence bias. The technology can really come in and help identify hazards that as humans we just grow numb to. And so we're excited about deploying it there. The second category is the one you hear about in every magazine article and online blog post, which is the digital labor piece of this. We're engaged there, but if you take my people costs are something like 5% of total revenue. So compare that to many other industries that are maybe 50, 60, 70% people cost in their margin structure. It's just, we're going to work on it, but it's not going to be a strategic transformation on the digital labor side of things. The third category is the one that we're really excited about from a business performance and earnings potential perspective. We call that complex problems. So Clay talked about, hey, how do we wring more oil out of this incredible rock that, as good as it is, we're only getting like 10% of the oil out of it. That's a complex problem that AI is going to be really powerful in helping us solve, and is already powerful today. Another example in that space, we run all our drilling rigs today on AI. I call them the world's largest industrial robots. So they're making decisions. The AI model is queuing decisions. We still got a human in the loop, but they're queuing decisions every day and setting records, routinely setting records based on the performance of the technology. The fourth category is on cyber defense, which is one where you just need to be in the game there because the bad guys are. So those are the 4 ways we're using AI today at Ovintiv.
On the third one, could that help then expand the shale runway?
100%. I think it's already happening. I mentioned the AI controlled robots that are the drilling rigs, but we're doing the same on our frac spreads. And it's really hard when you drill a well. It's really hard to make the well more productive by drilling it better. It's really a cost game on drilling. But on completions, it's both a cost game and a productivity and recovery game. And so all of our completions are done with real-time AI queuing that is driving not only the cost down, but is also helping enhance our recovery up. And we make the highest productivity oil wells on the Midland side of the basin. Clay's on the Delaware, so it's okay. We're not going to have a fight.
Central Basin platform
Yeah,
sits right
separates
here.
us up. Yeah, it's like 2 brothers, and Dad's got the arm keeping them apart in the back seat. Yeah, I think a lot of that has been driven by the innovation over the last few years, and in no small part by our efforts around AI.
No, and I know, Clay, you've spoken publicly about how AI is something that can really transform how an operator uses data, makes decisions, and as well as improve performances also. So where is AI most real today inside an upstream company?
Well, I'm watch out because we could go really long on this section. I love this stuff.
I think we've got
I think
minutes.
I think what's really interesting about AI is a challenge and an opportunity. And I think, we're energy providers. So the big thing that AI needs is energy. And so how do we provide more energy? I really think AI is part of the solution. When I rewind back, November of 22, ChatGPT came out. Soon after that, we're really pushing the organization. How do we leverage this? How do we use this? Before we probably had a real good feel of the risks involved. Circa May of 23, we stood up our first chat DVN. And so this was a fully firewall protected inside system where we unleashed all of the data and started training everyone in the organization on how to access this data. And we started this kind of first wave. And so this is probably how most of us use large language models today. It's accessing the data more fluidly in more real time than we've ever had before. We had this philosophy that our engineers were probably using 70% of their day, 75% of their day finding data, and 25% actually analyzing the data. The first goal was flip-flopping that. We need 25% searching, 75% actually using, and you're tripling the productivity of these incredibly valuable folks. That's kind of wave one. We've updated ChatDVN a couple of times now, state of the art. What we're doing and leveraging a lot on is what we call wave two, where you think about these complex tasks that we do, multiple people in the loop on figuring out how do we do this. And some of these things are either, these tasks can be redundant or they can be very complex in data sourcing, calculating, and critical pieces. How do you speed that process up? Now, today, we have AI that's part of the team. AI is an integral part of that flow. We're calling that kind of wave two. And what we're working towards, we have a couple of teams that are there now, is wave three, where you actually have full autonomy inside of AI. We have artificial lift optimization going on in the wells right now that these very complex real-time calculations are happening 24/7. We have over 850 wells fully autonomously operated by AI, with ambitions of all of our wells headed that way. It's an amazing value creation opportunity, because one of the things that we see, it's you get the big cost up front, you're getting that initial production rate, you're thinking about the marketing and the infrastructure and all that build out, but sometimes that later life, the 2-year, 5-year, 10-year well isn't getting as much attention. By doing this real-time 24/7 babysitting, we're seeing a real significant uplift for minimal cost that has a very material bottom line impact. So really excited about AI and kind of where it goes from here.
I think we've got, let's see, one minute.
Flashing.
We're flashing. Okay. Okay. Well, last quick lightning round, both of you. What is the most pressing need for North America to fully realize its energy advantage?
I mean, I think it's if we're continuing on in the spirit of the conversation, we're going to do our part on innovation to drive our ability to get that next, percent of recovery factor out of these wells, and we need the open playing field to allow investment to flow into those projects, and that includes connecting resources to market, but it also includes making sure we can continue to work cooperatively across the border.
Yeah, along those lines, innovation, investment hates uncertainty. And what we can do to take out some of that uncertainty really unleashes innovation and unleashes the investment. We've got the resource, we've got the capable people, just unleash them to deliver the energy that we need and allies around the world need. I think is an amazing opportunity for us.
Fantastic. Well, thank you both very much. Let's give a round of applause for our panelists.
This concludes the first day of the Atlantic Council's 10th Global Energy Forum. The sessions will resume tomorrow morning at 9 a.m. on the energy stage. Thank you for attending, and a good evening to you all.
Treat me like you do, but you do.